So very good morning everyone. So in the last class regarding the financial management, we started with the area called as capital structure theories. First let us complete that area called as capital structure theories. Once that is completed, then we go into the balance of the capital budgeting also in the today's session and complete them. Okay. With that, the 4 important chapters out of 7 chapters will be completed. Then next session we will do another 2. Okay. So one chapter whichever is left out, that I will put it on the YouTube directly. Remaining whatever the maximum amount of syllabus that we can complete today, let us complete. Today 100% we will complete capital structure and capital budgeting. Once that is completed, tomorrow we will complete small chapters like leverages one we complete and working capital we will take up. Listening? So once these are completed, the substantial 7 practical chapters, the 6 we will be completing in the 4 days revision session as well. Clear? So let us continue. Please open the textbook, Capital Structure Theories. Everyone please open the textbook, Capital Structure Theories. Shall we continue? Okay. See here. So listen. First, before we start, let me give you overview of this particular topic one last time. Once completed, we will go into the working part. See here. In this particular chapter, capital structure theories, allotted time is 2 hours from now. Without a break, 2 hours from now, if you spend time, you will complete all the capital structure theories area. Okay. So let us start one by one. There are totally 4 important theories: net income approach, net operating income approach, traditional approach, and Modigliani Miller. These are the 4 kinds of models that we need to cover. In this yesterday's class we discussed about this. Now we need to understand this, and this. This is very easy, 1 minute concept. The most important, time taking and exam 7 marks and 8 marks questions will come from Modigliani and Miller. Okay. Primary arbitrage and secondary arbitrage concepts will be there. That we need to be very careful enough because very important and very difficult as well. So let's see here. First one. There are 4 formulae in this particular chapter. First one, V equal to B plus S. Next one, B equal to I by KD. S equal to EBIT minus I whole divided by KE. V equal to EBIT divided by KO. These are all the 4 formulae that was given. Next issue. Second very important thing. Net income, net operating income. Let me explain the net income approach thesis first. This is propounded by a person called as a Durand. As per Durand, what he wanted to tell is, yesterday we already proved that companies having higher debt in their capital structure will have a lower KO. Because of having a lower KO, they will have a high value. Companies having lower debt will have higher KO. Because of that, they will have a lower value. Because of this reason, KO is a discounting factor. Value of an asset and discounting factor will be always inversely proportional to each other. Because of that reason, whenever KO started increasing, the value will start falling. KO started decreasing, value will start increasing. This is all we already said through numbers also in the last class. 3 different situations we have taken and we proved that, if you are remembering that. Okay. Now, next one is what? Net operating income approach. Which one? Net operating income approach. Net operating income approach says like this. Before we start with net operating income approach, let me put you before one concept called as a balance sheet of risk. See the screen. Generally we will see till now in your life, normal balance sheet you might have seen. Means what? Having assets, liabilities, everything we can see. There is another kind of finance balance sheet which is also called as a risk balance sheet. Which balance sheet? Risk balance sheet. That is very important. CA final, it will come in an area called as a portfolio theories and asset pricing models. A 25 marks chapter in CA final. In that chapter, there is one concept called as a levered and unlevered beta. There we will be learning about the real model of how the risk of a company will look like. Just I wanted to put that before you for 5 minutes, such that at least till examinations you will never forget net operating income approach concept. See the screen. This concept is called as risk balance sheet. What is a risk balance sheet? See here. Yesterday also I told you or not, I didn't remember. In law I said this because of charges chapter. AFM I didn't tell. Sir, I will give you one example, try to understand. Whenever a company has to perform, company will perform if the assets perform well. If the assets perform well, because sales are generated not by themselves, sales are generated by the assets of the company. If assets of the company are performing well, sales are performing well. If assets are not performing well, sale is not happening in that company. Did you get my point or not? So the simple strategy is, company is said to be performing well if the company assets are performing well. If the company assets are not performing, sales does not perform well. See here. Whenever there is a turbulence in the market, means there is a downfall in the market all of a sudden, it will affect our company or not? It depends on the nature of your company. I will give you one example. My company is in Hindustan Unilever, which sells FMCG product. Please everyone listen carefully, I am not telling any story to you. Point number 1. COVID time and 2020 March time. There is a huge recession in the market because no one is coming out to buy anything. Correct or not? At that time, Hindustan Unilever market did not go down. Am I clear? Tata Motors came down. Real estate market came down. Automobile sector came down. But FMCG sector is standing like that only without any increase or even decrease. Did you get my point or not? Reason, the company is in essential commodity. Company is in. I will ask you one question. COVID is there. Okay? COVID is there. Work is not there. People are sitting at home. Clear? Now tell me, there is a lockdown. You can't go outside. Is there any need for buying any automobile? Buying any car, bike, etc. Is there any point of buying during that time? Why we will not buy? Sorry, I will buy car. By some or other means with my contacts I will buy. What you will do? Anyway you can't go out. Will anyone buy? Therefore, automobile sector was badly affected during COVID time. The most affected industry in the entire world because of COVID is 2 things. Number 1, petroleum. Number 1, petroleum. Number 2, automobile sector. These 2 were badly affected during the COVID time. Why petroleum? Flights didn't fly. So substantial oil consumption, domestic consumption of civil aviation, etc. are consumed by number 1, civil aviation departments. Listening or not? And flights. Second, who will use petrol more? You and me. Like that, India, there are 140 crore population. Technically, 20-25 crore population are using vehicles every day. These many people sat at home in that much of petroleum and crude petroleum oil is ideally found in India or not? Those all reasons of all these things made the markets to go extremely bad during the COVID time. Listening? Reason shall I tell you? Petroleum, natural gas, or when it comes to the concept of real estate, automobiles, all these are non-essential commodities. Means what? These are not essential for my livelihood. These are essential for smooth working of my livelihood. That's all. Bike is not required for me to live. Car is not required for me to live. Flight is not required for me to live. I will not die if all those things are not there. And we proved that we can live even without that. Clear or not? I will not live if basic essentials are not available. Correct or not? That's why companies in the essential segment will survive even there is a market fall. Companies in a discretionary industry, companies in a will get badly affected during recession in the market. Are you understanding the point or not? That means, answer my question. Let us say one example. Air India is there. Which one? Air India. Flights, civil aviation company. Air India is there. Now tell me, Air India affected during COVID time or not? Answer. What is the asset for Air India? They will work or will not work? And assets are under work or not under work? Because of what? COVID is a person condition, market condition. Market condition, I can't bring that. Market, there is a COVID. That means impact of COVID is there in the market. Because of that, sale is happening or not happening? Now you tell me, Air India will get its sale or revenue from the operations of its flight. Those flights are operated or non-operated? Answer. Sale generated, not generated? Revenue generated, not generated? Revenue generated or not generated? Revenue not generated because of what? Passengers are not paying fare. Revenue not generated means, what is the reason for non-generation of revenue? Assets are not performing, they are not operating. That's the meaning. Always you imagine one point. Market affects the assets, assets affect the sales, sales affect the shareholders. Do you understand or not? Sales affect shareholders and debt holders also. No, sir. Whether sale happened or not, interest you have to pay to the bank. Are you understanding or not? Shall I give you an example? Listen carefully. Exactly 2 months before COVID, not 2 months, 3 months before, 2019 December 16th, I bought a new house in my place. Okay? I spent a good amount. I purchased it. Took a loan from LIC HFL, Life Insurance Company Housing Finance Limited. From LIC HFL, I have taken a loan also. After taking the loan, I purchased the house, I started. 3 months after COVID came, I sat at my home, started recording online classes, all these things happened. Listening? So many faces here joined Zoom live classes also at that time for CA Foundation. So many faces who are sitting here are all first batch students. So the point what I wanted to tell is, during that time, I sat at home, started recording. Now why I am telling all these things is, see here, during the COVID time, bank charged me interest. They didn't tell Koushik Mukhesh, how much big difficulty came to your life. Our life has become miserable. Till COVID go, I will not charge any interest. Like that, no bank has did. Are you understanding the point or not? That means debt capital ki there is no concession. Irrespective of the market condition, you have to pay interest. So who is the affected party? Now start again. Air India, what is not working because of COVID? Assets are not working. When assets don't perform, what will happen? Revenue don't get generated, sales don't get generated. When sales don't get generated, shareholders will be the affected parties. Clear or not, everyone? This is logic. Why I am telling this is, take the contrast example for this now. The contrast example is Hindustan Unilever. Now tell me, COVID is there. Okay? You use a soap, shampoo, toothpaste, toothbrush, or any kind of daily usage, etc. These things you will not buy during COVID. Market recession is there, we should bath for one time in a week. Other than reason of COVID, he will die. Are you understanding the point or not? Now tell me, during COVID time, how many of you stopped bathing? Recession in the market. Very good. How many of you stopped brushing your teeth? I'm asking seriously only. We stopped using flight. How many of you stopped using brush? Now did you understand the market situations, how they work? All the things will not affect everyone in the same way. How market affects an essential company, in the same way it won't affect discretionary. Discretionary ki full impact will be there. Are you understanding or not? Sir, then why they start discretionary business? Sir, I said the negative side. Positive side also you should see for discretionary. How many toothpaste I have to buy to equate for 30 lakhs car? Do you understand my point or not? How many toothpaste I have to buy? In my life I may not buy 30 lakh worth paste. One car will give that revenue to them. Discretionary disadvantage is the market affects them badly. But once the market is in boom, they get extreme profits. Like what Tata Motors is doing now. Do you understand the point or not? Same Tata Motors is badly affected during COVID time. Same Tata Motors is in bumper profits today. Are you watching the markets going on or not? Tata Motors is booming like anything because of its electric vehicles. Are you understanding? From this, the moral of the story is very simple. Yeah. Point is, what affects the sales? Market don't affect the sales. Market affects the assets. Assets affect the sale. Market affects the assets of a company, every company in the same way, different way. Now I will ask another question. Market affects in the same way, market affects in the same way companies belonging to the same segment. Companies belonging to the sorry, I will ask a question. COVID came. Automobile sector down. Listening, huh? COVID affects Tata Motors, Toyota, na, BMW, Suzuki, Maruti Suzuki, all companies. And COVID time people will tell, don't buy Tata Motors during COVID. Buy Toyota, COVID will not come. Like that, no fool will tell. Are you understanding or not? It affects which company? One company, huh? All the companies it will affect. Government of India announced LTCG indexation removal or not? Answer, yeah. On long-term capital gains, LTCG removal happened or sorry, indexation removed or not? That affects which real estate company? Koushik Mukhesh real estate will be affected. All others are safe, huh? Now did you understand? That's a market condition. So why I am telling this story even in revision class means please use this properly, or else you can't understand net operating income approach. The point is, net operating income approach works on a basic premise of understanding the risk of the assets in a company. Please see there. Tell me now. Every company assets will get affected in the same way or in a different way. Companies belonging to the same industry will get affected in the same way. Up to here everyone understood that concept. But how much you are getting affected? Market down by 1%. Market 1%. How much you are down? That's called as beta of assets. What is it? Bad response? What do you mean by beta of asset? Sorry, rather than asking like that, I will ask this way. 2. What do you mean by beta? Sir, 1.2. Take it like this. What do you mean by beta 1.2? Beta of assets 1.2. What do you mean by this? Answer, sir. For 1% change in the market. Everyone repeat. Company sales are affected by 1.2%. Bad response again at the ending. Start again. For 1% change, I am not telling rise or fall, any change. For 1% change in the market, the company's sales will get affected by 1.2%. And how many times my company is sensitive to the market? 1.2 times sensitive. Beta is always a representation of answer. Tell me what is the CAPM formula? RF plus beta into RM minus RF. Do you remember or not? In that, what is the beta? Here 1.2 I have written or not. This beta will be taken into that particular beta. Like this, you should not think. E beta, A beta, it is not same. There is a difference. What is that beta? That's what we are going to learn now. Okay? Tell me. Beta is a measure of return or risk? Loudly? Yes. Very good. Beta 1.2 represents what? Beta of assets 1.2 represents what? Beta of assets 1.2 represents what? For every 1% change in the market, company sales are getting affected by 1.2%. Means how many times my company is sensitive to market? I will ask like this. Equally sensitive, lesser sensitive, more sensitive. More sensitive. If you change by 1, I will change by 1.2. If you change by 1, this is called as a discretionary company. Hindustan Unilever, do you know what is the asset beta? 0.12. How much? 0.12. Asset beta of Hindustan Unilever. 0.12. 0.12 means a negligible beta. Why? Whether market rise or fall, people will not stop bathing. Market lo boom came. You will brush 50 times a day. Na? Buy the toothpaste. 1,000. You will do not throughout the day. 24 hours or 24 times you will brush. Whether market growing or not growing, I don't. Sir, a person having a habit of brushing the teeth 2 times a day. Whether market is in recession, market is rising, he will not compromise. That 2 will not reduce, the 2 will not increase. That means sale will drop or rise or same. They happened for Hindustan Unilever during the COVID. You understand or not? Listening? Yes, COVID came. I sat at home. Personally, I am very happy I got an income, very good income. But person who sat at home who did not get any income, will he buy the car? Will not. Means what you have to understand? COVID will not affect all the companies in the same way, all the persons also in the same way. Market will not affect in the same way. Please see there now. Point number 1. What balance sheet we are seeing? What is the first beta? Beta of? How much I have taken? What is the meaning? First tell me that. For every 1% change in the market, sales of the company are affected by 1.2. I have written assets there, but I am telling sales. Do you understand the reason or not? If assets are not performing, what will affect? Sale. That means don't see asset as an asset. See the asset as a sale. Understood the point or not? Okay. Now, answer my question. Market there is a downfall. Market there is a downfall. It will affect equity or debt. Market downfall is there. Debt holders will stop asking the interest. They will get their interest. And they are affected or not affected? Who is affected? So debt will take any risk or will not take any risk? See the screen. My company is a unlevered company. Which company? My company? Unlevered company. What is unlevered company? Debtor, no debtor. Such kind of company mine is. See here now. What will happen? Liability, proportion, beta, weighted beta. Don't write anything. Listen carefully first. Please. When I say unlevered company, equity only, equity and debtor. Everyone? See the screen. Don't get distracted. One point also don't get distracted. Please see the screen. What is the liability? Equity. I have debtor, no debtor. Means what is the proportion of equity? 1. It's not 0.5, 0.5. Total 1 equity. Tell me, what, like every time, balance sheet has to balance on both assets and liabilities. So what will be my weighted beta? 1.2. Tell me, 1.2 is the weighted beta. Proportion is 1. Then what is the beta? Proportion into beta is a weighted beta or not? 1 into how much will make 1.2? Therefore, what is the beta? 1.2. What is this beta? This is called as beta of equity This is what we use in CAPM. Understood the point or not? All these things you will see in CA finally in a different way. One chapter is dedicated for this understanding. From that just 0.5% concept I am explaining, 99.5% still there in final. So the point is very clear. This beta is what we use in the CAPM calculation. CAPM, what is the formula? RF plus beta. There you are calculating what? RF plus beta into R minus RF equal to question mark. KE means what? Cost of? For equity, this is the beta. Did you understand the point or not? Sir, I don't have much time to explain beyond this. Everyone understood up to here? Why I am explaining all this? Just in another 5 minutes you will understand. Next again. Again risk balance sheet. Take the same numbers again. Beta of assets how much? 1.2. Okay. First one. This is which company? Levered company. 0.5 is to 0.5. What is 0.5 is to 0.5? Equity 50%, debt 50%. Everyone understood? Okay. First one, tell me, what is the columns? Liability, proportion, beta, weighted beta. First you use your common sense if any and tell me. Point number 1. What is the first liability? Now what is there? Debt. Next what is there? Equity. Tell me. What is the proportion of debt? What is the proportion of equity? Debt will take any beta risk, will not take a beta risk. Market downfall, debt will, interest also will reduce. No. That means they will take beta na, no beta na? No beta. What is the weighted beta? Answer, sir. Next. What is the weighted beta of equity? 1.2 is a weighted beta. Then what is the exact beta that equity shareholders are taking in the company? 1.2 divided by 0.5. How much it is? 2.4. Everyone? 2.4. Now tell me, what is this beta? This is called as what? Beta of equity. From this, what you understood? When the debt is there in the capital structure, what will increase? What will increase? Bad response. Start again. When the debt is there in the capital structure, what will increase? Beta of what will increase? Loudly? Loudly? Equity beta increases means what will increase? Risk increase means what will increase? Bad response again. Not following. K equal to RF plus beta into RF minus RF. Okay na? RF, RM, RM minus RF constants. They won't change. What will only change? Now tell me. First situation, what is my beta? 1.2. How much? 1.2. RF 6. Let us say 15 minus 6. Tell me. 15 minus 6. 16.8. Now tell me K equal to 6 plus. What is the revised beta? 5.4. Into 15 minus 6. 26. Now tell me, KE has increased or not increased? Loudly? Adi, that's the conclusion that we wanted to throw on this point. Okay. Now answer my question clearly. Whenever there is a beta of assets, whenever there is a that will be taken by the equity or that will be taken by the debtor or by both? Who will not take? Previously, total capital is with, therefore total risk comes to the equity. But now, how to interpret this 2.4? The total risk of 1.2, the which should have been shared by both debt and equity is shared only by equity. That means equity is taking one time risk, double the risk. Therefore, equity risk is not 1.2, it is 2.4. Eventually, it increases what? Not answering. Eventually, it increases what? From this, what is the moral of the story? NI approach is wrong. Do you know why? What NI approach says? More the debt. Not answering. More the debt, less the KO. Higher the value. This is what said by? This is what said by? Correct. Now, what we are going to discuss? NOI. What we are going to discuss? NOI. One by one you tell me. First, tell about NI. More debt. Lesser the KO. Higher the value. This is impact 1. Impact 2. Tell me. More the debt. Start again. You will waste your own time, but I won't consider unless and until you answer. Start from the beginning again. As per NI approach, tell me what will happen. More the debt, less the KO, higher the value. Over. NI is same. Okay. Now tell me about which one? NOI. Tell me. First impact number 1. More the debt. More the debt. Lesser the KO. More the value. Up to here, same. Second impact also he analyzed now. Tell me what will happen. More the debt. More the KE. More the. Because of this. More the KO. Lesser the value. This lower KO, this higher KO will offset each other. This higher value, lower value offset each other, and value of the company remains the same. This is what net operating income approach wanted to tell. Are you understanding the point clearly or not? It raised, it fall. Because of higher debt, it, listening, because of higher debt, KO reduced and value increased. Because of higher debt, eventually what also happened? KE increased, again, KO decreased in the first case, again it 2% fall is there, 2% rise is there. 20% minus 2 plus 2 means how much it is? 20. Listening, and KO is constant or changing? KO is a constant or changing? KO is a constant because it raised and it fall in the same time. Because of that, KO is remaining constant. If the KO is constant, obviously what will be the constant? Value will not change. That's why net operating income is called as a irrelevance model. What irrelevance model? Value irrelevance model. Means capital structure will not affect the value of the company. Who said? See there. See there, see there. First tell me what NI approach said. More the first shall I tell you one thing, without understanding the why capital structure theories chapter people won't touch, people won't touch because of these reasons only. Without understanding all these, how dare you can start the chapter? Do you understand or not? How can you start with capital structure? These are the basic things that we need to understand. Listening or not? See there, higher the, what will happen? Lower the KO. Higher the, this is correct. Under which model? Even under NOI also this one is considered. But there is another impact also he analyzed. Tell me now, under which model? What is the impact 1? More the debt, less the KO, higher the value. Let us say, higher the value. Let us say there is a 2%. There is a 2% reduction in the KO. 2% reduction in the KO. Now tell me, second impact. Impact number 2. Tell me, higher debt. Higher KE. Because of higher KE, overall cost of capital, what will happen to it? Increase or decrease? Increase by how much percent? Minus 2 because of debt, plus 2 because of debt. Both will offset each other. And what is a KO? KO is not 0. Change becomes 0. How KO will become 0? Minus 2%, plus 2% cancels each other, offsets each other. Change becomes 0. And a KO will remain constant. When KO remains constant without debt, or increased debt or lower debt, automatically what will also will be constant? Here value increased by 5 lakh, here value decreased by 5 lakh, value increase. Already my value is 20 lakh, 20 plus 5, 25, minus 5. That means value also remain constant. And the value of the company is changing with debt without debt, it's remain constant. This is an argument of net operating income approach. Everyone understood the logic clearly? On this only all the questions are being tested in exam. Okay? Now, exam lo first twist number 1 you will find. Pakka, ide twist, all the exam. They don't tell which model they are asking. They will not tell. None of the exam questions they will tell. Solve as per net income, solve as per net operating, like that they don't tell. None of the questions they will tell. Students should understand. They can't understand. That's why choice. Do you know why? If KO is given in the question, loudly, if that is net operating income question. Because it's a constant, they will only give. If KE is given in the question, net income approach is the question they ask, because their KE is constant. KE don't change. Where? Answer. First tell me, as per net income approach, more debt, lower KO. More debt, lower KO. Higher debt, lower KO. Lower debt, answer. And KO is changing or not changing? Answer. KE is not changing. What is changing? KO is changing. That is net income approach. Question la KE missing figure. Question la. But they given net operating income. Net KO missing figure. Which one? Loudly. KO missing figure. Then the question is net. That's all. Like that you should understand. Clear or not, everyone? Like that you need to understand, and we should solve, or else impossible to crack the questions on capital structure theories. Up to here, everyone, if you understand, we'll go into the problem solving. Shall we start? Yes, sir. Okay. See here, 1 minute time I will give. Just to read the theory. Properly read the theory first. Now it is not a time to write the notes. Just 5 minutes, read the theory. I will make it full screen at least. Last benches, could you see the notes? Last rows. Can you see the notes on the screen? See, theoretically also you understand how this model works. Then we will go into problem solve. Problem solving will take 5 minutes. Yeah, problem solving is not the problem. Understanding a problem. If you don't understand all this, what is the use of doing 100 problems? Okay. Done? అది assumption. There may be slight difference, but because of the thesis won't change. So now tell me, point number 1, understood the concept clearly? Yes, sir. Everyone? Yes, sir. What yes, sir? Oh, really? So now answer my question. What theory says that value will change? What theory says that value will not change? We are seeing which approach now? Net operating income approach. What are constants? KO and value. KO and net income approach. What is constant? KE is only constant. KO and value will change. More debt, lesser KO, more value. Lower debt, higher KO, lower value. Clear? Listening? Yes, which is more sound and sane method? NIA, NOIA? Which is a much better method? NIA, NOI? NOIA, correct. However, NOI again proved to be false at a later stages because of tax. Because of tax. Tax impact has come. Because in all the problems done till now, what is our assumption? Tax or no tax? That means in exam tax or no tax questions will come. Tax questions will come. That is EA Institute. Always they may try to make your life miserable in exam. Therefore they ask with tax questions in exam. They ask without tax also, but with tax also questions are being tested in exam. Okay, how tax impact these theories also we have to understand. At that time again we say that NI approach is more sound and sane method than that of NOI. Are you understanding the point or not? Okay, let us start with the concept now without wasting time. First point number 1, I want you to see this table. This one table, if you read properly, you can understand everything, whatever they wanted to convey. Read it, expand the diagram and tell the interpretation. NI approach ki interpret the results. Higher the debt, lower the equity component. Because of that, lower the KO. KE is constant. Next, value will increase. Okay, na? Now tell for NOI approach. Higher the debt, lower the equity, higher the KE, higher the KE. Because of higher debt, lower KO will happen first. Because of higher KE, KO will rise again. This fall and this rise will offset each other. Value of the company is constant. That's the meaning of NOI. Everyone understood the logic clearly or not? Yes, shall we do the problems now? Yes, okay, copy this question. Only question you copy. I will tell you how. Fast, fast, fast. This is a CFA level 1 question. CAM question institute is copying all the time. You check any kind of study material question. If you can do this properly, any study material question on net income, net operating income, you can do. I mean it. You copy it on the question first. Okay, shall we begin? Okay, don't write anything. First explain me the concept. After that we can do. See here. Okay, see here once. Tell me. First thing, entire capital structure theories la, they will ask questions in 2 ways. First type, they will give two companies like this. How many companies they will give? Two companies like this, and they will ask you to analyze the value of both the companies. Value of? They will ask you to calculate value of both the companies. Are you listening to me? Yes, sir. This is what they will ask you to do first. Or they will ask only for one company, ask you to value the company. When they ask you to value only one company, easy. When the comparison of two companies come, then the problem will come in answering the questions. Listening everyone? Confusion will come while you are answering. So one problem I will do for you. After that, another problem we both will do together. Then we will do the study material questions. 7 questions are there. Steadily we can do and complete all the questions. Shall we start? Yes, see the question now. What is the EBIT? Why do you know why 3 lakh they have taken? Listen. Compare two companies which are having same kind of opportunities. Same kind of opportunities. Never compare two people or two companies who are not coming from the same background. Do you understand or not? Born with a golden spoon, you should not compare with a person who came from a footpath. Are you understanding or not? A person who is born with a golden spoon, you should not compare him with a person who started from the scratch. Like that, two companies are there. How many? Both the companies are in the same business. Both the companies are having the same assets, means same opportunities are there for both. And both the companies are having same. But now tell me, both the company, these are the 3 assumptions of these models. Tell me, both companies are in same. Why same business is an assumption? Just now I told. Airline business and airline business comparison will give you a right answer. Airline business with HUL will not give a right answer. Because one company is in one business, another company is in another business. Market don't affect both the persons in the same way. Why I have given so many examples before starting this? Understood or not? Tell me, what is the first assumption of capital structure theory? Number 1. Same business. Same assets. Same EBIT. That's why in the question, how much is the EBIT of J and M? 3 lakhs and? Okay. So now listen carefully. Two companies are there which are similar or same in all the aspects except for the capital structures. See the screen. Which company is levered? Which company is unlevered? B is, M is unlevered. J. M. Unlevered means what? No debt, or simply only equity company. Which is a debt company? Now this is a situation. First I will solve using which approach? NI approach. You please help me with the numbers first. Or will you do together? Start it. Keep the heading particulars. J, M. J, M. Okay, now J and M. Right on there. First, EBIT. EBIT. 3 lakh. 3 lakh. I don't wait for anyone. Do fast. Okay. Next. Which company will have interest? Which company do not have interest? J has interest. M don't have interest. Right on. Minus interest. 9 lakh into 10%. Why 10%? KD. KD is how much? 10%. Therefore, 10% of 90,000. 90 lakh. Sorry, 9 lakh. 90,000. Next one. EBIT minus interest will become? Not EBT. It will become EA, ESH. Because what is our assumption? Tax is not there. Preference shares are not there. EA, ESH. Also in the bracket you can write it is EBIT minus interest. How much? 2 lakh 10,000. 3 lakh. Okay. Next. Shall we? Now I want answer from you. NI approach we are doing. What is constant? Therefore write down KE. 15% for M means 15% also for J. Listening? And both companies will have a same kind of KE. KE will not change across two companies. KE will be taken as same. Okay. Next. Tell me, we have EBIT minus I. We have KE. Something we can calculate using these two numbers. You forgot the formula. Yes, can we calculate or not? Write down. Yes. EBIT minus I whole divided by KE. Value please. 14 lakhs. Next. 3 lakh divided by 15. Fast. Some people are still copying at this stage. Don't copy. Don't see the screen. Tell me. Now we calculated V a B a S a. Answer. V equal to B plus S is taken. Can we calculate the B or not? Write down B. How much is a B? 9 lakh. Next, 0. What is the total value of the company? B plus S. Value 23 lakhs. 20 lakh. So tell me, what is the formula for value in other form? EBIT divided by KO. Can we calculate KO as EBIT divided by V or not? Tell me, what is KO? EBIT divided by V. Tell me, 3 lakh divided by 23 lakh. 33 point? 30.13, sorry. 13.04. Next, 3 lakh divided by 20 lakh. How much? 15%. Okay. Now, this is the answer given under which model? Now, see the screen. See the screen. We are doing under which model? NI or NOI? Tell the thesis of NI. Higher debt. Proof number 1, lower KO. Next, because of lower KO. Proof number 2, 23 lakh. Game over. That's what NI approach wanted to prove. They understood or not, everyone? Shall we do the problem on NOI now? NOI law what will change? KO will change. NOI law what will change? What will be same? Because of that, what also will be same? Value also will be same. What will change? KE will change. Now we have to prove that. Shall we do the problem together? Copy down. Keep the heading NOI approach. Completed? Sir, if you write fastly, I will go into the answer also. We will do it together. Shall we start? Which approach we are doing now? NOI approach. Start. Write down. Same. Schedule is same. Particulars. J. M. First you tell me one answer. What is the 3 assumptions of all these models? Same business, same assets, same EBIT. That's why EBIT of both the companies is same. How much is the EBIT? 3 lakh. Minus interest. Same. 90,000 and 0. What is the EBIT minus interest? How much? 2,10,000, 3 lakhs. 2,10,000 and 3 lakhs. Now you answer. Up to here only completed. Okay? Don't do KE. Don't do KE because KEA missing figure in case of NO. It will only change. Correct or not? I will ask you one question. Fatafat give the answer. B value is there or not there? B. Question B value is already there or not there? First write down that. B equal to. How much is a B? 9 lakhs. Other side? 0. Next one. We have EB. No. 1 minute. KO we can calculate. We have EBIT. We have KO. Can we calculate the value or not? What is constant in NY? Why KO is a constant? Please explain. Higher debt. Higher debt. Lower KO. Higher the value. But higher the debt. Higher the KE. Higher the KO. This lower KO. Higher KO offset with each other. Therefore, KO will remain constant. 2-3% will go down. 2-3% will go up. Both will offset each other. Understood the point or not? So obviously, write down the next one. KO. What is the first KO of one company? 15. Therefore, the same 15% will apply also to the another company. Tell me, we have EBIT, we have KO. Can we calculate the value or not? Tell me the formula. EBIT divided by KO. 3 lakh divided by 15%. Obviously, next company also 20 lakhs. Next, tell me, we are having B, we are having V. Can we calculate the S as a missing figure or not? V equal to S equal to V minus B. Tell the value. Next. Okay. Now calculate the KE. Tell the formula for KE. Now EB. One second. S equal to EBIT minus I by. S equal to EBIT minus I by. K equal to EBIT minus I by S. EBIT minus I by S. S is available. EBIT minus I. 2,10,000 divided by 11 lakh. 19 point. Next. 3 lakh divided by 20%. How much? 15%. Okay. See the moral of the story now. First, NOI approach, what is constant? Constant or not constant are there? Value will change or will not change? Value did not change. Okay na? Now you tell me the answer. Everyone please. As per NOI approach, higher the debt. Start again. Higher the debt. Higher the debt. That's why KE is more, 19.09. Are you understanding the point clearly or not? This is how the NOI and NI approach actually operate in the real life scenario. Everyone understood the concept clearly or not? With this NI NOI approach conceptually we completed. Let us do the study mat questions also to get the clarity and confidence. Shall we start doing? Please open the study material. Come to illustration number 4. 4 completed yesterday. I think this is regular class workings. Okay. No looking at the answers. Now I want you people to answer this question. Which illustration we are doing? Illustration number 4. See the screen once. You need not even see your study material, see the screen. Problem with study material is your eyes will go on to the answer immediately. May not be intentional, but still you will see, which I don't want you to do. Okay? See here. Amita Limited's EBIT is 5 lakh. Firm's KD is 10%. Currently firm employs 15 lakh debt. Overall cost of capital 15%. Total value of the firm and cost of equity. Will you calculate using the 4 formula? Here question is given on one company or two companies. Therefore easy. That's what I said. When one company question is given, 3 marks, 4 marks questions will come. When two companies are given, then 6, 8 marks questions will start. Okay na? Value this fast. 1 minute time. 30 seconds for the value of the firm. 30 seconds for the cost of equity. First one, tell me what is the value of the firm? 33 lakh. How many of you got this answer? Everyone got the answer or not? Next we have to calculate the KE. 19.09%. Sir, if you complete it, we'll go to the next illustration, everyone. So let's not waste time. Every minute is a precious one. We have to complete Modigliani Miller. That's the main tension for me. Shall we start? See here now. Answers, let us see. 33,33,333 and 19.09. Everyone understood the concept up to here? Next. Take illustration number 5. 6 marks question given in exam already. Big question. Read the question. See the screen. Read the question. Alpha Limited and Beta Limited are identical. Why he is saying that? Our assumption of the entire model is we have to compare two companies which are identical. So Alpha Limited and Beta Limited are identical except for their capital structure. Alpha Limited has 50% debt, 50% equity. Beta Limited 20% debt and 80% equity. Borrowing rate is 8% in a no tax world. Capital markets are assumed to be perfect. Borrowing rate, both cases KD, how much percent? 8%. If you own 2% of the shares of Alpha Limited, determine your return. If the company has a net operating income of 3,60,000 and the overall capitalization rate KO is 18%, calculate the implied required return on equity of the Alpha Limited. Beta Limited has the same net operating income as Alpha Limited. Calculate the implied required rate of return on equity of the Beta Limited. Analyze why does it differ from that of the Alpha Limited. This is a question that is being asked. Read the question first. Please don't see the answer. If you see the answer, your thought process will stop there. Read the question. I will wait for you. We will do it together. Shall we continue? First tell me, how many companies are there in this case? Two companies, A Limited and B Limited. Okay, let's call like that. A Limited is having a 50:50 debt equity ratio. B Limited is having 20:20 ratio. 20:80 ratio. I'm very sorry. Okay, and KD in both the companies is 8%. Since both are having debt, both are having the same KD. Listening. Next. If you own 2% of the shares of Alpha Limited, determine your return if the company has a net operating income of how much? 3,60,000 and the overall capitalization rate of the company is 18%. Overall capitalization, overall cost of capital is 18. Means which is what? K, O. First I will ask you a question, tell me. Illustration number 5. Please see the screen first. After that you can copy. How much percentage of shares in Alpha Limited you are holding? 2%. How much? 2%. What is the net operating income? 3,60,000 is the net operating income. I will ask a question first. See here. First, which company? Alpha Limited. Tell me, what is the EBIT of Alpha Limited? 3 lakh? This entire 3,60,000 belong to the shareholders. Debt will take interest. So minus what? Interest. How much? How much is the interest? So simple answer I will tell you. 1 second. See here. How much is the net operating income? 3 lakh? What is 3,60,000? EBIT. Tell me, what is the value of the company under the last formula? Some are not here in the class. Everyone. EBIT divided by. They have given KO or not? They have given EBIT or not? EBIT divided by KO will give you what? Tell that value. 3,60,000 divided by 18% value. 20. In this 20, 50:50 means how much? 10 lakhs debt, 10 lakhs equity. On this 10 lakhs debt, how much interest? That's how we need to calculate interest here. Did you understand the point or not? Tell me now. How much? 10 lakhs into 8%. How much? 80,000. Okay. Now tell me. EBIT minus interest. How much? 2 lakh. Now you please tell me. This 2,80,000 will belong to debt, preference, equity. Answer. Equity. Now tell me. 2,80,000 is belong to 100% of the shares. Correct? You are holding 100% or 2%? 2%. So 2,80,000 into 2%. Tell the value. 5,000. What is this 5,600? What is this 5,600? No, that 5,600 is the return if the company has a net income of 3,60,000. Return to whom? Return to you. If you own how much percent? 2% of shares in the Alpha Limited. This is the answer for the first question. Everyone understood the point or not? Tell me, how we calculated the debt value? How we calculated the debt value? By taking the total value. Okay, how you got the total value? EBIT by KO. I told you hundreds of times in the last class. What I said? This chapter runs on the wheels of 4 formulae. If you remember those 4, you can do any question I said. Till now 5 questions we have done, 2 extra questions in my book we have done. Every problem will have the 4 formula or not? And the only problem with you is you are not using that in a right way. So the point is you should understand, when some number is there, okay, immediately apply those 4 formula. Which formula will fit here? Are you understanding the point or not? Next tell me, what is the next question he is asking? Simply KE he is asking. What he is asking? KE. KE of which company? Not only that, KE of beta also he is asking. So first point everyone understood up to here clearly. Yeah? Shall we do it together, the second bit or not? Keep the heading. Calculation of KE of alpha and beta. Write down. Calculation of KE of alpha and beta. Particulars A limited, B limited. Particulars A limited, B limited. Tell me now. First one, EBIT. How much is the EBIT of both the companies? 3,60,000. Okay, one by one. Minus interest. Both the companies, one second. Both the companies are levered or unlevered? Everyone? First company is there, na, Alpha Limited. Already we calculated interest in the first case. How much is the interest? 80,000. 80,000. Next, I will ask one question, tell me. Both the companies are having a same KO or not? When same KO is there, value will be same or different? Same. So what is the value of the company? 20 lakh. 20 lakh 50% debt for the A Limited. Therefore 10 lakhs came. But in Beta Limited, debt is 50% or 20%? Loudly. 20% of 20 lakhs? 4 lakh into 8%? That's the interest for the second company. Sorry, exam you have to do all these workings clearly. Since we don't have that time, I am not doing all those workings. How much? 32,000. What is EBIT minus I? 2 lakh 80,000. 3 lakh 38,000. 28,000. 3 lakh 28,000. Tell me, what is the value of V? Already we calculated both the companies having a same value. How much it is? 20 lakhs. Minus B, 10 lakhs, 4 lakhs. What is the value of S? 10 lakhs, 16 lakhs. Sir, we have VBS. Can we calculate the KE or not, everyone? K equal to, tell me, what is the formula? EBIT minus I divided by S. 2,80,000 divided by 10 lakh. 28%. Next, 3,28,000 divided by 16 lakh. 20 point. Are you doing the answer or not, everyone? Now answer my question. Why both of them change? Why both of them change? Don't sit idle. I don't have energy to repeat that. Why both are not same? Why both are changing? As per NOI approach, companies having higher debt will have higher. That's why the KE is here. How much? 28. Lower debt will have a lower KE. That's all proved NOI approach in a different way in the problem as well. Everyone understood all the questions clearly? With this, we completed NI approach and as well as NOI approach. Let us see if there is any extra question I will ask you to do now. So see the answers first. 5,600 answer tallied. 28% answer tallied. 20.5 answer tallied. Over. Next one, the king of the ring. What is the topic? Modigliani and Miller. Keep the heading. Traditional approach, one question is there, na? Directly in the textbook we can do that. Shall we? Question number 3. Illustration number 3. You come once. Illustration 3. Illustration 3. Okay. First one question I will ask. Answer to that question. Hey, everyone listen. First I will ask you a question. Answer to that. After that, we will be analyzing the concept of traditional approach. First, tell me, higher KO will give more value or lower KO will give more value? Loudly, higher KO will give more value or lower KO will give more value? అదే ఆన్సర్ అయిపోయింది. అదే ట్రెడిషనల్ అప్రోచ్. ట్రెడిషనల్ అప్రోచ్ సేస్ దట్ టేక్ డిఫరెంట్ కాంబినేషన్స్ ఆఫ్ కేడి, కేఈ, డబ్ల్యూడి, డబ్ల్యూఈ. వేర్ కేఓ ఈజ్ లెసర్, దట్స్ ద బెస్ట్ క్యాపిటల్ స్ట్రక్చర్. Did you understand or not? See the question there. First option, option number 1. How much is a KD? 11%. How much is a KE? How much is a debt on the total capital? 0. And totally equity. Then KO will be KE. How much percent? 13%. Slowly every year it will change or not? So therefore the point is different options they have given. Different options, so we will get same answer, different KO na. Choose that KO which is higher, which is lower. Because lower the KO, see here, KD, KE, WD, WE, KO. So see that all these, I think these you can calculate, correct? Which one we should choose? Option 1 or 2 or 3 or 4 or 5 or 6 or 7? Answer. Why option 2 we have to prefer? Lowest KO came in that place. Because of lowest KO you will get the highest value. And the answer of the traditional approach. Come to Modigliani Miller. More than this discussion is waste. Okay, now shall we continue? Okay, come there. Come to the next area called as Modigliani and Miller model. Okay, this is complicated concept, so you should be extremely careful while doing the answers as well. See here once, please everyone listen. What is the concept name? Modigliani and Miller approach. Once a Modigliani Miller approach is completed, then net income approach, net operating income approach, and MM approach with the tax we have to do. That's all. With that, the entire chapter, this concept say will be completed. The most darkest parts of this capital structure theories chapter will get completed with that. Okay, the concepts which students always feel difficult, that will be over with this. But Modigliani Miller again 2 types are there. Primary arbitrage question and secondary arbitrage question. Understood the point, everyone? Sir, first tell me, how many of you are hearing the words primary arbitrage and secondary arbitrage for the first time? No problem, sir. You can tell such that I will have a clarity to what extent I have to discuss. If everyone know, then overall I can tell and I can move on. More number of people don't know means at least I will get a chance to explain that. Okay, little number only. So, what is a primary arbitrage? Those who didn't raise the hand only will answer. What we have to do? If it is a levered firm, sir, see there, I understood. See there. See there. What is the name of the concept? Modigliani and Miller. Okay, first listen carefully. From here exactly 1 hour 20 minutes. Don't disturb, we will complete the entire problems as well. Not Modigliani, all the concepts. Once this is understood, tax will take hardly 5 minutes extra. Problems will be completed in no time. Please support me, cooperate with me next 1 hour 20 minutes. Please cooperate, we will complete this entire area. Shall we continue? Yes, sir. See the screen once. Modigliani Miller approach. First point number 1. What this concept wanted to tell? First tell me. Companies which are having, what are the 3 assumptions? What are the 3 assumptions? Same business, same assets, same EBIT. These are the 3 assumptions of all the theories, correct or not? Modigliani Miller also have the 3 assumptions, same intact. Companies which are having same business, same assets, same EBIT should have same value. That's why Modigliani Miller says that capital structure is irrelevant for value or irrelevant. What is relevant? Investments are relevant, not the financing and dividend decisions. Not the financing decisions or dividend decisions. Are you understanding the point or not? I told you yesterday also in the capital budgeting. When you analyze a person or a project, analyze the way in which it has to be done. keeping all the bias aside. Are you understanding? Listen carefully, please. Whenever we are analyzing a person or any project, analyze that person from that point of view only in which you are analyzing. Are you understanding the point or not? Sir, I will give you an example. Just an example, you can understand this. I said whether Mr. A is good or not in teaching law or teaching DT, teaching IDT, anything, any subject. Mr. A is good in teaching IDT, DT, law, FM, accounts, etc. Some subject I ask. Then you should tell on the basis of the skill of teaching. Yes, he teaches well, he teaches moderate, but teaching is bad. Listening? Instead of telling that he smokes every day, therefore he don't teach well. So what is the link between his habits and teaching? Now did you understand the point or not? He drinks every day, therefore not good. I asked about, you are marrying him, eh? What I am asking? Teaching I am asking. Why you are telling personal characters and trends? Did you now understand the concept clearly or not? Answer everyone. Yes, what I asked, what you are answering? I asked about teaching. Why you are telling about his personal habits? I asked you from which point of view? Teaching point of view. I am asking. Tell only about that. Are you understanding or not? Like that same, sir. Any time you see, whenever we ask about a person, our other impressions will fall on him to tell whether he is good or bad. Do you understand or not? I am asking company also same. Whether this company is good or bad, I asked. It is using debt, therefore bad. So who asked you about finance? Do you understand or not? Company will grow because of financing. Company will grow because whether they pay dividends or not, it will grow. Company grow because of what? Assets. Asset is an investment. Are you understanding or not? Growth of a company will be seen not from the financing. Growth of a company should be seen from. Sir, I will ask you one question. Tell me. In my pocket 100 rupees is there. I took the note. How much is there? 100. He gave me loan of 100 rupee. What is there? Loan of 100? Own of 100. Correct or not? Now tell me. Which 100 is more valuable? Both are same value. Whether he give as a loan, whether I have my own money in my pocket, both are having same value. 100 rupee don't change its value all of a sudden because of the person giving it. And financing don't generate any value. Clear or not everyone? Same thing I am also telling. The point is, when you are analyzing the project or when you are analyzing a person or when you are analyzing a company, analyze properly. Modigliani Miller says the same. Or else why the person has get Nobel? They got the Nobel Award for their thesis on arbitrage, primary arbitrage, secondary arbitrage and dividends irrelevance model. Why? Because the way in which they analyzed, world itself has acclaimed for their thought process. Clear or not? When I am asking whether company is good or not, their financing is, who asked you? Who asked you about finance? No, they don't pay. Who asked you about dividend? I am asking whether that company is good or not. Means whether company is having a good investments or not, performance is good or not, activity is going on. These I am asking. Do you understand or not? Answer, yeah. So this is a point. Did you understand my question or not? Same. Modigliani Miller is a matured thought process of capital structure theories. That's why it became extremely popular throughout the world. Sir, let us now come to the point. What Modigliani Miller says. Conclusion I said you now. What is the conclusion? You heard entire thing as a story now. For last 4 or 5 minutes. It's very interesting. I know. So tell me now what you understood. What is understood? The simple logic is, whenever there are two companies which are having same business, same asset, same EBIT, should have same value. It should not have a different value. There is no chance of getting a different value. But you are saying that, no, sir, Mr. Modigliani Miller, see in the market, A is having more value than B. A is having more value than B. Therefore, your thesis is wrong. Modigliani Miller smiled at them and said that, yes, value changed, but that change is not permanent. That is only a temporary situation called as an arbitrage. That's what he said. Are you understanding or not, everyone? Sir, I will ask you one question. Please listen. Shall we? Okay. Now listen carefully. There are two shops. Listen to my example properly. That example will change the thought process. There are two shops. Okay? Listening? There are two shops. In both the shops, they are selling books. Okay? Everyone is going to some shop A. Some are going also for shop B. Okay? I went to shop B. I went there and I purchased a book. I got it for 40 rupees. He is a wholesaler. 40 rupees he sold me. Okay? You went to B. You purchased the book for 60 rupees. Both of us met. You asked what is the cost? I said 40. You said 40. I purchased for 60. I said no, it is only 40 rupees worth. The same book, everything is same. Same. When I am using the word same quality, same publication, same book. For me, how much? For you, how much? 60. Next day, I again bought a book. Again, I got for 40. Again, you bought for 60. Everything is same again. You ask me, how you are getting? There one person is there. That fellow is selling only for 40 because of wholesale. Listening? Now, automatically, when the book is same, publication is same, quality is same, everything is same, both should have a same value. But both are having a same value or different value? Answer? Now you tell me, if this be the case, people will stop buying it. A na B na? A is selling at how much? 40. B is selling at how much? 60. You didn't listen to the characters properly. A 40. B. Now tell me, I bought it. A. You bought it. 4 or 5 times you purchased like that. Later you came to realize that there is a lower price available in the market for the same quality, for the same book, for the same publication. Now tell me, people will now stop buying from? Start buying from? Demand reduces for? Demand increases for? When demand is increases for A, price will? When demand for B is reducing, price will? After some time both becomes a 40 or 50 as a case may be. That arbitrage is temporary, he is saying. Are you understanding the logic clearly or not? Same applicable also for stock markets. Two companies which are having similar or same? Similar two companies which are having same? Will necessarily have same value. If both are not having the same value, it may happen because of economic effect. That's called as a arbitrage. Temporarily that will happen. Listening or not? Now compare one from the point of view of shares. There are two companies, TCS, Infosys. TCS, Infosys. Both the companies are in software industry. Same assets, same business. Okay, na? Say both the companies should have a same. Both the companies are having same value, same assets, same business and same EBIT. So both the companies should have a same value. But Infosys is having a higher value, TCS is having a lower. Example. Okay, na? Infosys is having higher value, TCS is having lower value. But it should not happen, but it happened. Now tell me, what people will start doing? Both the companies are same, both the companies are giving same return, same EBIT is also there, but one company is having higher value, one company is having a lower value. When everything is same, people will buy from the cheaper place only. Correct or not? I invested in Infosys, I will get 10,000 dividend. I invested in TCS, there also 10,000 dividend. Now people will go for cheaper place. When I am getting the same return for a lower cost, I will go only for the lower cost area. Tell me, who is having more value? Who is having a lower value? Answer. But both the companies are same in all the aspects. They should have same value, but they are not having. One is costly, one is cheaper. So people will now start falling on each company. Loudly. Automatically demand for TCS will raise. Demand for Infosys will fall. Lower demand prices will fall. Higher demand prices will raise. This fall, this raise one time will offset each other and prices will remain constant and value of the companies in the same industry will be same. That's what the arbitrage concept wanted to tell. Did you understand the point or not? But how this actually works in real life scenario, through problems we have to see. Understood the point or not? Okay. So let us see the concept. First see. So thesis will take 10 minutes time. Later problems will start. Okay, na? See the screen. First, types of arbitrage. Tell me, what are the types of arbitrage? Primary arbitrage, secondary arbitrage. Primary arbitrage means what? Value of levered company will be more than value of unlevered company. Next, secondary. Value of unlevered company will be more than value of levered company. Sir, what is levered? What is levered? What is unlevered? NI approach says that higher debt, lower, because of that higher. So who will get more value? Levered or unlevered? Higher debt means, sir, there are two companies, debt to no debt. Tell me, which company will have more value as per NI approach? Debt company will have more value because more debt, lower KO, higher value. No debt, only KE. Only KE means higher KO. Because of higher KO, value will reduce. So tell me, as per NI approach, which companies will have more value? Levered, unlevered? That's the first case. That's a primary arbitrage. Which arbitrage? Read the notes below. Primary arbitrage. What is the primary arbitrage concept? Levered firm will have more value than? Whenever levered firm is having, not listening, whenever, low, listen. Whenever levered firm is having higher value than unlevered firm, automatically which is a cheaper place? Unlevered or levered? Not answering. Levered firm value is more than unlevered means which is cheaper place, which is a costlier place? Unlevered is cheaper or costlier? Everyone, which is costly? Therefore, I will sell at the costly place and I will buy at a cheaper place. Where is costly? Therefore, when value is very higher, what you have to do? Sell. What you have to do? And buy what? That's a primary arbitrage. See there. See the answer. Shareholder sells in the levered company and buy the shares in unlevered company. Next, secondary arbitrage. Shareholder sells in unlevered company and buy the shares in levered company. Up to here, understood the concept? Like this only you have to understand Modigliani Miller approach. Again, start from the beginning. Point number 1. How many kinds of arbitrages will be there? Number 1 will be? Number 2 will be? Primary arbitrage means what? Value of levered company will be more than value of unlevered company. Then what the shareholder will do? Sell at a costly place, buy at a cheaper place. Means sell the shares of and buy the shares of. Next, secondary arbitrage means what? Value of unlevered company will be more than value of levered company. Which is cheaper? What you have to do? Sell the shares of unlevered company and buy the shares in levered company. This is how you can make your arbitrage gain. Did you understand the point or not? Okay. Next. Sir, what is arbitrage? Riskless gain. What is it? Riskless gain. What is this? Riskless gain. Please see here. Please see here. Example I will give you. There in Nungammakam, a flyover is getting constructed. A flyover or some metro or something, I don't know exactly. Flyover if I am not wrong. Roads were struck. People cannot come out for next 5 days. Example. They can't come out for next 5 days. They can't come. House arrest type. Okay. Essentials like vegetables also not available. Now what I will do is, I will go to some place. I will buy the vegetables worth 1,000 rupees. Since they can't come out, I will take that as an advantage. I will put my vegetable back there and I will sell it for 5,000 rupees. Do you understand my point or not? Now tell me, I am taking any risk? No, zero risk. Buying at a, selling at a, that's all answer over there. Arbitrage, riskless gain. Are you understanding or not? Do you know, if you trade in stock markets, you can understand certain times price of a stock in NSE and BSE will not be same. There will be half rupee, 1 rupee difference will come. Sometimes that difference can also go up to 4-5 rupees. At the time, do you know what people will do? They will take arbitrage opportunity. They will buy immediately in NSE, or if they already have the shares of traded on NSE, they will immediately sell in BSE and get a gain. That's arbitrage. Arbitrage is a process of getting a very bad. Arbitrage is a process of getting a Modigliani Miller also says the same. Do you know what he said? What he said is, companies having same EBIT, same business, same assets must have same value. If the value is changing up and down, that is only temporary. First jump and make the gain. Listening or not? Don't sleep. Not you. Them. Don't sleep. Jump and make the gain. That process of making gain will be completely continuous. It will stop temporarily. That's all. It will go temporarily and it will stop somewhere. Are you understanding the point or not? Everyone in the class answer? Because, sir, you might have seen in your life so many situations where there is a level of exhaustion for everything. When it was very new in YouTube 20 years back, people used to do little amount of stuff on YouTube. Slowly, when the people started getting revenue in YouTube, they started making all the nonsense also on YouTube. At some point of time, a maturity level will reach, arbitrage will be gone. YouTube also started cutting the revenue. Are you understanding or not? Same with the reels, same with the shorts, whatever the nonsense people do. The point what I wanted to tell is very clear. Always you observe in life, arbitrages are never permanent. Are you understanding or not? People, sir, people will do, others will copy, others will imitate, slowly the market will go. At one point of time, cringe it will become. After that, people also hate it. Are you understanding or not? People also really, they will feel obsessed over that and they will feel exhausted. What is going on? The cringe content is going on the social media. People also stop watching that. After that, slowly this Instagram, YouTube will fall. Same happened with Orkut, same happened with Facebook also. Never everything is not permanent. Everything is temporary. A temporariness you should understand properly. Did you understand my point or not? A temporary, adi Vedantam aithe Vedantam, normal aithe finance. But the concept is same. No advantage in life is permanent. Everything is temporary. Everything temporary. VA temporary means how come all this becomes permanent? So therefore logics are very clear. They don't write theories just like that on air. They meant to say that no benefit in life is permanent. Everything is temporary. Clear? All are temporary only. So the point is very clear. Arbitrage will come. Arbitrage will come or not. At that time only make. It will not be permanent. 1,000 years it will not stay for you. Are you understanding the point or not? People became billionaires by using YouTube in 2020 during COVID time. Now revenue also stopped. Are you understanding or not? Why fashion influencers are there? Extremely popular 4-5 years back. Now no one is seeing. Why? All these are examples of what? You have already exhausted that arbitrage. Are you understanding or not? When no one is there on YouTube, there is one person in US called as Mr. Beast. He has done all kinds of stuff. Free petrol, petrol bunk. All nonsense he will do. From where he will get money, I don't know. Sorry, people in India also saw that. They also started doing the same cringe. Doing. After that, everyone copied them. They will go to coconut stall. They will give 1,000 rupees to them. Video. So obviously what will happen after a particular level of exhaustion? Arbitrage will be gone. YouTube also stop giving the recommendation for that videos. The algorithm will reach arbitrage. Are you understanding or not? Like that. You might have seen now. That's why even anywhere I'm not telling about finance. Anything will have a limit. After that particular limit, up to that level, when before you have to do. Are you understanding? And after it is your content also. So therefore the point is very, very clear. Arbitrage is working on the same platform. So tell me, companies having same value, companies having same EBIT, same assets and same business must have same value. If the value is not same, it is only a temporary benefit that is given to you. Make the benefit and come out. How to make that benefit is what we are going to see now. Okay. What is the objective of an arbitrage? First tell me, what is an arbitrage? Young gainer? Risky gainer? Riskless gainer? That's why. See here. What is the objective of arbitrage? See. What is the first objective? Increased profit with the same investment. On same profit with the lower investment. Please read one more time. Increased profit with the same investment. Next. Same profit with the lower investment. First, one last time you tell me. We'll start directly with the examples. Once you do this example, any exam question you will be able to solve. That is guarantee. Because in my book also previously we have done one example. After that study material questions became easy. This is a summary of the entire concept. Okay? Answer. Point number 1. In case of Modigliani Miller, what he tries to tell? Companies which are having same business, same assets, must have. If value is not same, that benefit is only temporary. A temporary period, what you have to do? Tell me. Two types of arbitrages are there. Number 1, primary arbitrage is a situation where the value of is more than the value of. Secondary arbitrage is a concept where the value of is more than the value of. In both the cases, what we should do? Sell the shares of higher valued company, buy the shares of low valued company. When you sell the high valued company, when you sell, demand is reducing or increasing? Selling means demand is reducing. In economics also you don't know. Selling means demand reducing or increasing? When demand reduces, automatically price will fall. So higher valued company price is falling. You are investing your money in the lower valued company. Those lower valued companies prices will raise. After one particular platform, both will equate each other. Value of both the companies will become same. This is the objective. Listening, but understand, selling the higher value, buying the lower value, this process is called as a arbitrage. That arbitrage is having two objectives again. See the two objectives. What is the two objective? Increased profit with the same investment. Same profit with the lower investment. I should get increased profit with the same investment level or same profit with the lower investment. How to do that is a subject matter of discussion. Before that, please copy this. Very, very important. Copy this. I really mean to say, once you do this, any study mat question you can do. Copy down this example first. Completed writing the question? Shall we? Okay. Now see here. First tell me one question, do properly. Next reverse question we will do together. See there. First, how many companies are there? Two companies are there. Okay. Two companies, one is unlevered, another company is levered. What do you mean by unlevered company? There is no debt in their capital structure. Levered company, debt and equity are there in their capital structure. As per primary arbitrage, first you tell me value of which company should be more. That's why you see there, answer also I gave you, value of S limited is how much? Value of B limited is how much? You need not calculate anything. Yeah, I calculated all numbers and I have given here. So just observe the numbers properly. What is the value of S limited? What is the value of B limited? Levered company is having more value, unlevered company is having more value. This is a primary arbitrage question or secondary arbitrage? How many shares I am holding in the company? Which company I am holding? Levered means which company? B limited. What is our target now? What we have to do? Sell the shares in B limited and invest in the A limited. Repeat the statement again. Sell the shares in B limited, invest in A limited. Sell B limited, invest in A limited. Understood the point or not? Okay. Now first, identification of arbitrage. Don't write. From here, no need to write. Main answer only you copy. Okay. First, identification of arbitrage. Read the identification of arbitrage. B limited is which kind of company? What is the value? 52 lakh 50,000. S limited. What is the value? Read. Since value of levered company is more than value of unlevered, this is a primary arbitrage. Shift is from levered to unlevered. Sell in B limited by investing in S limited. Everyone understood the concept clearly? One by one you tell me. First one. Question comes like this in exam. Print question will come. So you have to analyze everything. Now tell me first, which company is having more value? Which company is having low value? Where to buy? By selling in. By selling in? Very good. This is the first one. Primary or secondary? Because value of is more than value of unlevered. This is a situation of a primary arbitrage. What are our two objectives we have to prove? Higher profit for the same investment, same profit for the lower investment. Repeat one more time. Higher profit. That is our target. Are you understanding the point or not? Okay. See here. First, what is our first objective? Objective number one, increased profit with the same investment. Everyone repeat, increased profit with the same investment. How to get increased profit with the same level of investment? First, let us see. As I already said, sell the shares of. As already said, our shareholding is how much percent? 10% of total company or 10% of the equity shares are. What is the value of equity in B limited? 22 lakh. In that how much percent we are having? Total value will be how much? From there we have to write down. Please write down the notes. Start writing. How to present the answer in exam? Write down. I will tell how to write. Write down. Point number one. Objective one. Increased profit with same investment. Increased profit with same investment. Increased profit with same investment. Okay, increased profit with the same investment. Shall we continue? Okay, now. Write down. First, step one. Steps to be taken today. First, give me one clarity. Whose value is more, whose value is less? What we have to do now? Shift from which to which one? B to yes. B to yes. Now, Write down point number 1 inside this. Okay, you should only tell what we have to do. Sell the shares in which company? B Limited. Tell me, how much is the total share value of that company? 22 lakh 50. Don't write 52 lakh 50. 52 lakh 50 is what? Total value. You are having 10% in total value or 10% of shares. Therefore, you can sell only the shares. 22 lakh 50,000 into how much percent? 10% value. 2 lakh 25,000. Number 2, borrow personally. It's a personal borrowing. Borrowing personally. Underline. Below write down. How to borrow? How much to borrow is a question. Okay, na? 1 second, please. How much to borrow is a question. Okay. So let us understand how much to borrow. First, tell me the point. What is the debt in? What is the debt in the levered company? Answer. What is your shareholding? That much amount of loan. Why? I will tell the reason. First write down. Debt of levered company into percentage holding. Now you should tell what is the debt of levered company. See the question. 30 lakhs. Into what is the percentage holding? 10%. Tell the value how much? 3 lakh. This entire amount is how much? Total amount is 5 lakh 25,000. Number 3. Invest rupees 5 lakh 25,000 in Yes Limited. First, I wanted every one of you to answer what we have done today. Step by step, tell me. First, what we have done? Why you are selling the shares of B Limited? First, tell me the reason. Value of levered company is more than value of unlevered. So, sell the shares in levered company. How much is my shareholding? I have 10% in total company or only in shares. What is the total share value? In that, how much percent we need to take? Therefore, it came to how much? That's how we got the 2 lakh 25. Later, what we are doing? Borrowing personally. Personal borrowing we have to make. How much percent? Debt of levered company into your percentage of holding. So, how much? 10%. How much it came? 3 lakh. Why we have to do? At the end, I will tell you. First, to do the problem. Exam the question comes, first you should solve. They don't ask whether you know the concept or not. First, you should know how to solve the problem. Understood up to here? Next, entire money. How much money you have? What you have to do with that 5 lakh 25? Invest in which company? Now, step 2. Step 2. See here, like this we need to write. Cash flows in future. Keep the heading. Cash flows in future. Cash flows in future. First, use this and tell me. Okay, na? Nothing more required. Basic knowledge required. Answer one by one. You invested your money in which company? Bad answer, everyone. How much you invested? Go to the question once. Go to the question. What is the return on equity? I mean the KE. You invested how much? That means on your 5 lakh 25 company will pay you how much return? 50. That's a cost to company, means that's a return to you. Correct or not? How much percent? 5 lakh 25 into 15%, some value will come or not? Write down. Return on equity investment in Yes Limited. 5 lakh 25,000 into 15% value, please. 78,750. Correct? Tell me now. You got this 78,750 with your full own money by taking loan also na? Answer. That means in this 78,750, every rupee does not belongs to you. Correct or not? You have to pay back the principal and you have to pay also the interest. Right now. Minus interest cost. minus interest cost. Tell me, how much we borrowed? At what percent of KD? Hey, 10% is your holding. KD is also 10%, huh? Sorry, I didn't see the question. So tell me, how much is the interest you have to pay? 30,000. So now tell me, what is the net gain because of doing like this? 48,750. 48,750. Okay, now up to here, everyone? There is no place there. No. There is no chair vacant. No chair. There is one. But it is very difficult for him to come inside. Huh? Can you go there? Sir. Manage. How will you manage, bro? Both will sit in same chair. Huh? Bro, you can come. Hello. You take this chair, sit there. Take this. You will manage, huh? Sorry. Both will manage. Come. Then why you ask her to change? Now she be like. Then why you ask? One Bangladeshi cricketer photo will be there. No, I should not say that. Then why you ask me to change? So let's continue. See there, return, one second. Cash flows that you get in future. Return of equity investment in S Limited. So please tell me, how much is the return you are getting because of your equity investment in S Limited? 78,750. Next, interest cost 30,000. What is the net return net gain you are getting? Please answer properly. Everyone, listen carefully. What are the two companies in the picture? S Limited, B Limited. Sir, I am marking the shifted company. To which company you shifted, I am marking that. Listening, huh? Now please tell me, listen and tell me, how much is the investment, own money, investment you kept when you are in B Limited? Properly tell me. Very good. For your own money, what is the return on equity it is giving? What is the KE of that B Limited, yeah? What is the, others calculate, don't see. What is the KE of B Limited? 20? 20% on your investment, 2,25,000. How much? 45? Very good. Now I shifted to which company? Huh? How much own money you invested? 5,25,000 or 2,25,000? 2 lakh? 48,750 interest cost is there, already deducted. So how much you got? How much excess you got? 3,750. Ade same investment, higher profits, objective has been settled. Everyone understood the concept clearly or not? Hey, answer, everyone understood? How many objectives we have done now? One objective we have done. Reasons, everything you keep away here. This is not the time to learn about the reasons. A lot of time will be taken to explain why you are borrowing. All these questions will take a lot of reasoning. If time permit, after this I will explain. As of now, the procedure everyone understood. Huh? Tell me the procedure. First, what we have to do? First, sell the shares in which company? Next, borrow personally. How much amount we have to borrow? How much amount we have to borrow? Total debt in the levered company into percentage of your holding. That much amount you have to borrow. How much amount is there in your hand? 5,25,000. What you will do? Put in dustbin, investor. Invest 5,25,000. In which company? S Limited. Total return you get is 78. But in this interest cost you have to reduce. This is your own capital's return. Which capital return? Own capital return. So own capital 2,25,000, 2,25,000, 48,750, 45,000. Everyone understood the concept? How much excess return we got? What is our objective one? What is our objective one? With the same investment. How much I invested before? How much I am investing now? What is my return before? What is my return now? I got an increased profit with the same investment or not? Objective 1 has been satisfied. Now we are going to see the objective 2. Okay, copy down. Up to what you have copied? Step 1, step 2 over. Step 2 also over, 48,750. Just you need to copy the conclusion, right? If you say, okay, we'll go to the next concept and do. Which objective we completed now? Objective number 1 we completed. What is objective number 1? Increase the profit with the same investment. Now we are going to see the same profit with a lower investment we are going to see. Shall we? Let us begin. Write down. Objective 2. Same profit with a lower investment. Sir, everything is same also here. Same profit with low. Sir, see here. What is the first question? Sir, why should we borrow? Sir, borrowed. Why should we borrow only 3 lakh? All these questions also have answers. But I am not interested to explain now because time is not permitting me to tell certain things. But those are very interesting observations. Sir, why we should borrow all these things? But still, procedure you first understand. If time permits, at the end I will only discuss about that. Okay, na? Sorry, okay. Next, what is the next one we are going to do? Please explain me. Adi, please keep the heading. Same profit with lower investment. You kept the heading already? Write down. Step 1. Steps to be taken today. Steps to be taken today. Okay, steps to be taken today. Sir, first 2 steps are same. I mean, today, the first 2 steps are same. What is the first step? Sell the shares in which company? Be limited. How much? 2,25,000. Number 2 is borrow. How much percent you have to borrow? What is the total debt in the other company? 30 lakh. Into what is your percentage of holding? 10%. How much? 3 lakh. Okay. What is the total available amount? 5 lakh 25,000. But don't invest everything now. Okay. Step number 4. Invest. Invest. Underline that below, write down. Invest. Equity value of unlevered company into percentage of holding. That much only you should invest. Tell me, how much equity value of unlevered company? Please see there, what is the equity value of unlevered company? 50 lakhs. Into what is your percentage of holding? 10%. What is the value? 5 lakh. Sir, what you will do with that extra 25,000? I will make paper boats. None of our business. Model tries to prove what? With a lower investment, we are giving same profit. That I wanted to prove. Remaining 20,000, what you will do? How would I know? Are you understanding or not? You do whatever you want. Yeah? Make paper boats, distribute to people, become Mr. Beast. Who stopped you? I am talking that 5 lakhs, instead of putting 5 lakh, with the 5 lakh only, I will bring the same profit what you got. Next, continue. Future cash flows. Fast. Secondary arbitrage we have to solve. Future cash flows. What is the future cash flows, sir? One by one tell me. First, what I will get? Everything I am only writing again. Return on equity in which company? Yes Limited. Tell. How much I invested? 5 lakh. Into how much percent? KE how much? Yeah? Tell the value. 75,000. Okay. Now, tell what will happen. Second case. Interest. Why interest we have to pay? We borrowed money. How much money we borrowed? 3 lakh. 3 lakh into at what rate we borrowed? 10%. Tell me. How much? 30,000. So net, how much we got? 45,000. Now write down. Conclusion. S Limited, B Limited. Tell me, what is my investment in S Limited now? Your money, your money. Don't tell about loan money. Yeah? We already deducted interest there. Which, how much? 2,25,000. Previously, in B Limited also, 2,25,000. Okay, 2,25,000. Sorry. How much? 2 lakh. Because 1 minute, 2,25,000 in B Limited, but S Limited I did not invest 2,25,000. Invested only how much? 2 lakh. Because instead of 5,25,000 investment, we invested only how much? 5 lakh. That means in that 5 lakh, 3 lakh is the loan amount is there. 2 lakh is my own money is there. 25,000 of my own money I did not even invest. I will use for some other purpose. Now tell me, what is my return that I am getting out of this 2 lakh? 45,000. Previously also on this, how much I used to get? That means I am getting a same return for a lower investment. This is also proved. This is what arbitrage wanted to tell. How many objectives we have satisfied and completed now? Primary arbitrage or secondary arbitrage? This one, primary or secondary? Let us do the same for the secondary arbitrage. Okay? Oh, you are standing? Doubt? No place. Come here. I will show you place. Sir, continue. Please copy this example first. We will also do for the secondary arbitrage. Copy down fast. कुर्सी पर बैठिए. Where you will go? You can sit there. A break I will give in another 15-20 minutes, 45 minutes, 50 minutes, 1 hour. Write down the question. Sir, make it fast because secondary arbitrage also, if you do, seriously I am telling you, we have done with 90% of this area. You will be really in a safe situation once you do this. Shall we continue? Uh, have you written the question? Okay now? Shall we start? Okay. Sir, once this is completed, we will take up a break. Please listen. Just give me 10 minutes time, we will complete all this area. Okay. Now which arbitrage we are going to see? Which value will be more, which value will be less? Unlevered value will be more than what? Therefore, sell the shares of unlevered company, shift yourself to the levered company. Shift yourself to the levered company. Okay. When you are shifting yourself from unlevered to levered, you are jumping into which kind of company? Debt having company. Therefore, instead of borrowing in that company, what we have to do, let us see. Listening or not, everyone? See here. We will invest. So, first one, write down. What is the objective number one even in this case? Increased profit with same investment. First write down. Objective one. Increased profit with same investment. Okay now? Shall we now answer my question? Point number one. First, step number one, write down steps to be taken today. Have you kept the heading of objective one? Next one, steps to be taken today. First tell me, which company we are selling and which company we are buying? We are selling the shares of unlevered and shifting ourselves to the levered. Write down one by one. First one, sell the shares in J Limited. J Limited or yes Limited? Y Limited. J Limited. Sell the share. Don't copy. Sell the shares in J Limited. I am just putting that to see the numbers, not to copy. Okay. Sell the shares in J Limited. First, see the question and tell me. Don't see the screen. See the question. What is the amount of shares in unlevered company? What is your shareholding? What you have to do that? Buy or sell? Sell. Write down. In the brackets, write down. 60 lakh into 10%. 6 lakhs. First, give me one clarity. You are jumping from which company to which company now? Levered to unlevered, unlevered to levered. In unlevered company, what is the wealth? 60 lakh. Okay. In that 60 lakh, how much is your part? 10%. Okay. You sold it. How much amount do you have in hand? Now you are jumping in which company? That levered company, when you invest, don't invest only in equity, because that company is not just having equity, that is having both equity as well as debt. Therefore, you should invest in both. That means your amount should be invested in the same proportion. Your amount should be invested in the same proportion. Now, please see the question. Levered firm you see. Levered firm. Okay, na? In the levered firm, what is the debt? Levered firm, what is the debt? What is the equity? No. What I am asking is, see there. One second. See the, no problem. Debt is how much? Equity is how much? Equity how much? Means what to understand? In 55 lakhs, how much is a debt? How much is the equity? In 55 lakh, how much is a debt? How much is the equity? That means totally how much is the total value? In this, how much is a debt? How much is a equity? 5 lakh is a debt. 50 lakh is the equity. What I want is 5 lakh divided by 55 lakh. 9.09. Or tell me this way, 5 divided by 55, 50 divided by 55. Like that we can write or not, everyone. So total 55 is divided in these parts. Correct? Okay. Now tell me, 5 divided by 55 means 5 divided by 55. 1 by 11. Correct? 1 by 11. Next, technically this will be 10 by, from this what you have to understand, denominators are same. It is a ratio of how much? 1:10. That's what I wanted to explain. It is 1:10. Again I repeat, tell me, which company you are shifting? From which company? You are shifting to which company? Levered, unlevered company, equity, debt, only equity. You are shifting to, very bad, you are shifting to, what is the debt equity of a particular company? What is the debt? 5 lakh is the debt, 50 lakh is the equity. And what is the ratio? 1:10. And 11 rupees. In every 11 rupee, how much is the debt? 1 rupee. How much is the equity? Your money also should be invested in the same ratio. You understood the point or not? Tell me, how much money you have now? 6 lakh. Divide it into 2 parts. Debt, equity. 1 by 11 of 60 lakh. Sorry, 6 lakh. 10 by 11 of 6 lakh in the equity. Value please. 545. 0.45 leave off. I will give you. 5 lakh. 45,000. That's all. Copy down this. That I have done roughly now. You copy down this way. Okay, completed? Sir, first one tell me, which company to which company we are shifting? Unlevered company to levered company we are shifting. Unlevered company to levered company we are shifting. That means from a no debt company to which company we are shifting? Debt company. Therefore, you should invest not just in the equity, you should invest in both debt and equity. This is how I am explaining, but logic is not that. There is a lot of logic behind that. From the exams point of view, I am telling how to remember the answer. Clear or not? Okay. Now tell me here, please. Just have patience for 2 minutes, we will complete. First tell me, what is the step number 1 we have done? What are the steps to be taken? Summarize and tell me. Sell the shares in unlevered company. Which company? J. How much is your how much is the total shareholding? In that, what is your percent? How much is the amount? Very good. Everyone understood up to here? This 6 lakh has to be invested in debt and equity. In what ratio? In the ratio of that levered company. What is the ratio of that levered company? 1 by 11, 10 by 11. How much? 54,000, 545, 5 lakh, 45,000, 455. Sir, up to here everyone understood? Now you apply this and answer. Write down number 2, cash flows in future. Cash flows in future. Cash flows in future. Now answer. Cash flows in future. Tell me, if you are investing your money in which company? Levered company lo please see the amounts given there. Levered company lo see the amounts given there. How much is the KE of that levered company? How much? Very good. Tell me first. Write down A. Return on equity. Tell me how much you invested in equity? 45, 455 into how much percent? 14. 76? 364 point something here we get. 360? Then 364. 76,364. Okay, this is a question, right? 14%. Okay, 76,364. Okay. B. Sir, you are getting only equity return. You are also getting the interest return. Interest we have to pay or receive. Why we receive? We have invested 54,445 545 into what is a KD? Tell the value. 455. Value please. What is the return you got totally? 81,000. 819. So copy down up to here. 81,819. Okay. So now lastly comparison. Third one. Comparison. What are the two company names? Y Limited, J Limited. Please tell me previously what is my investment in Y Limited? Answer how much? Now also invested how much in J Limited? What is the return I am getting in Y Limited? 6 lakh into KE. Calculate. Yeah. KE how much in that other company? KE in the first Y Limited KE 12.5. 6 lakh into 12.5. 75,000. Now you are getting how much? 81,819. Tell the difference. 6,819. This is the increased profit for the same investment. That's how the objective one has been settled. Sir, we have done for primary arbitrage, secondary arbitrage. Asal understood what we have done, everyone? Last one. Secondary arbitrage, which objective we have completed now? What is the first objective? Increased profit with the same investment. 2 minutes. Shall we complete the secondary arbitrage objective 2? With that all will be completed. You practice the problems at home. Okay, na? All questions will be in the same way. Write down. Keep the heading objective 2. Same profit with lower investment. Same profit with lower investment. Steps to be taken today will be same. Write down. Step 1. Steps to be taken today. Steps to be taken today. Okay, shall we continue? The only difference I will tell you. Tell me, what is the step 1? Write down. Sell shares in J Limited. J or Y? J Limited. Okay. Sell shares in J Limited. Tell me, how much we have to sell? Same, yeah. 60 lakhs into 10%. Tell me how much? 6 lakh. Next, very, very important second point. Write down. Invest in. Which company we have to invest? Y Limited. Which gives 10% of ownership. Means previously in the unlevered company, how much is your holding? Answer. one small observation, everyone, please don't make mistakes in this observation. Previous question, I mean in the first objective, how much is the value? 10% is how much? How much? 6 lakh. You invested in the debt and equity of that company, correct or not? What is the total capital of that other company? See there, what is the total value of that other company? How much lakhs? 55 lakhs. So you invested how much? 6 lakh. 6 lakh on 55 lakhs is 10 more than 10 now we are not investing more than 10. We are investing exactly 10%. How much? 10%. Okay. Right now. Invest in Y Limited, which gives 10% ownership. Tell me, what is the total value of that company? 55 lakhs. 55 lakhs. Okay. Now listen carefully. 55 lakhs is a value. Okay. See the question and tell me what is the component of debt in that particular capital structure. Answer? 5 lakhs. Equity? 50 lakhs. Totally it made how much? Same. See here how to do. Directly you can see there. Write down. Division of requisite amount to debt and equity. Division of requisite amount to debt and equity. Or I can write this. Let us write together. Division. 2 branches you make. First debt, second one equity. Sir, in this 55 lakhs, how much is the debt? In that 5 lakh, I will invest how much percent? 10%, which comes to how much? 50,000. Equity, 55 lakh. 50, sorry. 50 lakh. In this 50 lakh, I will invest 10%, which comes to how much? 5 lakh. Tell me, I sold worth how much? 6 lakh. But I am investing only worth how much? 5 lakh 50,000. And lower investment or higher investment? Lower investment. Next. Cash flows in future. Please write down number 1. Return on equity. How much I invested? 5 lakh. Into how much percent? 14%. Right, don't just copy. Fastly do. Tell me what is the answer? 7,000. How much? 70,000. Number 2, interest. How much I invested? 50,000. What is the KD? How much I will get? 5,000. So totally how much is my return? 75,000. Conclusion. First company, which company? J Limited. Next, Y Limited. Babu, please tell me, previously I invested how much amount? 6 lakh. Now I am investing how much? What is my return previously? 6 lakh into 12.5. How much? 75,000. Now also I am getting how much? 75. I am getting a same return for a lower investment. Everything is completed. These are capital structure theories, like concepts. So understood the concept clearly, everyone in the class? Done. So let us do one thing. 90% of all this area is completed. Let's not waste so much time on capital structure. We have to do the capital budgeting also. So what I will do is, please listen. Up to Modigliani Miller, all the concepts completed. Understood everyone? Yes, only the concept of tax impact and other things I will keep in my YouTube channel directly. So you can visit to that video and listen. We will go to the capital budgeting. Let's not waste time only in one chapter. Yes, concepts are same. Just I will analyze with one problem, the impact of tax. How tax will impact capital structure problems. One video I will keep that. Just listen to that and complete. Yes, clear? Main substantial 90% of the portion. Everyone understood clearly? Yes, sir, whatever I can do in a revision class, including the concept, I try to explain. But don't ask why borrowing all this. Just remember the procedure and do that for the examination. This is not a regular session to explain each and every concept. It will take a lot of time. Concept everyone understood clearly? So tell me, how many kinds of arbitrages are there? Number 1 will be? Number 2 will be? Tell me, primary arbitrage law, what we will do? Shift from levered to unlevered, unlevered to levered. Levered to secondary arbitration, unlevered to levered. Next one. In any question there are how many objectives? Two objectives. Number one will be increased profit with same investment, same profit with lower investment. Both the answers we have to do in the examination. Complete this answer. Everyone understood the concept clearly? With this, we completed all the core areas for the revision for the chapter Capital Structure Theories. Okay. Please come after taking a break. It's exactly 10:20. I said I will leave 10:23. It is 10:45 or 10:50. We'll meet again. We'll start with capital budgeting balance portion. Okay. Because there are three concepts in capital budgeting which are left in the last class. Those we will complete first along with the problems. So the second part of the class, we are starting with the last part of capital budgeting, the part number 2, wherein we are going to complete the balance portion which was pending in the last session. Okay. So please open the study material. There are three concepts we have to cover today. One is disparities. There are two types of disparity concepts. One is life disparity, another one is the cash flow disparity, and third one is capital rationing. What is the concept? Capital rationing. These are the three areas which we have to cover in the today's session. Okay. So okay, now first let us start with life disparity, cash flow disparity, and capital rationing. These are the three areas which we have to cover. Before going into anything else, first let me cover the concept of what? Capital rationing. Okay. See there. First thing, point number 1. Sir, everyone please participate. From now another 1 hour 20 minutes. Sorry, 2 hours 20 minutes. Concentrate properly. We will complete entire capital budgeting. Are you listening or not, everyone? Yes, sir. So it takes around 2 hours to 2 hours 20 minutes to complete this particular area, such that you will get a full confidence on this topic. Later your practice will be working well. That's all. If you practice well, you will get good marks. Listening? Just I will tell you what are all the concepts are there and how to present the answers and what are all the questions that are expected. Practice problems you have to do. Shall we start? See the screen. What is the first concept we are going to start? Capital rationing. Okay. Now see here. What is the name of the concept? Capital rationing. How this capital rationing works? Let us now try to understand. The word ration shop you might have heard, na? Literally from there only this word ration came. Ration means distribution of limited resources to large group of people is called as ration. Okay. Distributing a limited resources. Resources are limited, but the people taking the resources are unlimited, more. Therefore, distributing the limited resources among more number of people is a concept of capital ration. Is a rationing. Here, what are rationed? Goods are rationed. Rice is rationed. Amounts are rationed. That's why this is called as a capital rationing. Capital rationing is a concept of distribution of limited resources between multiple projects. Is called as a capital rationing decision. Okay. See here. I will show you one example first. Yes, see here. Rather than writing a new example, I will take the existing example. You can understand well. First everyone see here once, please. Tell me, First point number 1. See the screen. First one. What is the capital available with me? 100 crores is the capital available. Now tell me. This capital 100 crores. I have 3 projects in my hand. What is the project 1? A. Project 2 is B and C. 3 projects are there. Project A requires an outflow of how much? 100. B requires outflow 50. C requires outflow 50. Okay. Now listen carefully. A is giving a NPV of how much? B giving a NPV of? C giving a NPV of? Now answer number 1. Who is giving highest NPV? Answer. So invest our money in which project? Is a wrong decision. Do you know why? Reason is very clear. NPV, if you observe clearly, 50 NPV I am getting, okay, for an investment of how much? 100. But here 30 NPV I am getting only for an investment of how much? 50. Answer, sir. C also same. Now answer my question. Rather than taking a project A, is it good to take up B and C together? Yes, sir. If I take up 2 projects combination B and C, how much I need to invest in A? Sorry, B? 50. C? 50. Total? 100. What is my total NPV? 60. Total NPV? 60. From this what you have to understand? If I invest 100, BC is giving me 60. Yes, BC giving me? 60. But A is giving only how much? 50. It is better to ration your amount to A na, to B and C. B and C. That's the concept of a capital rationing. Capital rationing means limited resources are available. Allocating them to the best projects is called as a capital rationing. Another important observation, number 2. This is one. Number 2. Whenever you wanted to select the project, out of 2-3 projects, the most viable method is profitability index, not NPV, not the NPV. Sir, NPV is the Maharaja of capital budgeting. Shall I tell you one thing? See here. Point is, NPV positive, negative will tell whether the project is a viable project or not. But 2-3 viable projects, which one to select? Profitability index is useful. Do you understand that? Tell me, what is the NPV of project A? 50. Let us say it's not 50, it's a minus 10. As a decision making loan, it will not be there. Why? Why? That's the point. NPV first helps us to understand whether this is a viable project or not. Once we feel that this is a viable project, then we will compare with the other positive NPV project. So tell me, NPV will be used to check whether a project is viable or not. But whether project is to be selected among 2-3 projects or not depends on profitability index. So now tell me, in this case, NPV selects which project? Answer. But that will give a that will give a right benefit, lesser benefit. Which will give more benefit? That means lower NPV projects are selected. What projects are selected? Lower. So NPV positive means it's a viable project. But when you wanted to compare one project among all, then NPV is not a right method. What is a right method? Profitability index is a right method to compare. Now see there. Profitability index you calculate. Tell me, what is the PI formula? Discounted inflow by discounted outflow. What is the discounted inflow? Answer, sir. Divided by outflow. 100. How much is the PI? 1.5. Next one is 1.6, 1.6. Now tell me which is better. That's why B and C are selected. First point, everyone understood clearly. Whenever capital rationing question comes in exam, project selection should be on the basis of what? NPV or profitability index? Understood the point up to here clearly? Everyone in the class? First copy down this basic example. After that directly we will go into the study material questions. 2 questions are there in the study material we will solve. Completed writing? First tell me, whenever a capital rationing question comes in exam, what model we have to use? Profitability index, not the, now listen. Copy down up to here. Next one. Please listen, one important observation will come. That main game changing in this particular area in the exam. See here. Projects are of two types. Divisible projects, indivisible projects. Tell me, what are the two types of projects? Divisible projects, indivisible projects. Sir, what is a divisible project? What is a indivisible project? Please see the screen. Shall we? See here. Capital available is 100 crore. Capital available is 100 crore. There are two projects, A and B. Capital required for A 60. Capital required for B is 50. Capital required for B is 50. Now you answer my question. Sorry, this particular project is giving me, say for example, 40 NPV. This is giving me an NPV of 30. This is giving me an NPV of 30. Okay, now tell me. One project, first tell me how much money I have. Everyone? 100 crores. Now tell me the PI. Tell me the PI. How to calculate PI? How to calculate PI? Discounted inflow divided by discounted, sorry, NPV 40 means what? What do you mean NPV 40? Over the investment we got an excess of how much? 40. Disky will be how much? 100. Disky will be how much? 100. Disco is how much? 60. So NPV is how much? 40. Like that you need to understand. Okay, now how much? Next one. 1 point. That's what I mean. Both are having the same PI. 6, 7. Which one? A 1.67. Okay. 1.67. Sir, tell me. Hey. 1 minute late. How much is the investment? How much is the investment? Tell the calculation for NPV. Disky minus disco. How much is the NPV? What is the outflow? I am asking what is the disky. Tell me how much? Disky equal to how much? Now tell me. 100 is the disky. What is the outflow? Now I am asking you how many times 100 divided by 60. Adi, tell me. 1.67. What is the next one? Adi, 1.6. Okay. Now tell me. Which project should be given rank 1? Which project should be given rank 2? Now answer. How much money is available? How much money is available? How much money is available totally? 100 la. First I will put my money in which project? Preference 1 is in A. How much is gone? How much is there with me? But it requires how many? Now the question arises. Whether the project is a divisible project or indivisible project. If the project is a indivisible project, either open one project or don't open at all. Because either put 50 crore and start the project or don't put anything. With the 40 crores you can't do anything. Do you understand my point or not? You have to construct a flyover. You have to construct a... it requires 50 crore. I have only 40 crore. Half I will construct and leave. Almost edge I will construct. After that you directly jump. Because I don't have money to construct the balance part of the flyover. Right or wrong? These kind of projects which infrastructure companies take are all indivisible projects. All are? All are? Second example, I can manufacture 1 lakh tons of iron and steel. Iron and steel, my machine capacity. But I don't have that much money. I will give an output of only 60,000 tons and I will leave. Can I do like that or not? Yes, this is a divisible project. So projects can be of how many types? Number 1. Number 2. Now tell me, how much money I have totally? In that project 1 is eating how much money? Fully taken. Okay, how much balance is there? Now question arises, whether project B is a divisible project or indivisible project. If it is a divisible project, If it is a divisible project, you can invest in 40 also, you will get 80% of the return also. Tell me, how much is the total cost of the project to be? 50. You are investing only 40 on 50 means how much percent? Loudly. That means in NPV also you will get how much? 80% NPV you will receive. Did you now understand divisible project or not? Indivisible project means what will happen? You cannot start at all. That means you can carry on only one project. Second project not permitted. Everyone understood the logic clearly? Shall we do the problems in the study material? Open the study material directly now. So if you have the page number, let me know in the study material. 7.53. 7.53. Where is it? 7.53. Yes. Be here in this world once, everyone. Don't go to a different world. See the screen. Don't see the study material. See the screen once. Tell me, how many projects are there on hand? How many? How much money is there? See there, yeah, how much money is there? Limited resource or unlimited resource? How you know that it is limited? Total of all the projects is more than 1,20,000. Tell me, project A cost? B, C, D, E, total is 1,20,000 or more than 1,20,000? Available resource is only? We can abundantly invest in projects. There is a scarcity. So we should go for rationing. We should go for rationing. Rationing of rice. Rationing of the capital. That's why the name of the concept is what? Capital rationing. Everyone understood the point? Now tell me. Directly we will invest in order. A, B, C, D, alphabetical order we will come. How to come? We should go by the process of PI. What is the concept? PI. Like what I said, there they have given the DISCI, NPV. What we have to calculate? DISCI we have to calculate. How to calculate DISCI? Outflow investment plus the NPV will be the net inflow. Or you understand the point or not? Shall we do that together? Write down first. Step 1. Calculation of PI and ranking the projects. Calculation of PI and ranking the projects. You are not supposed to copy the answers. You should help me. $50,000, $40,000, $25,000, $30,000 and $35,000. What is the NPV? 15,400, 18,700, 10,100, 11,200, 19,300. Now tell me, first one 65,400, 58,700, 35,100, 41,200, 54,300. Tell me what is the PI? 65,400 divided by 50,000. 1.308 means 31. Round it off to 2 digits. 1.47. Next. 1. Next. 1.37. Everyone got the same answer. Don't copy. Check that. Everyone got the same answer? Now tell me. Tell the ranking first. Rank 1 goes to project number 5. E. Rank 2 will go to project number B. Rank 3 goes to project number C. Rank 4 goes to project number D. Rank 5 goes to project number A. Everyone understood the ranking concept? Okay. Now tell me, which project is first selected? E. So now, write down step 2. Capital rationing. In that, write down bit A. Divisible project. Divisible project. What do you mean divisible project? Invest even 1 rupee is there, na? That project you can invest that 1 rupee also. That means you need not invest in the full project, you can invest also in the part project of that particular company. Shall we start? Don't copy. Yes sir, you are just copying that. Tell me, one by one, tell the answer. First, how much amount is there with me? How much amount is there? 1,20,000. Okay. Now you tell me one by one. First selected project will be what? Write down. Project E. Project E. Tell me. Project E. I want 2 answers from you. What is the outflow? What is the NPV? Outflow is 35,000. NPV 19,000. Okay. Now below write down balance. How much balance capital is available? 80? 85. Did you understand what is the balance? What do you mean balance there? Balance capital. After investing 1,20,000 in the 35,000, how much is available? Next. Write down. Next stage. Which project will be selected? Project B. Tell me, what is the outflow required for project B? 40, 40,000. For that, how much NPV I will get? 18,700. How much is a balance capital available? 45,000. Now, next. Next one, which project we are going to select? Project C. Tell me, how much is the outflow you need to put? 25. Okay. For that, how much NPV I will generate? 10,000? 100. Now I have a balance amount of 20,000. With the 20,000, what is the EBC selected? Next one is what? D. D la, how much is the amount required? But can I invest entire 30? I can invest only how much? 66.67 only I can invest. So NPV also will get only 66.67. I think you understood what is the 66.67. Tell me which project? Project D. Okay. Tell me outflow. How much I can put? 20,000. This is how much percentage of the total? 30,000. I'm investing only 20,000. Means 20 on 30. How much? 2/3. Means how much? Answer sir. 66.67. That you write down in the bracket. 66.67%. So NPV also what will happen? You will get full NPV. 66.67 of NPV. Write down how much? 767. That's all. How much is the balance amount available with you? 0. So hopefully everyone understood the working scale. This is an easy way of answering the question. Okay, without any boxes, complication, schedules, nonsense. If you remove by common sense, if you go, this is the answer. Okay, so tell me, how much is the total investment I kept now? How much? Answer. Below write down total investment. How much? 1,20,000. What is the total NPV that the projects given? 19,300, 18,700, 10,100, 7,467. 55,000. This is the NPV. Understood the point up to here? So now we have done the answer as if the project is what project? Indivisible or divisible? Divisible project. Now we are going to do the problem as if the projects are indivisible. B bit. Sir, first you see here, study material you see here once. See the screen. See, first 5, 2, 3, 4, 1 like that he has first given the ranking given. Listening everyone? Have we got the same ranking answers or not? Yes. After that they calculated 2/3 of the project. We got how much? 56.6. 56.6 sir. Everyone up to here understood the point clearly? Yeah. He has given in thousands 56.6. We got 56.567. That's what he rounded off as 55.6. Everyone understood up to here clearly? Yeah. Now I will ask one question. Properly think and answer. If the project is indivisible, if the project is tell me, what can I do? First, which project you will select? Answer. Next one. What you will do next? After that, you will happily sleep at home. What we have to do? C, can you invest completely? Answer. Tell me, how much you will invest in C? 20? After that, what you will do? You can invest or cannot invest? Everyone? I will ask you a question. I will give you 1 minute time. Think about how the indivisible project has to be answered. Don't see the answers. If you see the answers, don't give the answers to me. If the project is indivisible, how the answer should be? You see the question, no problem. Don't see an answer. See the question. Don't see the answers, just try on your own. Tell me now. Have you done or not, everyone? Okay. Tell me now. See now. One second. I heard your answer. Listen. First point number 1. Please listen. If I take up project E, project B. First tell me project E and B is outrightly selected or not? E and B will be outrightly selected projects or not? Tell me, what is the first project selected? E and B. E and B. Next tell me, if I select project C, tell me, what is the total outflow? What is the total outflow? 1 lakh. What is the NPV that they will generate? 48,100. 19,300 plus 18,700 plus 10,100. Are you listening? Yes, sir. Next. If I don't go for EBC concept, I went for EBD concept. EBD concept. Tell me now. EBD requires how much capital? See there, sir. EBD requires how much capital? 1 lakh? 5,000. I can invest. For that, what is the NPV that I will be getting? 45? 49,200. 49,200. You are taking 20,000, 10,100, I think. You are taking 7467, 7467 is for divisible project. I am asking for indivisible project. Indivisible project, you are taking E, B and what combination you are doing? E, B and D. What is giving? This is giving a NPV of how much? 49,200. Now you tell me, how much capital is available with me? Bad response. Some people are just seeing the screen. What is the total capital available with me? 1 lakh? When the projects are divisible. When the projects are? How to do? We answered. Easy. When the projects are indivisible, problem will come. How? What projects are outrightly selected? E and B are directly selected project. Okay, na? What is the next project available? C. C, though there is a problem. Shall I tell you what is the problem with C? Capital is not allocated properly. Try to understand. 20,000 idle fund is there. But if you invest in D, 15,000 only idle fund is there. Yes, what yes for what yes? E and B put E and B put together, how much money is invested? E and B, see the screen and tell ya. E and B, how much fund is invested? C I invest, how much I can invest? Totally how much fund is allocated? If I have put in D instead of in C, how much fund is allocated? More fund I am allocating in my projects or not, instead of putting an idle fund. Because of that, I am getting a higher NPV or not. Like that you should see when you go for indivisible project. Indivisible project, since fractional investment is not possible, invest in that projects which gives more investment with more NPV. More investment with and the intention is what? We should keep idle fund as low as possible. Are you understanding the point? I will ask you another question. Tell me. E plus B plus A combination you tell. E plus B plus A combination. 1 lakh? So possible or not possible? Not possible. So leave it. Over. Correct or not? That means what are the only two combinations that are possible? EBC, EBD. In that where more idle fund is there. Therefore you should not allocate your money in that. Idle fund is reducing in which one? Therefore that will be selected. That's the answer. That's how they have done the answer also in the study material. See here. This is how you should see. EBD is preferable. Are you understanding the point or not, everyone in the class? So this is how we need to do. Okay? Copy down this answer. I will show you how to present this. Write down. Selection if the projects are indivisible. So whenever the project is indivisible, focus of the student should be on. Whenever project is indivisible, focus of the student should be on. Idle fund should be as low as possible. Such kind of projects you should invest. Have you completed? Completed? Okay. Now we are going into the last area for the capital budgeting called as a ranking conflict. What is the concept? Ranking conflict. The most important area of this particular chapter called as capital budgeting. The concept of ranking conflict. So please keep the heading ranking conflict. So there are two types of conflicts. One is a life disparity, another one is the cash flow disparity, also called as a timing disparity. We will discuss about both of them. Okay. I have one illustration, very popular illustration. That illustration we will take and try to understand first. Okay. Once you understand the illustration properly, that's enough. Exam, any kind of question that comes, you will be able to solve it. Okay. First one. What is the first concept? Which disparity we are going to discuss there? Which one? Timing disparity we are going to discuss. Correct? First one. Disparity number one is a timing disparity. If you want, please copy down the information on the screen very fast. 30 minutes we are going to spend on this, 30 minutes we are going to spend on the next one. Okay, after that 2-3 problems in the study material we will do and we will close. So write down NPV and IRR conflict, disparity number one, timing disparity also called as a size disparity. Please write down the illustration fast. Okay, completed. So this question is taken from the old study material. This question will project the concept of NPV and IRR in its best way possible. That means if you understand this concept, sir, I am not going to explain every point inside this like in regular class, but I will tell you what is the idea behind this particular concept. Okay, I think notes is already there in the Telegram group, right? Capital posting, I think recently I shared. I didn't share that. Capital posting there, I think. In that it will be available. Sir, if not there, leave, I will share. Okay, no problem. I can share again. Nothing will happen. See there. Understand the concept first. See there once. You need not do anything. Why I ask you to write the question is you should know the numbers on your page. If I go like this and ask what is the outflow for the second, inflow for second year means you will say, huh? That's why if the numbers are there with you, it will be easy for you to answer. Clear? One by one, let us try to understand. First point number one. Listen. What is the conflict we are going to see? Timing disparity, also called as what disparity? Size disparity. This is a exact copy paste of the old study material question. Old means 2010 study material. After that, they removed this question. I don't know why. But this is a fantastic question which explains and projects the real meaning of the concept of NPV, IRR, timing disparity conflict. Okay. So let us see the question first. Initial outflow. See the screen. Initial outflow. What is a project X initial outflow? Project Y initial outflow. And the inflows are given for project X and inflows are also given for project Y. Calculate NPV and IRR with an assumption that reinvestment rate is 14%, reinvestment rate is 20%. In both the cases, cost of capital is how much? 10%. This is a question that is being asked. So first up to here, everyone understood clearly? First tell me, what we have to calculate first? What we have to calculate first? Next, what we have to calculate? How to calculate NPV? First tell me. Both the projects are having outflows or not? Inflows or not? Tell me what are all the 4 columns for NPV? Year, cash flow, PV at the rate of how much percent? Last column, PVCF. We'll put the numbers. Project 1, what are the 4 numbers? 31,000, 40,000, 50,000, 70,000. PV at the rate of? Values will come. Lastly, we will get the discounted cash inflow. Minus discounted cash outflow is how much? 1,10,000. Answer what we get is called as what? NPV. That is the NPV of both the projects. First see there. Don't do anything, sir. Let's complete very fast. Concept if I explain, that's enough. You need not write everything. See the numbers first. Understood or not, everyone? What we have calculated? Now you tell me. I'm again going back. How to calculate IRR? How to calculate IRR? What should we do? First we have to assume a rate. How many rates we have to assume? 2 rates. Now you tell me, I will listen. Those 2 rates, how to know? Are they 10, 11, 12, 20, 30, 40? How do I know? Randomly we have to do. Okay? Randomly how many numbers we have to take? 2. 2 numbers we will take and randomly we will do that. Okay, na? Now answer. The disky what you get should be equal to how much? Should be equal to 0, na? The disky whatever you get when you use 2 rates, one rate should be more than 1,10,000, one rate should be less than 1,10,000. Then exactly you will know at what rate 1,10,000 will come. We does yesterday. So how many rates we have to take? 1 rate above and 1 rate below, such that one answer should be more than 1,10,000, one answer should be less than 1,10,000. NPV is a situation where what equals to what? Disky equal to disco. At 1 rate we got more, 1 rate we got less. We want exactly the disco value. For that we have to calculate and interpolate 2 rates and we will calculate the value. Do you remember or not? That also I will only show, don't do. Now first, how many rates I have taken? See the screen. 2 rates. What are the 2 rates I have taken? 20%, 24%. Okay. 20% how much is a disky? I think there is no problem for you to read from the screen. Read. That value is higher than 1,10,000 or lower than 1,10,000? We want how much? Lower. Value to come lower, PV factor has to be increased. So from 20 I increased to how much? 24. How much answer I got? 1,06,796. That is less than 1,10,000 or more than 1,10,000? Now how many answers we got? 1 more than? 1 less than? What we want? Exactly at what rate? What will come? 1,10,000. Roughly I want you to calculate that amount. Calculate and tell. Don't do any other thing. Do only what I ask you to do. For 10% if it is 1,16,000, 20. For 20% it is 1,16,273. For 24% it is 1,06,796. I exactly want how much rate makes it 1,10,000. It will be 20 or 24 or between 20 and 24. 22.66. Okay, 65. Make it 23. Round number. Let us understand easily. Not 22. We are not anyway doing the problem. Just understanding sake we are explaining the problem. 22 points some amount. 22 or 23. Let us take and understand. If everyone has done, I will go into the next one. Tell me. How much is the answer? 22.65. For understanding sake, let us assume that it is 22% as a IRR rate. Sir, first point, everyone understood or not? Everyone in the class? Next, tell me. For project 2, project Y also, what we have to do? Project 2 also, Y also, what we have to do? What we have to do for IRR? 2 rates you have to take. Okay, tell me. Those rates once you take, what answer should come? One project should give more than 1,10,000. One project should give less than 1,10,000. Exact rate will be somewhere between both of them. Correct or not? For that also I have the answer. Don't do anything in the class. Just see here. What are the 2 rates I have taken? 24 and 28. I want exactly how much is the rate. 24 ki 1,12,646. 24 1,12,646. 28 1,06,391. So I need the exact rate. Sir, almost 26% it is. How much? 26%. Almost 26%, like that we can take 23 or 26. Okay. See here. Now you answer my question. You have done with that particular problem. Now I ask you, how many projects are there? First one is project A. A na X? X. Next one is project Y. Tell me, what is the NPV of project X? What is the NPV of project Y? See here and tell. What is the NPV of project X? 36,613. 613. Next project is how much? 31,314. Next. IRR of project X, how much? 22% or 23, whatever you take, 1%, 22% I have taken. Next. 26% I have taken. Now you have to see and answer. Exam la whenever question comes, okay, nothing is said in the question. Up to here you should do and leave. Listening? Exam la 6 marks questions will come. Up to here you have to do and leave. If they ask you to calculate modified NPV, modified IRR, then the procedure should continue even further after this. Clear? I repeat one more time. Don't do mistakes in exam. Question comes like this in exam. Nothing is said. They said analyze the project as per NPV and IRR. What you have to do? Calculate the NPV, calculate the IRR, put a table like this. Listening? Now you tell me. Project X, project Y, 2 types of projects are there. First tell me. NPV favoring which project? Answer. NPV favors X. IRR favors which project? Generally, which project selects NPV, same project should also select IRR. Simply, which project selected by NPV, same project should also be selected by IRR. But in this case, NPV is selecting which project? Loudly. But IRR is selecting which project? There is a conflict between both of them. Both the models are good, but one project is showing, one model is showing the NPV, one model is showing the project X, another model is favoring. So there is a conflict or no conflict? Now we need to break the conflict. If asked in exam only, if they did not ask anything in exam, stop with this. Just you need to tell that NPV is favoring project X, IRR is favoring project Y, there exists a conflict. That's all. Answer over 6 marks. They sometimes give the questions for 8 marks. Then they will ask you to calculate modified NPV or modified IRR or both. Both generally they are not asking. Previously when 100 marks paper FM used to be there, at that time they used to ask 12 marks questions from ranking conflict. At that time, but now they are not asking questions like that. They will ask only up to here, you have to do up to here and close. Clear? Huh? But in study material, latest exams ki 7 marks question came. In that 7 marks question, they asked in examination calculate MIRR. Calculate what? MIRR. What is MIRR? Modified IRR we have to calculate in the exam. So at that time problem will come. Therefore, let us also do a problem on this. Up to here, understood the point clearly or not? Yes, sir. What is our observation? There is a conflict between what and what? NPV favors which project? IRR projects favors which project? There exists a how to resolve the conflict is the next question that we need to do. Everyone understood up to here clearly? Up to here, please copy down. Not up to here, only the results you copy down below. Question you have written, right? Finally, answer you write down. Status of the projects. Okay. Shall we continue further? Okay. See here once. Let me first explain you the logic. After that we can go into the next part. See the screen once. How many projects are there here? 2 projects. What is the first one? Project X. Next one project Y. 2 projects are there. NPV, IRR also given. Now the question begins. See here. One model is favoring project X. Another model is favoring another project number Y. There is a conflict. Why this conflict occurs? This conflict occurs because of assumptions. This project occurs because of assumption. What is this assumption? Listen carefully. Time value of money chapter basics, first chapter in our FM. Okay, whenever we start with FM, with what chapter we start? In that chapter I used to tell one point. Do you know what is that point? Do you remember? Always PV factor assumes reinvestment. Always PV factor assumes. See here, time value of money law, what we said. FV equal to PV into 1 plus R whole power N. Correct? Tell me, what is the formula? FV equal to? Always, whenever you see our time value of money, 1 plus will be there. 1 is the principal, R is the return. Principal and return are reinvested at N rate. That is N number of years. Means you are not just taking the interest, you are adding it to the principal and then you are reinvesting it. So what is the assumption of entire time value of money concept? Principal and return will be reinvested for that means not just, sir, for example, I gave loan to the person, I gave loan to the for 5 years. That means your principal will stay for how many years? Not just principal, any return it is coming is also reinvested for n number of years along with the principal. Did you understand my point or not? From this what you have to understand, PV factor always assumes what? PV factor always assumes what? Reinvestment. Tell me, PV factor represents interest. PV factor represents what? Interest. It's a compounding interest, not the simple interest. What interest? What do you mean compounding interest? What do you mean by compounding interest? Simple question. Interest on the interest component. Interest on the interest component. I have 100 rupee. I got 10 rupee interest. I will reinvest for next year, means you will get interest on 100, 10, 110. In that 110, how much is the interest? That means you are getting interest not just on 100, you are getting interest on 10. That means you are getting interest on interest. That concept is called as a compounding, also called as a reinvestment assumption. Which assumption? Reinvestment assumption. Always remember this. Again I am repeating, please listen. NPV favored which project? IRR favored which project? There is a conflict or no conflict? That conflict has come because of reinvestment assumption. That conflict comes because of what is the assumption of NPV? What is the assumption of IRR? Let us try to understand. Okay, listen. NPV assumes, everyone repeat. NPV assumes. Everyone not repeating. NPV assumes. Reinvestmented cost of capital rate. Whereas IRR assumes reinvestmented IRR rate. Those who attended regular session, at least do you remember those days what we discussed in the class? I shouted like anything. How can you forget? I repeat, NPV assumption is what? NPV assumes that reinvestment will be made at what? Cost of capital rate. Next, continue. IRR assumes that reinvestment is made at IRR rate. Am I clear? Because of this assumption problem, one project is favored by NPV, one project is favored by IRR. Sir, I am not going to explain the full thesis. See here. Once see here. See the screen once. Up to here, everyone understood? Here, up to here. Everyone understood clearly? See here. From here, the notes will start. The conclusion, what is this reinvestment, everything. Full notes. I'm not going to discuss any of these points now. I'm not even interested. I'm least interested to explain all these things now. My main point I wanted to tell is the conclusion. Tell me. Answer my question. What is the assumption of NPV? NPV assumes that the cash flows are reinvested at what rate? Cost of? IRR assumes that the intermediate cash flows are reinvested at what rate? Both are considering same rate at different rate. Because you are considering one rate of reinvestment, he is considering another rate of reinvestment, answers are coming wrong. Correct? When answers will come right? Consider same rate. From that, this disparity conflict will be reduced. Are you understanding the point? That's why in the question I have given reinvestment 14% to 10%. 14? 20. 14 to 20. Are you listening? I will ask one question, answer. Tell me. NPV assumes that cash flows, inflows that are coming every year are reinvested at what rate? What is the cost of capital rate? 10%. NPV assumes that all the intermediate cash flows are reinvested at what rate? Cost of capital rate. What is the cost of capital rate? 10%. Same inflows, IRR assumes that they are reinvested at what rate? What is IRR rate? 22% to 26%. I am taking 10, you are taking 22. I am taking 10. You are taking 22. Both assumptions are right or wrong? Wrong. So therefore, I am taking 10. You are taking 22. Conflict is coming. Let us do one thing. Both of us, let us take 14. Yes, now let us check who is better. Don't take my assumption. Don't take your assumption. Go with one common rate. Yes, what is that common rate? 14. Then you should tell. It should not be my rate. It should not be your rate. Take a moderate rate and see who is better and who is not better. Did you understand the concept or not? Yes, everyone in the class? Yes, shall we do one study material question now? Yes, take the question from the study material. Remaining notes, it is already there in the Telegram group. You can see there. Yes, come to if anyone find the MIRR question, let me know. 7 point? Yes, 7.44. Okay, see here. An investment of, 1 second, listen. NPV, IRR, conflict, concept analysis, everything will be almost taking somewhere around 4 to 5 hours time. Okay, because lot of thesis is there behind it. I tried to explain the summary of that entire concept in 20 minutes. So did you understand what I said? Why conflict arises between IRR and NPV? Because of their differences in the assumption. What is the assumption of NPV? These intermediate cash flows are reinvested at cost of capital rate. IRR assumes that these cash flows are reinvested at IRR rate. Both are having same assumption, different assumption. Different assumption in terms of reinvestment. So let us take not my rate, not your rate. Let us take a common rate. Listening? Okay. Let us start with the problem now. An investment of 1,36,000 yields the following cash inflows. Cash inflows. Determine MIRR considering 8% as what? Cost of capital. Okay. First, answer to my question. Using all these things, can we first calculate a IRR? Can we first calculate NPV and IRR or not? Okay. First calculate. Keep the heading. First keep the heading. Calculation of MIRR. Calculation of MIRR. Which problem here? Illustration number 9. Everyone do along with me. Year. Keep the heading. Year. Cash flow. Balance years. Reinvestment. Maturity value. This is A bit inside. MIRR calculation, this is a bit number A. Okay? Tell me, how many years is the life? Tell the cash flows. 30,000, 40, 40,000, 60,000, 30, yeah? Next. Okay. Now, don't total all. They will do. Okay. Now tell me. From here, participate and do. Don't just copy. What you will get if you do that? First, tell me now. First year ending, how much cash flow we got? You will keep the 30,000 in dustbin or reinvest. Reinvest for 5 years. Balance years are only 4. Only 4 because you are getting the 30,000 today na after 1 year. Life of the project is? You got the 30,000 after? Means how many balance years is there? That you write down now. Balance years. 4, 3, 2, 1, 0. Okay? Next. Reinvestment. Which one? Reinvestment. Is there any reinvestment rate given in the question? Is there any reinvestment rate given in the question? Nothing is given in the question. How much is the cost of capital rate? Take that rate and do, because there is no other rate available in the question. Write down. Reinvestment. Tell me. This, write down. This reinvestment will be made at what rate? 1.08 power 4. 40,000 into 1.08 power 3. 60,000 into 1.08 power 2. 30,000 into 1.08 power 1. 20,000 into 1.08 power 0. Tell me. 1.08 power 4 into 30,000. 40. 815. 1.08 cube into 40,000. Don't copy down the answers. Please do. 50,388. Next. 69,000. Next. 30,000 into 1.08. 20,000. Okay. 20,000. Sorry. 20,000. Now total the maturity value. 2 lakh 587. Do up to here. 2,13,587. Everyone got the answer up to here? Yes, everyone? How much is answer? 2,13,587. Okay. Now answer. I will ask questions one by one. Answer. How much you understood? I should know. Point number 1. How much money you received at the end of first year on hand? Wrong. You didn't receive anything. You reinvested immediately. That's the first one. Very good. Happy? Start again. Tell me. First year project gave you how much cash flow? 30,000. How much you received? Nothing we received, because what we have done immediately? Reinvested. Second year, how much project gave us? Again, anything received on hand? What you have done? Reinvested. Third year, reinvested. Fourth year, reinvested. Fifth year, no reinvestment, directly we will take it along with the maturity value. Did you understand my point or not? Yes, now you tell me, how many years is the life of the project? 5 years. Loudly? 5 years. Very good. 5 years is the life of the project. Now we will ask a question. 0 year, how much we invested? See the question. There it is not there. 0 year, how much you reinvested? Everyone repeat. 0 year, how much we invested? How many years we waited? 1, 2, 3, 4, 5. Fifth year ending, how much we received? That's what we are now going to understand. See here. Present value, future value equal to present value into 1 plus R whole power n. First tell me, today how much we invested? I'm very sorry. 1,36,000. Okay. Future how much we received? This all happened over a period of how many years, sir? Now tell me. 1 plus R whole power 5 equal to 2,13,587 divided by 1,36,000. 1 plus R whole power 5 equal to 4 digits, you tell. 1.57 05. 1 plus R equal to fifth root of 1.5705. 1 plus R equal to, do you know how to calculate for the fifth root on calculator? Do that. I told you in class. Sir, okay. Others are also there. Let us do. First, type the number 1.5705 in calculator. Don't do anything extra. Don't do anything low. Do exactly what I said. Type 1.5705. Okay na? Square root 15 times. Count properly. Don't do anything. Just square root how many times? 15 times. Have you done? Next, minus 1. Okay. Next, how much root we want there? Divided by 5. Divided by 5. Next, plus 1. Okay na? Next, into is equal to 15 times. Count properly. One point 1.0945. So R equal to 0.0945. R equal to 9.45%. Again, others who didn't get the answer, again count this. How to calculate fifth root of 1.5705? First take the calculator. Take 1.5705 on calculator. Bro, it don't work on phone. Calculator is there in phone, I know. Calculator is calculator. Phone la calculator, if it is there, phone can't be called as calculator. So now answer. Type 1.5705 on calculator only. 1.5705. How many times you need to press the square root? 15 times. Above 15 times. Okay. Next, what we have to do? Minus 1 divided by 5. Always don't mug up divided by 5. That depends on the root. Okay. Divided by 5. Next, plus 1 into equal to how many times? 15 times. You are making all Rakshasa Praitnam. But it doesn't work, bro. I am expert in all these. We tried. So, it won't work on phone. Sorry, how much is answer? Completed. So, tell me, how much is answer? 1.09? Means how much is the percentage answer? 9.45%. See the study material, what is the answer for the question? He rounded off to 9. Actually, the answer should be 9.45%. Now tell me, what is the IRR? What is the IRR for this question? Wrong. 9.45 is not IRR. 9.45 is the MIRR. IRR can be any other thing. Are you understanding the point? IRR is not 9.45. IRR can be any number. Listening, we calculated IRR, modified IRR. Modified IRR is an IRR calculated after considering the reinvestment at a different rate. Reinvestment at a different rate. Okay, up to here everyone understood? Okay. Now answer MIRR question. Did you understand how to solve in exam? Tell me what we need to consider. Reinvestment you have to consider. What we need to consider? Loudly? What is the cost of capital rate? What is the cost of capital rate? Here we are calculating reinvestment at a cost of capital rate. That's why we got 9.45. If you reinvest at IRR rate, you will get a different answer. Listening? Yes, sir. One question I will give. Will you do now? I want not to calculate MIRR. I want you to calculate the conflict of interest only. Okay? That means NPV, IRR, conflict only you have to calculate. Study material. Question number 10. I think yesterday you calculated IRR for that already. You have calculated IRR, yeah, already. Calculate NPV then. Question number 10 ki calculate NPV. Have you got the answers? What is the final answer you got in the first case? 25,050. Second one? 15,300. Now prepare a schedule finally. Projects, NPV and IRR schedule. Final schedule you prepare. The conclusion schedule you prepare now. Project A, B, X, Y. Project A, Project B. Left side NPV, IRR. Yesterday you calculated IRR already. How much is IRR yesterday you calculated? 2 IRRs you calculated. 24.26, 21.48. NPV also you calculate. You write down there 25,050, 59,300. Now you only tell me NPV favors which project? NPV favors which project? IRR favors which project? There is a conflict or no conflict? This is the point. There is a conflict. Examiner, they don't ask beyond this. If they ask, there will be a common reinvestment rate. You should take that and calculate. Just to calculate, like that we need to do. Understood the concept clearly? That's all. Write down, there is a conflict. Even if you see the study material answer, you can see the final answer. There is a contradiction in two methods or something. Like that they will give conclusion. Next, the last model for this chapter, keep the heading EAB and EAC. Also called as what? Conflict. Life disparity. Write down. Okay. See here. What is the next question we are going to solve? Life disparity. Okay. Like cash flow disparity, there is another disparity called as a life disparity. I will give an example. See here. Don't write. Just I will show you on the screen and I will explain. Please listen carefully. That's the only thing I require. Sir, with this we are going to close this capital budget answer because all the models are over. After this, the only requirement is practice. Practice as more problems as possible such that you will get a hold and grip over the concepts. Clear everyone? See the screen. What is this concept? This concept is called as a life disparity problem. What disparity? Life disparity. Simply to tell, when you compare the projects, you should compare the projects of a similar life. Dissimilar lives the projects are there, you should not compare them. Simply to tell. Shall we continue? Yes, sir. Easy way of understanding is, you should never compare two things with bigger life and smaller life and tell that this is good and that is bad. Because bigger the life, bigger the cash flows. Smaller the life, smaller the cash flows. Therefore, never ever compare projects of two different lives and tell that one is good and one is bad. Are you understanding or not? Sir, a cricketer with 450, 500 innings, runs will be obviously more than a cricketer who played only for 350, 200 innings. You should not tell first is better and next is waste. That does not mean first is, he's a great cricketer, but you should not compare. The comparison is wrong. Did you understand the point or not? Obviously, I used to tell this example in the class also, if you remember by any chance. So, listen. The problem is comparison like Sachin Tendulkar and Bradman. I told you in the class, na? That's a classic example, yeah. There are two cricketers. One is Sachin Tendulkar, second one is Don Bradman. He is from Australia. One of the famous cricketer long back, 70s, 80s. He is a very good cricketer. Don Bradman is one of the fantastic cricketers. Sachin Tendulkar, undoubtedly, undisputed god of cricket. When you compare both of them, who is good, who is bad, means you should not compare. Reason I will tell you. Don Bradman hardly played for 160 innings. Sachin Tendulkar played for 480 innings. Sachin Tendulkar number of runs is 35,000. Don Bradman runs are hardly 10,000, 8,000, 9,000 runs. Clear? You can't compare. When you compare the runs, who is big? Sachin is big. But do you know what is the strike rate of Dan Bradman? 99.7%. Average. Run rate average will be there. Na? Average is 99.97%. Do you know what does it mean? Almost every match he played, he scored the 100. And almost 100, 99, 100, 99, 100. Like that consistency was maintained. Listening, when you compare Bradman and Sachin Tendulkar, you should not compare. That's the point. Do you know why? Bradman is better in terms of percentages. Sachin Tendulkar is better in case of volume of runs. Volume of runs. Bradman is better in case of percentages. So which is good? Percentage comparison good, volume comparison is good. Question will arise or not. IRR is Bradman, NPV is Sachin. NPV favors Sachin Tendulkar always. Do you know why? NPV will be always targeting on volume. Targeting on? IRR concentrates on percentages. Do you know what is IRR intention? How quick you are bringing back your capital. That's why payback period will be useful to calculate IRR. Which period? Useful to calculate? Loudly? Sir, really, sir? Very really, sir. Shall I tell you why, sir? Yesterday we have done payback reciprocal. Yes, what is the formula? Payback reciprocal, reverse the payback period formula. What is the payback period formula? Investment by cash flows. Investment by cash flow by investment will be rate of return. Ade IRR. Listening? Tell me. There are two projects. Project one. Why two projects? You have written one question. The previous question only you open. Why two projects? Different projects. Take the same question. I asked you to write one question or not. See that. Project A, project B. How many projects are there? Project A, what is the cash flow, sir? 31,000, 40,000, 15,000, 70,000. Next, 70,000, 71 or something. Next one, 40,000, 40,000. Now you see and answer my question. Who is good in, okay, which project is good in bringing inflows very quicker? Answer. Faster recovery is therein. Faster recovery is therein. But bigger volume is therein. Total those cash flows. 30, 70 something you said, na? 1 lakh? 91,000 for which one? X. Other one? 1 lakh? 70? That's why NPV is favoring A, IRR is favoring B. Because a faster recovery, IRR will favor that. Faster recovery. Volumes ni NPV favor. That's why you can see the answer also. NPV will favor the project A, IRR will favor project B. No doubt. You can see the answer also. Understood the point now? So always tell me, NPV favors what? Answer. Volume. IRR favors what? Rate of return. IRR favors the rate of return. NPV favors? IRR favors? Rate of return. Quicker. Best payback period. At a lower payback period, IRR favor that project. Lower payback period, IRR favors that project. Understood the point or not? Answer. IRR says like this. You are like a smashing opener. Come, hit runs like anything. Out at 40 and go, no problem. But in 6-7 also you hit that 40. Or 8 balls, 9 balls, hit 40, 45. If possible, like you are asking 6 sixes and go. IRR says that you are the best batsman in the world. Are you understanding or not? NPV says that don't play like that. It is very dangerous to you and also to the team. Consistently you play, slowly you play, bigger runs you bring, make it 100. Any match when you sit, at least a 70, 80 you hit, you should be one of the most consistent cricketers, make Sachin Tendulkar. That way Sachin Tendulkar is favored by NPV. Do you understand the point or not? Sir, at the end of the day, if you ask me, which model is always considered throughout the world as best one? Obviously NPVA. No doubt, a second debate not there. Because of its sane way of making the assumptions. Listening or not? Because 34,000 runs will show the person's consistency and dedication towards the sport. Are you understanding or not? A 480 innings will not show the match, will show the dedication, will show the attitude, will show the person's dedication towards what he is doing. Are you understanding or not? How good you are in doing what you love is shown only through NPV, not through IRR. IRR will tell that you came, fatafat, 4 hours you played, 30 runs, 40 runs over you went. One person came at 4th hour, stand up to 50 overs. Man of the match will come to whom? That's the point, always. Man of the match means he is the man for that game. Like that, companies also will go not for IRR projects, they go more for the higher NPV projects only. Answer, yeah, everyone. Yes, do you know why? NPV will generate more money. IRR generate percentage. People want to see more money. That money generation will happen only in higher NPV projects. Are you understanding the point or not? That's the point here. Okay. People wanted you to stand. Okay. Sir, all cricketers came. Fatafat, 2 hours, 20 runs went. After 10 overs, all cricketers fat. Match over. Adi better. Consistently you hit 50, 40, 30 like that. Make the score 300. Always anyone wants second. But the point is T20 favors IRR. T20 favors IRR. We don't want your consistency there. Come. All sixes. It should be like highlights. 30 runs you hit. 30 means you are a god today. Man of the match for those who hit 30. Remaining all 10 to 15. You came 3 balls, 15 runs gone. Over. So understand the main idea behind this, all these concepts. Please listen carefully. NPV always favor consistent volumes. IRR favors faster recovery. Faster? But if you observe in that question directly, one project is giving 1,91,000. Another project is giving, you said some 1,65,000 or 70 or something you said. 71. So IRR favors, even though lesser cash flows are there, IRR favors only that person. Why? Because recovery is fast. NPV favors project A because more volume of income is coming. Understood the point? That's how NPV IRR concept. This is a simple summary of what I wanted to discuss. Okay? Or else we can have hours and hours of discussion on practicality of NPV and IRR. In the limited time available, I wanted to explain this. Now we are coming into volume disparity, or we are coming into the life disparity. Life disparity la problem, please listen. Life disparity la problem is, you are comparing two projects of a same life means understandable. You are comparing two problems with a different life, which is not right. You should not compare. Then how to compare? There is one concept called as EAB, EAC. Anything you can call it. What is it? EAB or EAC. What is EAB? Equated annuity benefit. Equated annuity cost. Equated annuity benefit. Equated annuity cost. Okay, na? For example, let me explain the concept. Please see the screen. Observe only those numbers. Suspend doing all other things. Mind means make it clear. Clean slate, listen to the concept. See the screen. Project A, what is outflow? B, project A life. Project B life. PV at the rate of 10%. Blindly can I tell you one answer? NPV favors project A, IRR favors project B. Over answer. First point. Why? project A is giving how much? Opener. How many runs? 30. Adis Virender Sehwag, opening how much? 90. Dhanadana, he hit totally 90 and he completed it. But second workout. Now, did you understand the point or not? So suddenly like a storm you came, you played for 5 hours, 6 hours, so suddenly out. Second person, complete match is there. Slowly he started his game, but momentum once increased, he scored more than you. Live example is there before your eyes. Yeah, understood the point. Now tell me, which is better project? A na B na? We can't tell. That's problem. We can't tell. Do you know why? A you can't tell better because A is a consistent project with a bigger cash flow. B is a faster recovery with a lower cash flow. NPV favors which project? IRR favors? Therefore, there is a conflict again. Now this conflict has come because of cash flows or conflict came because of life? Because you are comparing two projects with a different life or same life? There the problem started. When different lives are there, the problem will begin automatically. Then how to do is a query. Everyone understood? I can tell two methods. First method, examiner they are not asking, but there in your study material. It is there in your study material, but it is not there in examiner. Till today, no question has been tested on that. But I doubt him. Institute never you should believe. What is not tested till then, they will ask in exam. They ICAI style. And moreover, the problem is last attempt they have given lavishly the result. This attempt. So, obviously they will try to control. Obviously they will try. That's how the institute runs. So, since last attempt all of a sudden, like a dam, ching, open, everyone came. Now this time definitely. So therefore, at the time what they will do, if you wanted to make paper tough, what I should ask? I should ask such a question which was not tested till then. Are you understanding or not? Therefore, what they will ask, do you know? Repetitive cycle they will ask. What they will ask? How many of you heard about this? Heard. As a concept understood, we can keep it away. One person. Next. Akasam answer? Yes, correct. 100% right. Do you know there is one concept called as a repetitive cycle method? Which method? Method. That is one model. Daniki substitute EAB EAC. Asal originally EAB EAC concepts are not there. Asal first what is the concept there? Repetitive cycle. What is a repetitive cycle? Let us see that. Please see the screen. Which project is better? Prima facie if you see. Which project is better? A na B na? Answer. BA better. Do you know why? I will ask you a question. 2 years, forget about PV factor. 2 years I done the project A. How much is the total inflow? Answer. By the time you complete project A, I can repeat project B 2 times. For that I will get 180. Tell now, did you understand what I said? How many years is the life of project A? Answer here. What is the life of project B? Can you compare directly? No. When you can compare, bring both of them into common platform. If I would have done that for 2 years, then what will be my cash flow? 90 plus 90. 90 tell me, first tell me, what is the outflow of project A? Answer. What is the outflow of project B? 50. First year how much you got? 30. Second year you got 90. But first year I got 90. Again what I will do? I will reinvest that. What I will do? By the time you complete project A for 2 years, I can repeat my project for 2 times. Now did you understand the logic or not, everyone? That's how you need to. This is repetitive cycle method. Which method? Repetitive cycle is there in your study material. Now don't open. Try it home. Because why I am saying try it home, there is no question. Study material also there is no question. That's why I created question here. Like this it can come. Okay, so therefore this is done on a repetitive cycle. How it will look like? See the screen. See the screen. See. First project X. Project X. See there. Year 0. How much I invested? Sir, if you participate, you will be successful. Or else a repetitive cycle, if asked in exam, like this sound will come. See there. See there. Project X. 0 year, how much you invested? PV factor? 1. Because the same on date. What is the outflow? 50. Tell me, first year how much you got? 30. That you got today na, after 1 year. What is the present value? 27.27. 90 you are getting today na, after 1 year, after 2 years. What is the present value? So what is your NPV? 51.61. What is it? 51.61. Very good. Now I am coming to project B. Sorry, project Y. See here. Project Y, what is the life? Answer. But I am repeating for 2 times. And the first year I will do, again second year I will do. Okay, na? Tell me now. See there. 0 year, how much I invested? Answer. How? What is the PV factor? What is my outflow? How much I will get? How much I will get? 90. What is the present value? I am not stopping there. That's why I am not totaling. Listening? What I will do again? I will repeat. I will repeat by investing how much? 50. Next 50 I will invest today na, after 1 year. So after 1 year there is a present value for that. How much is outflow present value? 45.45. Again I will get how much? 90. Next 90 I will get today na, after 1 year, after 2 years. What is the present value? So total minus 50 plus 81.81 minus 45.45 plus 74.74. Totally NPV is how much? Now you compare 51.61 and 60.7. Who is better? That's why without seeing itself I said that is the answer. Did you understand the point clearly? What is this concept called as? Repetitive cycle, not tested till now in exam. Shall I tell you why it is not tested? Shall I tell you? Super common sense. In this question, how many projects are there? Life of project 1? Project 2? If the project life is 6 years and 5 years, then what you will do? You should repeat project 6 for 5 times. You should repeat project 5 for 6 times. By that time, our time will be given. That is over. You have to do the same question for how many times like this? 5-year project, 6-year project you should repeat for. Sir, can you compare 6 and 5? Answer. Therefore, what you have to do? You should bring 6 years, 5 years into common platform. 6 years should be done for 5 times. 5 years should be done for 6 times. So totally how many times you should do? 30 times you should do. Then you will get the good answer. Now that much time will be there in exam. And that's the reason why they are not giving. If at all they have to give, they will give these type of questions. Max. Sadist, na? 2 years they may ask. If they are sadist or 3 years project, they can ask. 3 years also they don't ask in exam. If at all you have asked, this only will come. Okay. And beyond that they can't ask. It will be an unnecessary issue. It will come in the exam. So they will ask maximum 2-year project and 1-year project. Numbers can change. Concept will remain. Understood the point or not, everyone? This is one way. What is the way in which we followed now? What is the concept name? Which cycle? Repetitive cycle. There is another model. What is that another model called as EAB, EAC? Now tell me. Here in this case, 3 years to 4 years project is given. What we have to do? 3 year, 4 year. Can we do 3 year, 4 year project directly? No. What you have to do? Repeat the 3 year project for 4 times. Repeat the 4 year project for 3 times. Okay. Now we are multiplying and dividing. EAB, EAC divide. Convert every project into per annum terms they will tell. Instead of 3 years, that 3 years project ki NPV you calculate. 1 year how much you calculate? Which is easy or difficult? Very easy. Divided by life. Divided by Adhe EAB, EAC concept. That means another way of understanding. Repetitive model of multiplication. EAB, EAC la division. That's why we call it annuity. Annuity means a division on an annual basis. Understood the concept? Now write down. EAB, EAC. Keep the heading. Have you kept the heading already? Yes, what is the concept you are doing? EAB and EAC. Take question number 14 in your textbook. Take question number 14. Question number 14 means illustration number 14. Illustration number 14. See there? Hey, please do it. Don't waste time. So last question we are doing in this chapter. With this, all the models will be over. After that, just it requires some practice. Do some problems as a practice. You can understand all the concepts. Clear? If maximum possible extent, some big problems in capital budgeting, I will put it on the YouTube also. You can watch. Okay. Next week I will put. Sorry, this week I will put that. First, I have 2-3 targets for CA Inter FM. One a small 1.5 hour theory discussion I will make in the YouTube. That's the first one. And second very important thing is capital budgeting. 2-3 big problems are there. I will try to solve them and I will put there. Okay. But main concepts if you cover now, at least you can practice. Listening? Same concept if I do 5-6 problem, what is the use of coming to the class? Okay. So see there. What is the concept here? What is the problem covering here? Which concept? EAB, EAC. First see the question. R Private Limited is considering modernizing its production facilities and it has 2 proposals under consideration. Expected cash flows associated with these projects and NPV as per the discount rate of 12% and IRR is as follows. Cash flow, project A, B. So many cash flows are given. NPV, IRR, luckily they only have given in the question. You need not calculate anything because their intention is not to make you calculate NPV, IRR. Their intention is to ask you to calculate what? EAB, EAC. Am I clear? Or EAB. Here benefits are given by EAB. Now please see the screen. NPV favors which project? See there and tell. Now you should not just tell A, B. Reason you should tell. NPV favors which project? Project A na B na? Why? Volume is more. Okay na? IRR favors which project? Why? Faster recovery. Do you know why? 20 lakhs ke 7 lakhs first year they got. Here how much I invested? 40 lakhs how much you got in first year? 8. 8 by 40. 5. How much? How much percent? 20% recovered. But take 7 on 20. Here you are bringing 20. There they are bringing 35%. The faster recovery. Over 20 runs you hit. How much I hit? 35 in the first over. Third over out. Do you understand the point or not? Third over out. See there. How many overs I played? 3 overs. That's all. But next batsman, though I started slowly, 8 runs, 14 runs, 13 runs, 12, 11, 10, like that I consistently played. Beyond that I can't explain. Understood the concept clearly? So therefore IRR favors B. NPV favors. Now already they only have given this. There is a conflict. No conflict. Conflict is because of the life. They are equal lives or unequal lives. What we have to do? We have to calculate not equal life. Equal. What we have to do means equal lives. We should either repeat. Fate. We should either repeat or we should either divide. Here we are going to divide a multiplier. Divide. So now please use this and tell. What is the cost of capital? I want only one point. What is the NPV of project A? 6,49,094. First tell me. This is for 1 year over a period of 6 years. Over a period of 6 years. So divided by how much? Wrong. 649,094 is a present value of future cash flows. Future cash flows. Therefore denominator also you should take PVAF, not the life totally. What you should take? Under 12% for how many years? 6 years PVAF you calculate. 4.111. Tell the answer. 1,57,876. Like that, tell me for project B. Project B, what is the NPV? 5,15,488 divided by 3, present value of 3, present value of the annuity of 3. 12% ki 3 years. 2.40 400 402 2,14,623. Okay. Now tell me, project A, what is the EAB? Project A, what is EAB? You can't see the screen and read. What is the EAB? 1,57,870. It is a per annum, it is an annuity. Annuity, equated annuity benefit is how much? 157,876. Second one, how much? 214,623. Which project is better now? Which project is better now? P is better. Okay, na? Now see the answer. See, exactly, have you got the same answer or not? How much answer we got? 157,876, 214,620. The small differences will come because you have taken 4,111. And next one you have taken 2 point. How much I have taken? 2.402. So this is the answer for the given question. So 214,608 and 157,854. Finally, which project will be selected under EAB EAC model? B will be selected. This is the end of the chapter. Capital budgeting. All the concepts are completed. So the big chapter in your syllabus, capital budgeting, is also over. So the next area we are going to start in the tomorrow's session. The first topic we are going to start, capital budgeting, is also over. All the models and concepts are over. Big problems, if any, will do there. So next one we are going to start is the leverages. What is the concept? Leverages we will start. Once the leverages chapter is also completed, then we will be left out with another area called as working capital. Okay. All I will do, first I will start with working capital, then we will be going into leverages chapter, because leverages is a simple concept only, not that great, not that difficult also. First we will start with working capital estimates or working capital management. Okay. So tell me, I'm not leaving here. Listen. First point, everyone tell me, after completion of our 3 days revision, are you all comfortable with the concept, everyone? Yes, sir. Are you all confident at least? Yes, substantial syllabus was covered. Yes, tomorrow's session still there. So we will cover maximum possible extent of working capital estimates and management as well. Clear? First what I will do is 1 hour time I will spend on leverages, at least summary I will explain. After that, whatever the 4.5 hours time that will be available, we will discuss only on working capital estimates, mostly on the debtors management. Clear? Because working capital estimates, 2 points are important there. Very important 2 chapters are there. Number 1 is the working capital estimates. Number 2 is the debtors management. Cash management, inventory management already kept in the YouTube. 45 minutes, small videos. That is more than enough for the exams. So you can do there. Mainly what is not there in the YouTube, I wanted to make them. So in that, the first one will be working capital estimates. Working capital 6 marks question will come from that area. Debtors management, optional chapter. It may come, it may not come. Some items they may give, some items they may not give. But pakka, which question will be there? Working capital estimates, blindly you go, check for the question in the question paper. Definitely it will be there. So therefore, tomorrow first we start with which chapter? Leverages. Okay, let's not leave that. What I will do is, leverages only there are 6 formulae. Correct? Just I will explain the 6 formulae, meaning 1 or 2 problems we will solve, and directly we will go to the working capital estimates or working capital management. Clear, everyone? So with that we will complete the substantial portion of our FM, and there will be some solidifying impact on your preparation as well. Up to here, are you all having a full clarity? Yes, okay, let us again rejoin for the law session again. Split personality style, FM to law, law to FM. Next stage, next batch onward DT. So again split personality, third personality will come. So God's grace. Sir, okay, thank you very much. So see here, in the last session we completed capital budgeting and capital structure theories. So in the today's session we are going to first start with the working capital. Let us complete the concept of working capital estimates. Okay, once that is completed, finally we go into the summary of chapter leverages. So till 12 o'clock I will take only the working capital management. 12 to 1:30 like that I will consider the concept relating to leverages under this particular syllabus. Okay, so let us begin with the concept. Please open your notes. The name of the chapter is working capital management. In that there are 2-3 segments are there: working capital estimates, cash management, debtors management, inventory management, working capital estimates, like that various models are there. You do one thing, at least see the screen. I shared everything in the Telegram group also. Every notes is available there. Nothing was hidden there. All the concepts, all the notes relating to working capital estimates, everything is there in my Telegram channel already. I shared it. So see here. See there. Name of the chapter, working capital management. So in the working capital management chapter, working capital estimates is the first area. You can see here, this is a 10 marks chapter. Generally this chapter totally comes for 10 marks in exam. 10 marks will be divided among 5 different chapters. How many? 5. 5 chapters are there. It is divided among 5 different chapters. So the first chapter name is working capital estimates. A 6 marks question will come from this area. Next one is debtors or receivables management. Chance is 4 marks. Inventory management, cash management, payables management. Chances of coming is very less. But in this cash management there are 3 concepts: general cash estimate, Baumol model, Miller-Orr model. Baumol model and Miller-Orr model, once in every 6-7 attempts they are asking the question. But general cash estimate I am not going to discuss even in the regular classes, because it is governed in a syllabus called as a budgetary control in costing. Which one? Budgetary control. You have budgets and budgetary control chapter in costing paper or not? In that, what is one of the budget we do? Cash budget. A cash budget, a cash general estimate. Estimation is a budget. Listening? So even in regular classes I don't touch that area because there is a contradiction. Already one faculty will come and take the cash budget. If in my style if I explain, a contradiction will come to the student. That's why I never even touch which is already touched by a faculty. The contradiction will come. So therefore general cash estimate never used to touch that, because reason is it is already discussed in an area called as budgets and budgetary control in costing paper. Okay. B and C we will cover. What is the B and C concept? Baumol model and Miller-Orr model. Very important. Important in the sense not that they ask in every examination. Important in the sense logic is very important. Okay. So inventory management is there. Inventory management, what is the concept dealt there? You can see inventory management, what is the concept dealt there? EOQ. EOQ means what? Economic order quantity. You might have seen this in costing paper also. Therefore, I will not touch, but one problem we will do and leave without touching the concept and other things. Okay. So inventory management like EOQ, cash management like general cash estimate, these are all in costing paper already. Okay. So exam ki important are only 2 areas in this chapter. Number 1, working capital estimates. Number 2, debtor. Debtors, if you do exact ditto, whatever are negatives here they are positives. Whatever positives they are negatives in payables management. In the payables, for example, debtor is there. Which one? Debtor. There is a loss of interest. Payables management you will get the benefit of interest. For example, debtor has to pay. He didn't pay. You are losing money for that period or not? Opportunity cost will be there. Loudly listening everyone. Yes, in case of payables, instead of opportunity cost you will have a notional income. Notional income in the case of payables management, like that. Debtors, if you understand, you need not do payables directly, you can do the problems in the study material. So nothing great regarding the payables. Nothing is there regarding cash and inventory. If there is anything in this chapter, 2 chapters are important out of 5. Number 1, అసలు అది king of the ring in this chapter. Pakka question will be there in the exam. No doubt in that. Last 10 attempts, like 10 attempts question came. Okay? In 10 attempts, only 5 times debtors came. But 10 out of 10 general management estimates is came. Clear? So therefore, working capital estimates 6 marks. Debtors management will be 4 to 5 marks maximum. Totally this chapter will be accounting for 10 marks in examination. Up to here everyone had a clarity, yeah? Let us start with the concept now. See here. Okay. See here now. Sir, first thing everyone tell me, are you all confident with the capital budgeting chapter? Capital structure theories, Modigliani Miller model. Have you practiced yesterday after going? Not this practice. This practice. Done na? Really? Which chapter you have done? Can I believe? Really? What you have done? MM model, how many of you done? How many of you tried MM model at home? Any other problem in the study mat? How many of you get it done properly? Reminding people what you have done? Capital. And Nana, what you have done? Capital budgeting. What you have done? Life disparity have you done? Correct answers came? No. As is wrong answers came. Sir, okay. What my intention is, whether you who have done, who have not done, I don't want to put track on you. I just wanted to tell you that without practice, you can't be successful in examination. You have to practice all the problems. Model ki one problem I have explained, how the concept will work, everything. If you don't have a conceptual clarity, with the sessions you will get, but practice you have to only to do. Because in a revision session for 20 hours, I can't do the practice of 1000 problems here. Do you understand or not? So practice will only make you perfect before examination. So do some practice. Take RTP, take MTP, randomly try the problems, do it, make it wrong, make it correct, and then go to exam. Clear? See the screen. What is the topic we are going to start with? Working capital estimates. Let me first explain you the concept, how it works. In this particular chapter, working capital management, there are 5 areas, as I already said. Working capital estimates, debtors management, payables management, cash management, inventory management. In this, first 2 are important, next 3 are least important from exam point of view, but still we will cover also these 2. Listening? Payables management is ditto like debtors management. I am not going to cover. I will make one YouTube video for 40 minutes later. Not now. Let's not waste time in that. Okay? First let us cover the first 2 and next we will go to the next 2. Listening? Okay. So the time allocated for that is exactly 4 hours time. We have to complete all these things. Then I will get some time to discuss also about the basics relating to the leverages chapter, how the questions come, and we will close all the sessions. Okay? So let us begin with the concept. What is the name of the topic we are going to start with? Name lone very clear. See here. If you take the balance sheet of a company, there are 2 kinds of assets. Number 1 will be fixed assets. Number 2 will be current assets. Okay. Fixed assets and current assets are 2 types of assets. Sir, fixed assets and current assets won't come and fall from sky. We have to buy them. Out of what you are buying? Equity share capital, reserves and surplus, debt. Next one is current liabilities. What is it? Current liabilities. Simply to tell, what is that? Creditors, other kinds of payables, etc. All these things will be there. Those all will make you to buy this. So now listen carefully. Fixed assets, already we discussed. Where we discussed fixed assets? Capital budgeting chapter. Tell me, investment in 2 areas. Already I told you, Modigliani Miller model says that what is important for a company? Which is not relevant? financing and dividend decisions are irrelevant for the company growth. Company grow only if there is a investments can be of two types. Investment in the fixed assets. Second one, investment in the fixed assets investment, a capital budgeting chapter. Current assets investment will be working capital chapter. Working capital and capital budgeting is a investment decision chapter. Which chapter? Investment decision. It's an investment decision. Working capital is a investment decision. Capital budgeting is a investment decision. Capital structure theory, leverages, dividend, cost of capital, these are all financing decisions. Listening? Let us begin. So the point is, equity share capital was raised. Reserves are already there in the company. Debt is also there. Along with that, some creditors are there. Using all these, company will make investment in the current assets of a company. Try to understand clearly. There is a wrong notion people are having. The wrong notion is current assets will be purchased out of current liability. Answer is absolutely wrong. Current assets need not be acquired by current liabilities. Current assets can be acquired by long-term liabilities or short-term liabilities. Are you understanding or not? I will give you one example. Please see the screen. Liability, asset, long-term, short-term, fixed asset, current asset. See this point clearly. Long-term liability. Which liability? Can be used to purchase fixed assets, can be used to purchase current assets. Short-term liability cannot be used to buy fixed assets, can be used to buy only. This is the meaning. Lo, do you know why ratios analysis chapter la first ratio? Liquidity ratios or solvency ratio? Which ratio? In that I will discuss about this. Whenever you are creating a fixed asset, whenever you are creating what asset? It should be created out of long-term asset only. Simply to tell short-term, long-term liability only. Short-term liabilities you should never purchase long-term assets. I told you this point in the ratios. First one, liquidity ratios, we will discuss about this. The moral of the story is very simple. They wanted to tell that whenever you wanted to acquire fixed assets, acquire only out of the long-term liabilities. You should not use which liability? Short-term liability you should not use. But vice versa is permitted. Do you know what do you mean vice versa? Can we use long-term liability to finance the short-term assets like current assets? Yes, you can use. That's why even till today, latest Ola went for a public offer, correct? Which offer? They raised money. You know or not? In the money raised, 21% of the money they said in the prospectus that they are going to use for working capital. They are going to use for? Tell me, IPO money will be raised in the form of loan or money will be raised in the form of equity shares? Long term or short term? Using it for working capital. Working capital is a short term one. So there is no wrong in using long term for short term asset, but short term liability cannot finance the long term assets. Is become very, 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 very dangerous. One example I will give and I will stop. I wanted to purchase a house. House is a long term asset, short term asset. By taking 3 months loan I have taken. How many months? 3 months. 3 months is a short term loan, long term loan. Building is a 1 crore worth 3 months loan. And I have to pay the money within 3 months completed. 1 crore worth asset. How can I pay? I have to sell the building and I have to pay. Then why you bought? Clear or not? Or else whatever assets are there with me, I have to sell them and I have to pay you. Listening? Or second example, I took a loan for 30 years and I purchased a house. Now what will happen? The total 1 crore value will be broken into small parts. Every month I will be paying only somewhere around 55,000, 60,000 I will pay. Now my salary is 1,50,000. Example, monthly. 60,000, 50,000 is not a problem for me at that time. So always long-term assets should be created only out of long-term liabilities. Short-term assets should be created maybe out of long-term liabilities or short-term liabilities. No problem. We are now discussing about the short-term assets or long-term assets in this chapter. Everyone? That's why capital budgeting chapter you see, nowhere you will see all these kind of short-term loans, credit card, all these things will not be there. All are big equity, debt, these only will be involved in capital budgeting projects. Clear? Let us begin. Please listen carefully. What is the logic of this chapter, working capital estimates? Working capital estimates is the first chapter in working capital management. The name of the chapter is working capital estimates. In this chapter, we are going to estimate the working capital amount. What we will estimate? Working capital amount. How much working capital amount is required in a company? I used to give an example in the class for the regular classes. If you remember, same example I will just tell for a minute and we will start with the problem. See here. Shall we? Whenever company wanted to go for do you know what is a cash credit? Cash credit is also called as, tell me what is this? You know what is a overdraft? What is a overdraft? Overdraft is something like a credit card. Overdraft is something like what? Credit card. Means what? Bank will finance you the money. First you buy it. Later you can pay back to the bank. Are you understanding the point or not? Listen carefully. I will ask a question, please. You went to a bank. You ask the bank, please give me some short-term loan to continue my business, not to buy fixed assets, to continue my daily business. Okay, daily what you are required? Daily I require stock, daily I require labor, daily I require some overheads to be incurred. To finance that, please help me, you ask the bank. Bank said that, okay, I will help you. How much amount do you want? You said, I want 4 lakh per month, you said. Then bank asked, why 4 lakh? 4 lakh randomly I asked. Randomly don't ask. Have a correct projection as to how much amount you want. Sign with a chartered accountant is required. If both happen simultaneously, then we will give you the loan. Those are only called as projected financials in our CA industry. Chartered accountants are extremely popular in doing that. What statements? Projected financial statements. What is a projected financial statement? Name lone clear. Projection means actuals are estimates. This is estimate. You went to a bank. You asked the bank, please give me money for my working capital. For my what? Loudly, for my what? Daily working I want money. For fixed assets already I have taken big loans from the bank. I want loan not for fixed assets. I want loan for my working capital. Every day working I want some capital. So that's why working capital. Bank asks, how much do you want? I said 4 lakh. Why 4 lakh? 4 lakh randomly I asked. Randomly we will not give. There should be a projected statement. What statement? Projected statement. We exactly want at least nearest estimate. How much amount do you want? In that motive, this chapter has started. Which chapter? Working capital estimates. What we are going to do in this chapter? In this chapter, we are going to calculate amount of loan we are going to ask from the bank. Amount of? We are going to ask from the, as a long-term loan or short-term loan? How much amount you should ask? That's what we are going to do in this chapter. Listening or not? Whatever comes to your mouth, if you ask, they will throw you outside the bank. There should be some calculation for that. Listening? How to understand that calculation? How to know that calculation? Sir, listen. I wanted to buy a laptop. Amount is available. Means what? There is a MRP on this. Are you listening or not? There is a MRP on laptop. MRP is 1,50,000. So 1,50,000 rupees I will directly ask you. I wanted to purchase a building. Building is having some value. 1 crore. 1 crore value loan I will take. Listening? Do you know what is the problem with the current assets? Value changes every day. Stock today 1000 kgs. Tomorrow I will sell 500 kgs. 500 kgs is available. Next day I will again buy. Value of stock will be same every day. Will fluctuate. Therefore these are called as a fluctuating assets. Loan taking is very difficult. Listening everyone? Fixed assets once purchased, used for 5-6 years. Working capital, stock, etc. will change every single day. Not every single day, every minute also it will change. At that time, what problem will come? How much amount I should ask loan is very, very difficult. On that, with some basic assumptions, finance management has brought one concept called as a working capital estimates, also called as a working capital management. So how to understand this is a subject matter of this chapter. Did you understand or not? Why I said all these things before I giving the problem is, if you understand intro properly, chapter really becomes very, very easy to understand. Listening? So tell me, what is the motive of this chapter? Asking loan. And typing over. Asking a loan. Which loan? Short-term loan. But how much to ask? For that these calculations came. Okay? See the screen. One last point. Whenever I say working capital estimates, you need to understand one cycle. A cycle name is called as a operating cycle. Which cycle? Also called as a working capital cycle. Also called as a working capital cycle. See there. First, what you brought into the business? Please listen. What you brought into the business? This cash becomes bad. This cash becomes to this raw material. I added labor. I added the overhead. It will become work in progress. Okay, intensively the mechanization, everything happened. Work in progress will become the finished goods. This finished good I will not put in the dustbin, obviously. I will put it for the sale. Who is created? Debtors. Who is created? Debtor. Debtors will again get converted into what? Cash. Debtors will again get converted into cash. This concept is called as what? Working capital cycle. Working capital cycle. Okay. See here. This particular working capital cycle will be expressed in days. Working capital cycle is estimated not in amount. Working capital cycle is a time. This attempt I am expecting question on working capital cycle. Then I am asking a question on working capital amounts, because last attempt they asked amount. So this attempt chance is there, they can ask a question on working capital cycle period. One question, two questions are there in our book. I will show you. Those are not there in the study material also. Old RTP questions I have taken and I prepared it. Sir, before going into that, please see here. What do you mean by this cycle? What do you mean by this cycle? Loudly, what do you mean by this cycle? What is a working capital cycle? It is a time taken for cash to become cash. It is a time taken for the cash to become cash. It's called as what cycle? Working capital cycle period. It's a time taken for the cash to become the cash. So, cash will get converted into raw material should go as a work in progress as a finished good as a debtor, and debtor has to again get converted into cash. Now I'll ask a question, tell me. How much cash I have? This 1 lakh will become 1,50,000 and come back. Profits also will be added. Loudly. It will come back. But how much time it will take for me to come back is a question now. Okay? See the screen. Raw material, my stock will be staying in the godown. Sir, whenever truck comes into the factory, it will go to the godown. Immediately it won't go to the production process. Are you understanding or not? Sorry, sir, I will ask a question. Your parents will go to the grocery shop and buy the products for a month time or not? For example, they bought 2 kg sugar. 2 kg sugar they will use in the first day, na? And a full tealer 2 kg sugar they will make. Are the tea or sweet? That means what you have to understand, every day they will use. Every day they may use, but every day everything they don't use. Are you understanding the point or not? Or sometimes what they will do, they will buy certain things in advance itself, which are not subjected to speedy decay. Okay, which can store for 4-5 months, 5-6 months, etc. Oil is there, it can store even for 4-5 months, no problem. Therefore, for example, if I read 2 oil packets, I may take 4 oil packets if there is an offer. I can keep it with me. That means your stock is bought, but it is kept in the godown. Kept in the same logic they will apply also on the raw material. See there, cash I purchased raw material. But entire raw material is not going into production process immediately. Raw material will be in the godown for loudly. Now it will go into the manufacturing process. It takes 20 days in the manufacturing process. After that, work in progress will be over. Then finished good will stay in the stock form for around another 10 days. After this, I will sell. 10 days la all goods I will sell. Debtors, I have a credit policy of 30 days. I have a credit policy of how much? 30 days. Again, it will become the cash. So, count the days now. 10, 20, 10, 30. Totally how many days? 70. Everyone loudly. Now you tell me, I will listen. How many days is my operating cycle time? How many days? 70 days. Okay, na? Now listen carefully. What is this? Everyone? With that what I bought? Let us say, for example, this cash plus some creditors are also there. Who are also there? Loudly? Creditors are also there. Means what? They will give goods on credit, purchases on credit. What on credit? Loudly, sir. Purchases on credit. What do you mean purchase on credit? Money given, cash given, not given. Just I made a purchase. They have given me 15 days time. How many days time? 15 days time. Now tell me, total operating cycle will be? Total operating cycle will be? No, it should be reduced. It should be reduced. Sorry, let us take 10 days. Creditors is an advantage or disadvantage? Advantage. You need not pay them. Therefore, reduce that. 70 days minus 10 days. How many days? 60 days. Loudly. 60 days. Do you know what do you mean by 60 days? What is 60 days? It is one cycle. It is one cycle. Yearly, how many days are estimated? 60 days. One cycle has how many days? How many operating cycles this company is having? 6. 6 is the operating cycle. This is what they will ask in the operating cycles. Are you understanding the idea behind this or not? But one very important observation is required. How many cycles? Number of cycles, if they increase, it is good for the company. It is good for the company. One cycle means what? Your time taken for cash to become cash is 1 full year. 1 full year. What? Listening everyone. Now tell me, how many days it will take for me to make cash into cash? 60 days. Loudly? 60 days. That means my cash is blocked for how many days? 60 days. How loudly? 60 days. Now tell me, for this 60 days my cash will be there or will not be there? No. Therefore, the bank should finance me 60 days of working capital requirement. How many days? 60 days of working capital requirement. I want loan from you to tackle my 60 days of my working. Now tell me, if I can reduce this, loan amount also will reduce or not? Yes, sir. Sir, my daily expenses are 50 rupees. My daily expenses are 50 rupees. Example, daily expenses are 50. Tell me, 10 days expenses is how much? 500. Answer. 500. 20 days expenses will be? Now tell me, as the number of days is increasing, requirement of amount is increasing or decreasing? That's what. If you can reduce the operating cycle period, loan taken from the bank also will reduce. Are you understanding or not? Last example, and we'll start with the problems directly. See here. I am staying in a hostel. Example. I never in my life I did. So, I am staying in a hostel. So, when I am coming with my bag from Hyderabad to Chennai, my parents said that how many pairs of dress you want? Then I got a doubt. I called my friend in Chennai. I said, "Arey, laundry, how much time it will take in Chennai?" I asked. Which one? Laundry. Laundry means if I give an untidy clothes to you, it will be cleaned, ironed and given back to me within how many days? I asked. Are you listening? So see here. When I use the cloths, give them, I will use the cloths and I will put in a bag. That particular dress will be in the bag for 2-3 days because every day dhobi will not come. 2-3 days it will stay as a unclean clothes. That person will collect after 3 days. 3 days it is in the form of untidy clothes. 3 days after, the laundry person will come and collect it. After collecting, in priority they don't wash my clothes. They will keep, some other persons also will be there. He will take another 3 days. He will take another 3 days. He will take another 3 days to wash it. He will take another 2 days to iron it. Another 1 day he will take and he will return back. Do you understand my point or not? Let us say, for example, he is taking how many days? 3 days for coming, 3 days for ironing, 1 day for iron and 1 day for giving back. Let us say on an average how many days he is taking? Do you know what do you mean by 7 days? One pair if I use today, this will again come back to you after how many days? 7 days. In a month, let us say, for example, there are 28 working days. How many working days? 28 working days are there. Excluding one Sunday or 2 Sundays if you take, around 28 working days are there. 28 working days I want. So tell me, if I use one pair today, it will come back to me after how many days? 7 days. Loudly? 7 days. Now tell me, one pair will come to me after 7 days. How many pairs I want for my 28 days? 4. Everyone tell me? 4. Now did you understand the point or not? Now, Dobby is taking 20 days time. How many days time? 20 days. Loudly answer, yeah. 20 days time the Dobby is taking. Now tell me, 20 days means one pair if I use and throw it today, it will come back to me after how many days? It will take 20 days to come back to me again. Clear or not? That means if I use a pair today, it will again come back to me after 20 days. Second pair if I use not 21st day, it will again come back. Means technically I need to have around 20 pairs with me such that I can tackle my needs. Correct or not? Yes, now tell me, purchasing 5 pairs, 6 pairs, purchasing 20 pairs, which is more costly and financially more viable for me? 5, 6 pairs is easy for me, 20 pairs is easy for me. Where more finance is required? Where less finance is required? Now tell me, when operating cycle is reducing, money flow is reducing. When operating cycle is increasing, money flow also will increase. So to reduce the money outflow, what you have to increase? What you have to decrease? I'm very sorry. What you have to decrease? Operating cycle time. If you reduce, automatically your finance also will reduce. That's what we are going to do in this chapter. Did you understand the operation of this chapter or not? Let us start doing the problems now. Without any further ado, let us start. See here. One by one questions we will do. See here. No need to write anything, just observe. Big questions only we will do together. Small questions we will directly do here itself. See here. Budgeted production. How much is the production required? Raw material consumption per unit. Cost of raw material. 1 second. Cost of raw material 4 kgs. And next one, raw material holding period. Now you should tell me. How many months my raw material will be blocked in the godown? Today truck came, raw material kept in the factory. Okay, immediately raw material directly jump to production process. No, it will take some time. So tell me, raw material will be in the raw material stock form in my godown for how many months? 2 months. You should not see. Now tell me, what I bought? What is blocked? Cash in the form of raw material is blocked. Don't see raw material. Here raw material is not blocked. What is blocked? Your cash in the form of raw material is blocked in the godown. Are you understanding or not? Answer. Yes, shall I tell you one example for you to understand? Bank gave loan. What gave? Bank gave what? Loan. 1 crore loan. I bought a car with 1 crore. Example. Okay. I bought a car with 1 crore. Okay, na? My car is going like this. I will see the car. Bank will see 1 crore cash bag. Did you understand the point or not? How the people will see? Perception of two people will be different. I will see a very good lavish car. Bank will not see lavish car. What bank will see? 1 lakh cash back wheels also in cash form. 1 lakh is going on. My 1 crore is going like that. Bank will see cash in everything. We will see the assets. Company see the assets. But from the point of view of bank see what? 2 months of your cash is blocked in the godown. Do you understand the point or not? It's all a finance perception. The way you see. Okay. See there now. First point number 1. How much budgeted production? To produce 60,000 units, how many kgs of raw material we require? 2 kgs. Each unit ki 2 kgs. Okay, 1,60,000 units ki how many kgs? 1,20,000. Each kg, what is the cost? Do you have calculator? Don't see like that. Please do calculations and tell me the answer. 4 lakh? What is 4,80,000? Amount blocked in the form of raw material for how many years? 1 year. No. What is this first line? Yearly budgeted production. How much? What is the raw material consumed per unit? How many kgs I need to buy? Each kg costs how many? So total annually how much I need to spend? 4,80,000 is for 1 year, 1 month, 1 day na? 1 year. How much I need to spend? 4,80,000. But it is blocked for full 1 year, 2 months. Therefore I should ask loan only for the 2 months period. 4,80,000 into 2 by 12. How much? That's the answer. Over. First question completed. Everyone understood the working capital raw material estimate or not clearly? What we have done, tell me. Did you understand what we have done? Tell me, how much is the raw material production? What is the budgeted production, finished production? How much? 60,000. Each unit of finished product require how many kgs of raw material? So how many kgs of raw material totally required for 1 full year? Each kg requires how much money to be invested? Answer. Raw material will be blocked in the godown for full year, 2 months. So money blocked in the form of raw material will be only for 2 months. So for 2 months only you should ask for the loan. Bank won't give for extra 1 day also. Listening? So totally how much is the answer? 80,000. What is 80,000? Bad everyone. What is 80,000? Amount blocked in the form of raw material. So bank will give a loan of how much? Everyone? For full finance or for financing your raw material? For financing your raw material, they give you how much loan? Now I will ask a question, tell me. What is this, this amount of 80,000 called as? What is 80,000 called as? Please be here, yeah. Amount blocked in the form of? Amount blocked in the form of? Okay, na? Now tell me. Work in progress. What is it? In the work in progress also what will be there? Raw material will be there. Labor will be there. Overheads also will be there. Correct or not? Tell me. Raw material blocked for how many months? Sir, my total production process is 6 months. Okay, let us say. Raw material is blocked for how many months? Full 6 months. Because in finished product also raw material is there. In work in progress also raw material is there. In raw material also raw material is there. Sarvantaryami. Everywhere it is there. All pervasive. So, the logic of this chapter is people don't understand the ideology behind this particular working capital chapter. You are seeing raw material as a raw material stock in the first stage. Second stage raw material in the work in progress form it is there. Next stage raw material in the finished goods format is there. Are you listening? Table is a finished product or raw material? Answer. Wood is the? Wood there in finished good, not there. That's all. Are you understanding or not? Raw material in wood form 2 months. Raw material in cutting form 1 month or 2 months in work in progress. Raw material in the table form another 2 months, sir. Did you understand the point or not? So that's why always try to understand. Whenever you ask finance from the bank, bank will ask the breakup. Bank will ask the raw material blocked in raw material form is 80,000. Raw material blocked in the form of raw material 80,000 I will give you. Raw material in the work in progress again I will give you loan. Labor in the work in progress format I will give you loan. Listening or not everyone? Hello, I am talking with everyone. Yes, tell me, item by item we need to ask for the loan. Overall, give me 5 lakh, give me 10 lakh, banks won't give. Tell me the breakup clearly. On an average, your money will be blocked in raw material stock form for how many months? Therefore, for that I will give 80,000. Raw material next after 2 months will go into? And still money is blocked in raw material, but not in which format? Raw material format, but it is in which format now? Working capital. For that you ask the loan again separately. That's why we will ask money on a overall basis, a stage wise of completion. That's how this concept has started. Are you understanding the point or not? Now I doubt you what you understand in process costing. So what is that, sir? What you are talking? Do you know that in the costing there is one area called as a process costing, everyone? Yes, in process costing, there will be a percentage of completion. Raw material, some percentage, work in progress, finished goods, labor, overhead completion percentages. Have you seen or not? Yes, so, like that. Process costing, this is what they make you to learn. Na? Sir, okay. Listen, I don't have time to argue with you. So, first point number one, raw material concept, everyone understood clearly? Yes, understood? Yes, what is 80,000? Amount blocked in the form of raw material is how much? 80,000. Can I go to the next question? Okay, very good. Next. Illustration 3 you take. See the question. What is this? Read. Left side, what is there? Finished goods valuation. Which goods valuation? Finished goods valuation. Okay. Sir, work in progress, sir. We will do it later. First, let us do finished good. Okay. First one. What is the first one? To manufacture my finished goods, I require what and what? First, see. Raw material, wages, manufacturing overheads, including depreciation of 1 rupee, administration and selling overheads, total cost per unit totally given. Okay. Please tell me, what is including 1 rupee depreciation? At depreciation 1 rupee, and asset cost 10 rupees. What do you mean by depreciation 1 rupee? Always we use absorption costing. Enna costing? Absorption costing. What do you mean by absorption costing? Cost overheads which cannot be directly charged to the product. We will charge on a basis. Charge on a basis. Okay. What is this basis? Basis is a process in which the entire overhead cost which is not directly attributable to the goods, we will absorb to the finished product in the form of hourly basis or unit basis or something like that. I will give you 2 examples. Please listen carefully. Shall we? Yes, sir. My company is more driven by machines. My company is more driven by production process. Okay? I will give you example. Shall we? Yes, I will give you example. My company manufactures, say example, Lays packets. Lays chips. Lays packets. Do you know in the Lays packet, chips industry, etc., what will happen? Chips industry problem is, unit basis you cannot charge because unit basis there will be crores of chips that will come out. Packet basis also you can't charge because there are thousands and lakhs of packets that will get generated. Total electricity during the month 5 crore divided by 100 crore packets, 0.05 answer will come per packet electricity. Do you understand or not? At that time, absorbing the cost into the product should not be on unit basis, should be on the basis of hours basis. How many hours your machines will work throughout the month? Some hours will come. So total electricity is how much? 5 crore. Per hour how much is the cost? Then they will absorb the electricity cost to the labor hours. Second, my company manufactures heavy duty machinery. Monthly 100 units will come. And more driven by electricity farm, more driven by number of units produced. Now the total electricity cost will be apportioned to the units. That's how here the unit has come. Per unit ki 1 rupee. And this is a unit driven industry. This is all you need to learn in overheads in costing. Okay. Overheads clearly they will explain. There is a concept called as absorption costing. Which concept? Absorbing means what? It will take into the product on some basis. You have some concepts like capacity, maximum capacity, okay, ideal capacity, all these things are there. In those areas only absorption concept, apportionment of overheads, all these things will come. Okay. Now answer to my question. To manufacture one product, how much is a raw material required? Per unit, how much is a cost? wages, overheads, in the depreciation, administration, selling, total cost. Very good. Finished goods holding period. What do you mean by finished goods holding period? What do you mean finished goods holding period? Cash in the form of finished goods stock is blocked for 2 months. Am I clear or not, everyone? Very good. Production per annum. How many units are estimated per annum? 60,000 units. See, calculate the stock. Last attempt this question only came. Read. Calculate the stock of, calculate the stock of finished goods in the following 3 cases. Case 1, when no information is given. Case 2, stock valuation at the cash cost. Case 3, stock valuation at the prime cost. What is the prime cost? All direct wages, direct material, direct wages, direct expenses, all put together we call as a prime cost. Okay. Sir, what are these 3? See here. Exam question come like this. Okay. Nothing they will tell. They will tell estimate. Nothing you said. Then we will do the problem on no information basis or cash cost basis by making an assumption in the exam. But first I should explain the student as to what are the 3 ways available in the exam. No information is given how to do, cash cost how to do, and prime cost how to do. First see the question. Tell me, how much is the total cost blocked? How much is the total cost blocked? Loudly. Next, how much is the cost blocked in the form of cash, real cash? In that 15, 1 rupee is the depreciation, which is a real cash cost, not a real cash cost. Prime cost means you should not take 15 or 14, you should take only 9. Take only. That means bank won't give loans for payment of your rent and electricity. That means overhead they don't finance sometimes. Some banks will give, some banks policy will be there. We will finance only direct expenses, direct wages and direct material, but not your factory rent and overheads. Listening or not, everyone? So there, listening? This is a point, sir. Sir, generally whenever you buy the house, house ki loan will be given. I will make interiors, please give me loan means generally banks won't give. What generally people will do is they will take excess loan and use it for interiors. That is different. But bank generally don't entertain taking loans or giving loans only for the purpose of your interiors. Like that, interior is like a overhead here. I will give you for raw material. I will give you for your direct wages. I will give you for your direct material, direct expenses. But don't ask money for your overheads. Your electricity bill, why will I pay? Like that bank will see. Did you get the point or not? So, observation is very bad. Start from the beginning. Tell me point by point. Raw material, how much cost? 5. Total raw material cost per annum is 5 rupees. Per each unit, how much raw material I need to spend? 5 rupee. Next, wages, overheads, admin and selling, total cost. First, one by one, let me ask. Finished goods holding period is how much? Shall I ask you a question now? First, tell me, what is the total cost? Sir, when no information given, when stock valuation is at cash cost to prime cost, I ask. First, tell me, no information given means we should do at the total cost basis a cash cost. Total cost. Tell me, how to do the total cost? What is the total cost? Loudly. Wrong answer. You should consider only up to the overheads. Admin selling is not related to finished goods. It is relating to the sale. It is relating to the sale. Exact exam question. Okay. It is relating to the sale. Next one, tell me. 5 rupees what cost? This is the last and final call for all the passengers. See here. If you don't board into the class properly, you are gone. See the screen properly. What is the cost you are spending on raw material? Wages, manufacturing overhead. That's all. Finished goods product is created after that. I am giving loan for your finished goods, not for your sale process. Clear? That means answer to my question now. Point number 1. Raw material 5, wages 4, manufacturing overhead 3. Tell me, what is the total cost incurred to make the finished product, not to sell the finished product? Answer. That is total cost. Okay. In that, how much is the cash cost? 11. Because how much is depreciation? How much is the prime cost in that? Now take calculator and solve. Start. I will ask you to do how many units are estimated. Write down 60,000 into how much is blocked in the form of total cost? 15 into 12. Okay. Next, that will be blocked for full year 2 months into 2 by 12. 1 lakh. That's how you got the first answer. 1,20,000. Now do for cash cost and prime cost. If you want question, you can see. One lakh. Next one. Let everyone do. How much is answer? What are the three answers now? 1,20,000, 1,10,000. See, 1,20,000. First answer. Next one, 1 lakh. And next one? These are exam questions they are asking. That also we are unable to do. Means see how much clarity we are having. Adoka bacha chapter, not of our range. We are scared about working capital. Working capital chapter. Asala chapter bacha chapter. First point. We make hero. They are not actually. Okay, sir. First point. First problems will be like that only, sir. Shall I show you last problems? Let us see now. What is the next one? Working capital. Working capital. Work in progress. What is WIP? Work in progress means my money is blocked in finished goods or raw material middle. And going on. Process is going on. For example, to manufacture this bench, cutting process, Fevicol, adhesives, attachments, screws, nuts, all this process will take some time or not. That time taken for between raw material and finished good, there will be a time taken. That time is called as what time? Work in progress time. That means even during that time, what are all the things that I will incur? Raw material, wages, direct expenses. Sir, 1 second. Raw material is a direct? Direct? Raw material. This wood is a direct material. Fevicol is a direct expense. Material. Early morning vibes. So, Fevicol is a direct material. You will sit on Fevicol. Fevicol is a direct material, direct expense. Direct expense, how come it become direct material? So tell me, one person is there. I am the carpenter. I am coming and doing the work. Who I am? Direct labor. Wood? Direct material. Fevicol, nuts, screws. Those are all direct expenses. Okay, na? For this, drilling everything, my wire is connected to this particular drilling wire is connected to electricity. What is this? Electricity is the overhead. Are you understanding or not? These are all various expenses that you have to incur. Don't make me to teach costing. I stopped it long back. So, the point what I wanted to tell is a very simple concept. Money blockage, if you understand, working capital of first unit completed. Okay, but we will do all the 9 problems in this. See there. Work in progress holding period. How many months? What do you mean half month? 15 days and a 0.5 months. 0.5 month and 15 days and 0.5 month. What will happen? My money will be blocked in the form of work in progress. Until it is not in finished good, it is not even in raw material format. My money is blocked somewhere in the middle. For how many days? I want finance also for that. Okay. See that. Case 1. In questions in exam can come in 3 ways again. Case 1. Work in progress is 60% complete. He will tell like that. Work in progress is 60% process costing. You got this. What you will do? Work in progress is 60% complete, he said. Means all the items inside the work in progress are completed by how much percent? 60%. Wrong answer. Raw material will be 100 always. అంటే ప్రాసెస్ కాస్టింగ్ ఇల్లే. సో పాయింట్ ఈస్ work in progress is complete by how much percent? Means raw material is assumed to be completed by how much percent? 100%. Labor 60%, overhead 60% we will take. Listening? Next, second question. Hey, see that. Third question. Third case you see? Third case you see? No information given. Raw material 100%. Process costing raw material 100%. Labor overhead assumed to be completed by 50% each. How much percent? 50 and 50. Next, read. Case 2. Work in progress is 80% complete as to the materials, 60% complete as to the wages. Actually wages and overhead. What do you mean by that? How to read? How to read? Now materials is not assumed as 100% complete. Materials are assumed to be 80% complete. Wages and overhead are assumed to be 60% complete. Everyone understood the point? Everyone in the class? Will you do now? Rough paper lo somewhere you do. Solve as per total cost model, cash cost model with the same information. On a rough paper you do. No doubt. What should I do? I will help you. Work in progress. Work in progress. Okay. First I will ask question one by one, slowly. First understand and answer. Okay. No avesam. Very easy concept. First tell me, what is our case 1? Same information, sir. Question is same. I am asking work in progress now. What is the case 1? ఏంటి 60%? Work in progress is complete by how much percent? Right down. Work in progress complete by 60%. Underline that. I will ask question, answer and then do. Okay. Now tell me, work in progress. First question 1. Raw material will be there in work in progress or not? Yes, sir. Wages will be there in work in progress or not? Yes, sir. Manufacturing overhead will be there in work in progress or not? Yes, sir. Admin and selling overheads will be there in work in progress or not? No. When admin and selling will come? After finished good is manufactured. Work in progress ki no one will do publicity. Are you understanding or not? Work in progress ki no one will do publicity. Okay na? Sir, did you understand what I said? Sir, if the product is prepared, labeling, everything is done, I will do nice publicity, photo shoot, everything for the product and I will release as an advertisement. During manufacturing process, if you show people, they don't buy. How they make sweets, so people will put on Instagram, na? Nice videos they will put. The ambience, all these things, if they show when they are making the food, gone. That's why we should not see. Especially Pani Puri batch. A Pavitra Padartham is there. Okay? That particular thing will be there. One Puri will be there. He will break it with his finger. Tap, 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 tap. 5 days before water he will take. If you see the process, work in progress, your progress is gone. So, that's why people won't give any importance to work in progress. People should not see. Either see the raw material, you like it. Either see the finished good, you will like it, but don't see it somewhere in the middle. So now the point is very clear. See there and tell, we do advertisement, selling, everything for finished product, work in progress. Loudly. Okay na? Now I ask you, please listen. Fun part, listen carefully. 60% complete as to what? Material is completed by? And I want loan for raw material, wages, overheads, all the 3. But in that, 100% block is only for? Calculate. How many units? Into how much? Into how much per unit? They don't get doubts because of others. First point. Again, take in calculator. How many units? 60,000 units. How much is the cost per raw material? Into how many months my raw material will be blocked in work in progress format? 0.5 by 12. How much? 12,000? What is 12,500? Hey, what is 12,500? Raw material blocked in raw material form or raw material blocked in work in progress form? Work in progress form. So now tell me, you should ask loan for complete raw material. Work in progress only 12,500. How much you got? 12,000 or 12,500? 12,500. That's the first one. Tell me. Second, that is point number one. Point number two, wages. Tell me, wages are completed by how much percent? Loudly. Write down. 60,000 into 4. Don't copy. Did you understand what I am telling? 60,000 into 4. What is 4? Wages per unit. But 100% completed only 60%. Into 0.6 into 0.5 by 12. Write down. Next, overheads. Total cost basis we will do. Overheads. Tell me. Don't see my face here. Start doing 60,000 into 3. Cash cost if you do, take only 2. 60,000 into 3 into 0.6, 60% complete. Into 0.6 into 0.5 by 12. 4,000. Now total all of them. How much? Total how much? 20. See the screen. Check whether the answer is right or not. How much you said? 20. 3,000. Wait. How much? Where have you given? 23. See here. First answer. This one. Have you got this answer or not, everyone in the class? Will you do for, sir, what type law we have done now? We have done on total cost or cash cost? Everyone? Will you do on cash cost and tell me the answer? Do and tell. 1 minute time. Raw material answer will change or will not change? Will not change. Wages answer will change or will not change? Will not change. What only will change? Overhead, say 1 rupee you have to reduce. 21,000? See the answer? 21,000. Sorry, I got 20,500. How much is answer? 20,500? Very good. Sir. Yes, you have to take 100%. You have done it? No, you have to take 80%. If you take 80% as complete, that answer will come. First one, tell me. One second. Listen. Array, listen. Have you done the cash cost basis, everyone? Which basis? Cash cost. First one, total cost basis. Next one, you have done using the. This is a cash cost answer. Okay, na? 80% complete, I didn't even ask you to do now. As of now, what we have done? 60% complete ki total cost, 50% complete ki cash cost, 60% complete cash cost we have done. Now we have to do for what? 80% to the raw material completion, 60% to the labor overhead. Write down, keep the heading. 80% completion to raw material, this is a question. 60% of the wages. Or else you do one thing, every question, 2 columns you open, total cost, cash cost, there itself you can do. Maybe that is more easy for you. Solve and tell me, don't sit idle. Completed everyone? Tell me, 80% as to 80% as to the material, 60% as to the wages overhead. On the basis of total cost, how much is answer? 20,500. Have you got this answer? If it is on a cash cost basis? 19,000. Have you got the answer or not? Last one also do. What is the case 3? No information is given. No information is given. What do you mean no information given? Nothing is said. Then what you should take? Raw material 100% complete. Labor overheads will be 50% complete. Do it for total cost and cash cost both. Okay, well, completed everyone? Everyone completed? Tell me now, how much is the answer for no information given under the total cost? 21,250. There? 21,250. Have you got the answer? What is the next one? 20,000. That's all. Now tell me, as a chapter difficult? Sir, this chapter is very easy. Actually, our fear makes it more difficult. The chapter, if you understand properly, and moreover, shall I ask you one question now? We have done raw material, we have done labor, we have done raw material, we have done finished goods, we have done work in progress. Correct? See and tell me there, how much is the loan you are asking on raw material? First case. Raw material, how much you are, sir, in all the cases, raw material is same or not? The total cost or non-total cost, except 80% case, in all other cases, raw material is same or not? Yes, how much you are asking loan on raw material? 1,500. Everyone? 1,500. Wrong. Finished goods also you are asking raw material. You are asking stock of raw material loan. Totally it will be somewhere around 50,000-60,000 you are asking on raw material, broken into 3 stages. Stock in the stock of raw material some amount, stock in the form of work in progress 12,000, finished goods you open the finished goods concept. You have done already finished goods. You didn't do? I have shown you the question. Sir, tell me, finished goods, if you see this, this one, tell me, finished goods, if you go by a total cost basis, you tell me, raw material how much is per unit? 5. Everyone? 5 into 60,000 into 2 by 12. How much? 50. 50,000. 50,000 for what? Raw material in the form of finished goods you are asking. 12,500 in work in progress format, in form of work in progress. And 5 rupees if it is idle for another 2 months in the form of raw material, another 50,000 you will ask. And totally how much you are asking on raw material? 50,000 plus 50,000 plus 12,500. Total how much you are asking? That 1,12,000 is the total loan you are taking for the blockage of your cash in the form of into how many stages? That's what the operating cycle meant to be. If you reduce that cycle, automatically loan also will come down. Understood or not? Okay. Let us take another question and try to solve. Okay. See here. This is the next one. Debtors valuation. An valuation, sir? Debtors valuation. See the question. Assume the same facts of question 3. Same facts of question 3. See there. Debt collection period, how many months? Sir, whenever debtors are there, money is saved, money blocked. Money? Why? Why? Again I am asking, listen carefully. Raw material or finished goods in the stock form. Everyone, finished goods in the finished goods in the form of debtors. Do you know how to see the finished goods? See here. Stock, finished goods stock is a stock in the go down. Finished goods stock is a stock in the go down. Debtors, stock with the customers, because money did not come in both the cases. I kept stock in the go down. I kept stock in your hand. Whether your hand or go down, first stock is in the form of stock only. Because what didn't come at? Cash didn't come, money didn't come back. So, therefore, debtors is also a damage to the company. Okay? So, therefore, what they are asking, see there, how much money is blocked in the form of debtors? See there, debt collection period means how much? What do you mean by 2 months debt collection period? If you sell today, this money will be paid by the debtor after how many months? And your money is blocked for? 2 months. That's the point. For 2 months I want the finance. For how many months? 2 months. Loudly? 2 months. Now tell me, what is the total cost in this particular case? What is the total cost in this particular case? Everyone. Cash cost, total cost. 15. Because debtors time ki sale also completed. What also completed? Sale. Loudly? Sale also completed. So sale value is how much? Sale value, I mean cost of sales is how much? 15. I will give loan up to 15 to you. Because by the time debtors are created, sale is happening. Before sale, already admin overheads also you might have incurred. Are you understanding? Yes, will you do or not? Yes, I want on total cost to cash cost. 2 months is the collection period for debtors. Start. How many units? Percentage of completion. I didn't understand. I didn't understand. What question you are asking? Oh, you are asking how much is a cash sale. Cash sale is how much percent here? 20%. Credit sale? 80%. Take 80% and do. See, this is the basic information put for you. Tell me now. This is the info. 1 lakh. First total cost or cash cost? How much? 15 into 60,000 into 80% into 2 by 12. 1 lakh. Everyone got this answer? Next, if you have to do the same on cash cost, not 15, sorry, how much? 14 into 80% into 2 by 12. Okay? Everyone got the answer? Yes, sir. Listen. But the point is, you may ask in exam in 3 ways. Total cost, cash cost, total sales. Total sales means profit also should be added. What also should be added? Profit. But that is not a wise way of asking the question. Institute rarely asks that question, but asked 1 or 2 times. It's a foolishness. Bank finances your raw material. Bank finances your wages, overhead. Bank finances your admin. Bank don't finance depreciation. Therefore, cash cost is correct way. But still, okay, bank also finances depreciation, let us take. But bank can't finance your profit, yeah. I want loan for my profit. Did you understand the point or not? I want Loan for the profit. But the ideology, shall I tell you why that concept came? Sir, tell me, 1 second. Debtors hands life, the stock is there. It is a purchase or sale? Answer. That my entire production cost, whatever I incurred, is still blocked in the form of whom? Along with that, my profit is also blocked in your hand. That's why we will ask loan also on the profit. Did you understand or not? Tell me, when I sell to the debtors, I will sell them at purchase price or sale price? And in that sale price, what also is there? 15 rupees cost is there, 5 rupee profit is also there. That means I am postponing 15 or 5 or both. Therefore, I will ask a loan also on my profit I am losing. You understand? But generally banks don't give. For problematic part, okay. Realistically, it is not there. Shall we do also that? Yes, that also, if you do, all kinds of questions will be completed. See here once. See here once. What is the selling price? What is selling price? Now tell me, if it is on total cost basis, how much loan you should ask? I mean, selling price basis, sales approach. Don't sit idle. Exam also same will repeat. How much? Why 1,60,000? How many units are there totally? 60,000. Into how much per unit? 20 rupees. Into how many months? 2 by 12. How much? And 80%. How much? That's all. These are the two answers. Everyone understood the point or not? Sales approach lo 1,60,000. Total cost lo 1,20,000. Cash cost lo 1,12,000. Had we got all the three answers or not? Very good. That's all. This is the answer. Now, do for the creditors. Do for the creditors. Sir, whenever I say creditors, listen first. One point I have to tell. Hello. 1 minute, listen. After this, we will do 3 big problems given for 8 marks and 10 marks. At that time, you do. See the screen once. Credit sales are made. Sir, credit purchases are made. What purchases? Credit. Creditors will be of 2 types. Goods creditors, other creditors. First one? Other creditors. Sir, wages ki creditors will be there. Wages ki creditors, goods ki creditors will be there. Wages ki creditors will be there. Wages don't have creditors. Wages have time lag. Wages have? Shall I tell you how time lag will work? Listen carefully. Classic example I will tell you. You are an employee working in Indian Railway. Employee working in? Indian Railway. Let us say, for example, you join Indian Railway today. Today when you join, they will pay salary after 1 month. And the first they are getting their work done. After that they are paying. Means there is a time lag of that creditor. That means first production is getting completed. Next they are making payment. That means they are getting a time of how many months? 1 full month to make the payment from you. For you. Understood the point clearly? So therefore, see there. Assume the same facts as question 3. You know the question 3 now, very popular question. Credit period how many months? Credit purchase, cash purchases. And which credit purchases is how much percent? 80%. Time lag for payment of expenses, how many months? Calculate the creditors for raw material and other expenses he is asking. Did you understand the question or not? Loudly. First one, tell me. This is the amount to be financed by the bank to us. Correct? Wrong. This much amount bank will not give you. Do you know why? Creditors is an advantage to you. Creditor means you will make the payment, we will lag the payment. That means you are really paying to that extent of raw material or not paying. Then why should I give you loan on that? In our example, one second. Can you calculate the raw material and tell me how much it is? He is asking creditors for raw material and creditors for other expenses or not. Last example, how many units are there totally? Take calculator, 60,000 into 5 into how many months? Into how much percent? 80% into 2 by 12. How much? Loudly? In our old example, 50,000 raw material plus 50,000 raw material plus 12,500 minus 40,000 only they will give as a loan. Do you understand the point or not? That means they will give only 82,500 as a loan to you. They will not give total 1,12,000 because 40,000 you are getting a benefit. Na? Therefore they don't give that loan. So technically for the raw material how much loan they will give? 72,500 they will give. Sorry, not 82,000. Sorry, 72,500 only they will give as a loan. Did you now understand how to understand this concept? Okay. Now tell me, what is the time lag for expenses? 1 second, tell me. 1 second, tell me. Wages will have a time lag or not? Wages will have a time lag or not? In our old example, how much is the wages? 4. How many units? Write down. 60,000. Note down in the calculator. 60,000 into 4 into 80%. 80% is only on the cash purchase, credit purchase. That will be directly taken into how many months? 1 by 12. How much? What is the 20,000? Please explain me. That 20,000 is the amount blocked for the particular company. That means that much amount we will not get financer. We will get the financer. Will not get the finance for that 20,000. Did you understand or not, everyone? Okay. Now take the next question. This question directly I will put it on the screen. You people will do now. If you can do this exam question, you will do. If you can't do, fat. 10 marks, 8 marks question will come exactly like this in exam with a change in numbers. Don't write question. Telegram group already question is there. Now don't waste time. I want every one of you to sit in the class, do the answer. Start. Read the question first. Raw material. First, what is the production? 60 lakhs. Next, raw material cost per unit? 10 direct wages, overheads including depreciation 0.25 per unit. And absorption is on hourly basis or unit basis? Unit basis. Total cost to profit to selling price. I think you understood the entire cost sheet. Next, company holds 2 months of raw material stock, half months work in progress, finished good for 1 month. Creditors material ki 1 month, debtors ki 2 months credit, minimum cash balance 25,000, 4 cash working capital requirement. 8 marks question given in exam. Start doing it. Whenever question was not saying anything, you should do on both total cost and cash cost. They said anything, total cost or cash cost? Both you have to do. Generally you can take assumptions, but risky with the institute. I have done in one model only in the notes, but you do in both the sides. It takes hardly another half minute time, that's all. Work in progress when you are doing, how much you are taking? When no information given, I told you, na. If they tell, then you will take 60% like that. Or else, when no information is given, what you have to take? 100% complete of raw material, 50% complete to the wages and overheads. Have you done, everyone? Debtors? 100% great sales. Nothing is at 100% great sales. First point, tell me, did you all understand the question? Whatever we have done till now, it's a combined question of all the items in one single question. Shall I show the answer? How many of you have completed? Not even one. Do it fast. So people over the Zoom live also, please give a reply. Have you completed? Please put the answer if you have completed, those who have completed from the Zoom live. Why comments option was not given to them? 1 minute, 1 minute. Now try to put a message. Yes, now working. I think they disabled it. Huh? Uh-huh. Have you done for both the total cost and cash cost? I will show the answer. Whatever answer you get to that, 25,000 cash also you add. Whatever answer you got 30 lakhs na plus 25,000. That means along with all these we also want some cash balance. Raw material is raw material in the cash form, cash in raw material form, cash in working progress form, cash in finished goods form, cash in debtors form, cash in cash form. That also we want. Shall I show the answer? Okay, see here. So time up. You have taken 10 minutes time almost. See the screen. See the screen. One by one I will show you. Check and tell whether you did correct or not. First, I am first showing for total cost. Working raw material 10 lakh rupees. 10 lakh rupees. Check your answers. Work in progress 25,000. Work in progress 3,75,000 totally. Very good. Finished goods 10 lakhs. Debtors 25 lakhs. Total cost basis. Huh? With profit you take. You have taken only at cost. Do at profit. Debtors, nothing is said. I forgot to tell. I'm very sorry. In exam, debtors calculation they ask you. Listening. They don't tell anything in the question. Do with profit. I think you have done without profit calculation. Do with profit. I forgot to tell you the assumption. $25 lakhs. Have you got the answer? Normally, how much is the answer without profit? 20 lakhs. With profit will be 25 lakhs. Okay, you got the answer. Creditors, you tell me. Creditors ki time period is given or not given? Given. So how much totally? So total working capital requirement will be 44 lakhs. How many of you got this answer 44 lakh? Very good. How many of you did not get 44 lakh? If there is any problem, I will let me know. Why you did get 44? 20 lakhs as what? No problem, yeah. 39 lakhs you will get. Correct. If you take profit inclusive, you will get 44. If you don't take, you will get 39 lakhs. How many of you got 39 lakhs? 39. According to your assumption, that is 100% right. So none of these two answers, how many have got? Other than 39, other than 44. Let us check also the Zoom students, to what extent they followed. Zoom students, how much answer you got? 44 lakh. Okay. Sir, can you do for cash cost? Have you done for cash cost? Yes, everyone, have you done for cash cost? Yes, shall we see the answers also for the cash cost? Yes, this much you have to get. Just we made some small adjustments directly. 38 lakh 59,375. Means non-cash I removed from them. You can see there. Whenever depreciation work in progress, depreciation finished good, depreciation in debtors, and we also reduce the profits. Because cash cost itself means only cost should be taken. What should not be considered? Profit should not be considered, therefore removed. Which cost basis? Cash cost. When I use cash cost, it is using only cost. Profit is a cost, profit is an income. Therefore, we will also reduce that. Sorry, one thing, listen carefully. Everyone, sir, did right or did wrong, it will happen. Small mistakes will happen. Practice at home. At least everyone in the class understood the concept clearly or not? Anyone, if you can tell where you did the mistake, I can tell where to rectify. How many of you got the wrong answer? I mean, other than 44, other than 39? Everyone got the answer? Yes. Where you did the wrong? 25? Okay, you included profit and taken. You should not. Sir, did you understand the second point what I said? Whenever you take cash cost basis, name lone what is there? Cost. Name lone what is there? Cost. So what should not be taken? Profits should not be considered in calculating the debtors. Clear or not, everyone? Okay, that's the point. Again, anyone else who didn't get 44 or 39? Everyone at least understood? This illustration, a 12 marks question that came in exam. Read the question. Clearly they only given in the question that it is done on which basis? Cash cost basis. So problem will not arise in this question. But tell me, company is which company? X Limited. What is the gross profit margin? Next, depreciation is a part of cost of production. Next, safety margin 15%, means extra cash we will ask at the last. Next one, cash 50% of the current liabilities. No work in progress stock. Stock of raw material and finished goods holding period is 1 month. Other information, particulars. Sales is having a 2 months credit 27 lakh. Total sales 27 lakh, 2 months credit. Okay, next continue. Materials consumed 6 lakh 75, 2 months is in credit. Next. Wages is total 4,50,000 paid first half next month. That time lag is 1 month. Just now I told you. Next, manufacturing expenses payable at the end of the year. How much? 60,000. End of the year you will pay 60,000. These are paid in 1 month arrears. Next, admin expenses paid as above. Paid as above 1,80,000. Sales and promotion paid 90,000 quarterly and in advance. This is all the information that was given. It's a 12 marks question that came in examination from the working capital estimates. This question we will do together. I am not asking you to do this. Okay, you will get paralysis if you do. So don't do. This is the worst way in which a question can come in examination for 12 marks. Okay. Generally questions will come in the last question format or in the previous question format for 6 marks and 8 marks. Originally, previously, when FM paper used to be a 100 marks paper, then 12 marks questions used to come like this. Listening. But if you do questions like this, toughest question possible, any question that come in examination, you will be able to solve. Okay. Let us start doing this. The time allocated for this question is 20 minutes. Okay. Read the question one last time. We both will start doing the answer together. Read the question properly. Sir, please read the question. Don't waste time, please. Okay? Now, see here. Please listen. First thing you tell me, we are going to do this entire question on total cost basis or cash cost basis. Because it was clearly mentioned in the question that we should use only the cash cost basis. Okay, na? Let us do together. First one by one, step by step, let us do. Write down. Number 1. Tell me. Tell and write. First, what is the cycle? Working capital cycle starts with which one? Debtors directly or raw material? Raw material. Right down. Raw material. You tell me, I will do. After that you copy. Okay. So I have given 20 minutes to 30 minutes in the class. Example, you should complete this in 15 minutes. Okay. So here double the time we will take. 30 minutes we will take. With this, all the questions in this particular chapter will be done. Before going into that, first tell me, raw material. How much raw material we are consuming? First tell me. 6 lakh? 6,75,000 is for 1 month or for 1 year? Everyone? How many months it is in holding? Wrong. At the credit period, calculation of creditors that will be useful. Stock of raw material and finished goods is held only for 1 month. Yeah, read the question properly, I said. Okay. Tell me now. Sorry. Raw material. Tell the value. 6,75,000 into 1 by 12. 60. Write down. 56,250. Okay. Now tell me. Number 2. Raw material after what will be there? How much is a work in progress? No work in progress. Right on. Number 3. Very, very important. 4 marks or 5 marks they will give for this adjustment itself. Reason I will tell you why. See there. Look at the scenario. They didn't give the question in the way in which we have done till now. Variety type they ask the question. Sales given, materials given, wages given, manufacturing expenses given, admin expenses given, sales and promotional expenses also given. Okay. Now I ask you one question, first answer. Sales is how much? Answer, sir. 27 lakhs is the sales. Okay. We are now asked to calculate the finished goods. Okay. See the question and tell. Materials will go into the finished goods. Materials will go into the finished goods. Wages will go into finished goods. Manufacturing expenses will go into the finished goods. Administration overheads, sales promotion overheads will be taken, will not be loudly. This is the point. Okay, na? Now first answer to my question. How much is the sales? How much? How much is the finished goods cost? Finished goods cost. I am asking very clearly in English. What is the cost of finished goods? Sales value I am not asking. How will you calculate that? 6,75,000 plus 5,40,000 plus 60,000. But the point you have to understand is the 60,000 is for 1 month. Okay. So manufacturing expenses payable is 60,000. Paid payable? Ante payable ante yet to be paid already paid? Yet to be paid is 60,000. That means 1 month 60,000 is pending. So total expenses will be 60,000 into 12. Did you understand the point or not? How much is the total? Start again. Manufacturing expenses are paid at the end, payable at the end. Ante arrears are yet to be paid already paid. That yet to be paid is how much? 60,000. That is for how many months? 1 month. 1 month is 60,000 means total wages for 12 months will be how much? Understood the point or not? How much is 7 lakh? 7 lakh? That's the point. Okay, na? Tell me what is the total cost of finished goods? 19 lakh? Loudly, 19 lakh? Can we take the 19 lakh 35,000 or not? You cannot, because depreciation is there in that. How to calculate? Because he is asking us to calculate on total cost or cash cost. What should come out? But how to calculate? That's why this problem came for 12 marks in exam. Okay, we have to divide. Shall we? Easy way only, just some application. First tell me, please don't write, I will write first. Sales how much? Please help me. Sales how much? 2 branches, Cost of sales, gross profit. Gross profit margin is how much percent? And that will be on the sales. Margin is always on the sales. Tell me, 27 lakh into 20%. Everyone? What is the balance? 21 lakh? What is 21 lakh 60,000? Cost of sales or cost of goods sold also you can write, okay? Next, I will divide this into 3 parts now. What are the 3 parts in this cost? What are the costs involved? Raw material, wages, overheads. Raw material, wages, overheads. Which overheads? Manufacturing overheads. Okay. Now, raw material. Their question given, everyone. How much? 6 lakh? 75,000. Wages? 5 lakh 40,000. Balancing figure will become the manufacturing overheads, or technically you can do like this. Manufacturing overheads is how much? 7 lakh 20,000. Okay. In this manufacturing overheads, what is also included? Everyone? 2 branches will be there. Cash manufacturing overheads, depreciation. Okay. Tell me, what is a cash manufacturing overheads? That question, listen carefully. Up to here, everyone understood the workings clearly. Yeah? Sir, one second, please. Listen carefully. First one, how much is a sale? Listen, yeah, how much is a sale? 27 lakhs. How many parts are there? 2 parts. Number 1, cost of sales or cost of goods sold. Next one, gross. Rather than using it as a cost of goods sold, I can call it as a manufacturing cost. Which cost? Manufacturing cost. How much is a manufacturing cost? 21 lakh 60. How many manufacturing costs are there? Raw material, wages and manufacturing overhead. Now you will get a doubt. I know what is running in your mind also. I know. If at all you apply some, shall I tell you what doubt you may get? Sir, you didn't take 1,80,000 and 90,000. This also you shouldn't take, sir. What is this, sir? Yanna, sir. Wrong, sir. Avesam illa, sir. First point, shall I tell you? Those all are paid out of gross profit. Are you understanding what I said? What is the sale? Do you know P&L, trading P&L? It is trading account. P&L account, all those expenses will come. P&L account expenses will be paid out of gross profit or net profit. From that 5 lakh 40 we will pay all these, 1 lakh 80, 90,000, all these. Did you know, understand the point or not? How many of you got this doubt? So this doubt, why these 2 expenses are missing? Did you understand what is my answer? I repeat one more time. Maybe you may get a doubt. Maybe today you may not get a doubt. At least at the time you do at home, the doubt will come. At that time you will think, why? Why? Out of the bouncers are coming. Sales is how much? Please see there, let us complete. Sales is how much? In that, what is the gross profit? From that 5 lakh 40,000, what expenses you have to pay? Administration, selling expense, all this comes out of gross profit. P&L, trading P&L, you know na? Trading P&L, trading account, what will come? Gross profit will come. Trading P&L, what will come? Opening closing stock, you forget. What will come? Purchases, sales, direct expenses, all the, those are all the things. 21 lakh 60. Salaries, sales expenses, other indirect expenses, you will be paid in trading account or P&L account. Therefore, 5 lakh 40 will pay all those. Are you understanding the point or not? This is net profit or gross profit? Net profit or gross profit? From there we will pay all those. Okay na? See the screen. How much is the sales? What is the 80%? What is 80%? Manufacturing cost. That value is how much? Gross profit how much? Manufacturing cost is broken into how many parts? 3 parts. Number 1, raw material. Number 2, wages. Number 2, manufacturing overheads. Up to here everyone understood? Answer? Yes, see the screen once. See the screen once. Depreciation amount was given. They said that depreciation is a forming part of the cost of production. Forming part of the cost of production. Okay. Now I will ask you one question, first answer. Asal up to here everyone understood clearly? Copy down up to here. Last part I will tell, after that you write down. Working is required. Once you do that you will get a clarity. I know, yeah. Copy down. I know. You are telling manufacturing overhead 5 lakh, I know. Just I have written like this, just we have to add another value. Sorry, for your satisfaction, copy down up to here. That's why I said balancing figure, if you remember. But just I have written 7 lakh 20 for your understanding. In that 7 lakh 20 is the manufacturing overhead. Write down up to here. Sales 27 lakh, manufacturing cost 21 lakh 60, gross profit 5 lakh 40. In the 21 lakh 60,000, raw material is 6 lakh 75, wages is 5 lakh 40,000. Okay. Tell me now, what is the, up to here copied, what is the balancing figure here? 9 lakh 45,000. In this, they have given two branches, right? Down along with me now. In this, they have given two branches. What are the two branches they have given? Cash, cost of production, and next one is the depreciation. Cash cost of production, you tell me how much it is? 7 lakh 20,000. Balancing figure 2 lakh. That's all. This is a calculation, bro. Dedicated to you. I just written 7 lakh 20 to understand that there is a cost already given. Balance will be the depreciation part. For that I have written. Sir, okay, no problem. Understood the concept up to here clearly? So how much is the depreciation value? 2 lakh 25. Sir, first this is the only important adjustment and complicated adjustment. Remaining everything is dead simple in this chapter, in this area. Please see the question now. What are all the three things we calculated? What are all the three things we calculated? Raw material. How much is raw material? 56,250. Work in progress there or not there? Not there. Finished goods. Finished goods, how much totally? Tell me, when you ask money from the bank for finished goods, we are doing on total cost or cash cost? Means for what we should not ask the finance? So we should ask only for what? 27 lakhs you can't ask, because in that profit of 4 lakh, 5 lakh 40 is there. Sir, 21 lakh 60,000 can we ask? No, because in the depreciation is there. So 21 lakh 60,000 minus 2 lakh 25,000 you have to take. 19 lakh? This is for 1 month or 1 year? Finished goods will be in the stock for 1 month. 1 lakh 61,000? 250 na? See here. Low. AFM Miller, see here. How much is answer? 1,61,250. Like this we have to do. So everyone understood concept clearly, yeah? So we have to take cash cost or total cost. Depreciation will be taken or will not be taken? Gross profit is a cost or profit? That also you have doubt. Gross profit is a profit or cost? Therefore on that they will not give you finance. Second one, depreciation is a real cost or not a real cost? On that also they will not give you the money. They will give money only to the extent of the real cost that you are incurring in the production process. That amount is coming to how much? 19 lakh 35,000. That for 1 month will be 1,61,250. Everyone understood up to here clearly? Yeah. Remaining things I don't want to ask you to do. Just let us see the screen. Let us see the answers and we'll go to the next part. Okay. From here, everything is same. Same represents whatever we have done in the previous part. Tell me, how many we completed? Raw material completed. Work in progress completed. Anyway not given. Third one. Over. Next one what will come? Debtors, creditors, cash. Tell me what are those? Debtors, creditors, cash. Creditors, when you do, two types of creditors are there. Raw material creditors, time lag of creditors. Listening or not? See. Let's do directly. Don't even do, just see the answer. Tell me. We are doing debtors on cash cost or total cost? Means profit to be included, not to be. Loudly? But admin and selling overheads will be included, will not be. Therefore we added that, we calculated. I'm talking to you everyone. Next. How much I prepaid? Some people are now seeing, oh, prepaid is there in the question. Sales promotion paid in advance. Okay. Sales promotion paid. Sales promotion paid. How much I paid? 90. In that, how much I paid in advance? Quarterly I paid. And per annum, how much it is? Per annum, how much it is? So I paid. In that, advance is also there. How much advance I paid? 3 months advance money also I paid. See here. Working I will show you. See. Prepaid expense. How much I paid in advance? 22,500. Do you know what do you mean by that? 90,000 minus 22,500. Calculate. That much is the per annum ones. But I paid 22,500 in advance. Okay. Creditors for goods. Sir, when I say creditors for goods, we should take the finished goods or raw material. How many months of credit is given for raw material? 2 months. So 6,75,000 into 2 months. Up to here, understood the point clearly or not? Yes, answer everyone. Okay. So now answer my question clearly. Hey, listen. So the point is, what is the most important adjustment in this entire question? What is the most important adjustment in this entire question? Depreciation is the only important adjustment, that to calculation of the finished goods stock. Okay, that's all. After that, raw material, wages, overhead, all these you need to write in a list, calculate them. And how much is the safety margin he is asking in the question? Whatever you get as an answer, see here, whatever you get an answer, working capital, for that what we need to add? Safety margin of 15% you should add and calculate the total working capital requirement. Everyone understood the concept up to here clearly? With this, the total concept of the working capital estimates has been completed. But time period calculation we didn't do. Up to here what we have done? Value estimates we have calculated. Now what we have to do? Operating cycle we have to do. Okay, this time I am expecting operating cycle only to come. See there once. See there. First, what is this? First Gandhi Tata. With Gandhi Tata, let us start. First, what is there? Cash. Answer. Cash. What happened to cash? And my cash is blocked in raw material for how many days? My money is blocked in for how many days? Work in progress law, how many process we are doing? 3 process we are doing. Completed. It became what? My cash is blocked in finished goods for how many days? Finished goods are checked, quality control, everything set. Okay. Available for sale. It became what? Debtors. Blocked for how many days? Again debtors. Became what? Cash. Now tell me, this all period of is called as what? This is called as the working capital cycle. Are you understanding the point or not? This is how it will be calculated. Okay. This formula, how you remember, I don't know. You have to remember. Okay. I'm putting it on the screen. Please see here. How you remember is none of my business. You have to remember. If you don't remember, 6 marks of FAT. Okay? See there. What is the question that was asked? What cycle? Operating cycle or net operating cycle. Okay? These are all the formula. You can remember that once you put some effort after going home. But the point is, how to do that is a question. This is how the questions are being tested on operating cycle. See here, I will show you the question first. One second. Read. What is the question? From the following data, you can see our RTP, MTP. Sir, 1 second. We have done working capital estimates chapter, correct? You take any question from study material, any question from RTP, MTP, you will be able to solve. Beyond this, questions will never come in exam. Never. Because beyond this, there is no concept to ask. If he has to ask, he has to ask the question from any of these concepts. There is no concept of asking beyond what we discussed in the class today. Listening? In this only small adjustments they can make and they can ask the question. Beyond this mode also there is no change. See there. 2 years question was given. From the following data, compute the operating cycle and comment on the increase or decrease. Comments okay. Lastly you can just read. Stock of raw material. Year 1 how much it is? Year 2? Next. Stock of work in progress, stock of finished goods, purchases, cost of goods, sales, debtors, creditors, all these are given. Consider how many days in a year? 360 days in a year. What he is asking us to compute? The beginning line you read here, please. What you have to do? Operating cycle period. And how many days your total money has been blocked. Okay? Days I want. One by one I will show you. See there. So first thing, always numerator what is there? Numerator what is there? Which stock? Answer? Opening stock or closing stock? Adi raw material stock. Answer? No. Year 1 ki 0 year information they didn't give you. Therefore year 1 ki will take the closing stock given there. Year 2 ki year 1 closing becomes the opening there. Babu Chitti. Listen, exams are very near. Please. Question directly it may come. At that time if you could not do na, tears will not come, blood day. Direct. Class like he said I didn't listen. This will blame you for next 4 or 5 months. Please do that properly. So the question is I am having at least some amount of sixth sense to guess what kind of questions might come. These kind of questions were asked long back. Not tested. So a chance is there. Next immediate attempt September they can ask a question from this. Chance. Okay na? Normally in our study material this question is not there. Nowhere. You can check the study material also. From some RTP I have written this. Question comes in examiner direct same ditto they will copy paste with change in numbers. Isn't it? So please be very careful with this calculation. Just a formula you remember. Tell me the point. We are doing for 1 year or 2 years. 2 years. Huh? 2 years. Year 1, year 2. For 2 years we are doing. Year 1 when you do, year 0 information available or not available? Therefore you can't calculate average for year 1. But you can calculate average for year 2. Why? Can you tell the average stock for year 2? You need not 24. 27. So 20 plus 27, how much it is? 47 divided by 2 you take 23.5. Have you got the answer? How much 23 point? What is the 23.5? Everyone? That's all. You can calculate that way. First year you can't calculate average because reason? There is no opening stock for the first year. If the 0 year information is also given, then you have to calculate average only in the numerator. Listening everyone? Okay, first. What is the raw material holding period? Tell me. Raw material stock by raw material consumption. What is the raw material stock? 20. What is the raw material consumption? See here, purchases. How much is a purchase? When nothing is said, purchases will be taken as the consumption. Purchase will be taken as? Loudly? Purchase will be taken as? So tell me, second year what is the consumption? Second year what is the consumption? Wrong answer. Opening stock, closing stock adjustment you have to do. I know what you will tell. Listen again. One second. Look here. One second. See the screen? First year what is the consumption? First year what is the consumption? Answer? Second year consumption 135. Mental anukuntaడు. Second year opening stock, closing stock information is available or not? Costing, tell me what is the consumption formula? Minus closing stock. Tell the answer. 128. That will be the consumption. Numerator what you should take? Stock, average stock. Denominator raw material consumption you should take, not purchases. Raw material consumption. What is the consumption of raw material formula? Opening stock plus purchases minus closing stock. See here. This is the answer for year 1 and year 2. Next what we need to do? Year 2. See here. Did you understand the answer or not, everyone? Next question. What is the second one? Stock of? Tell me. What is the work in progress stock for the 0E, or the first year? 14. Divided by cost of production. See here. Cost of goods sold will be assumed to be what? Cost of production. Now tell me. Cost of production will be given. Finished goods stock should be adjusted to that. What should be adjusted? Tell me, what is the finished goods stock? 21, 24. Second year you calculate 180. This should be the answer. See here. Just for your calculation I have given. Cost of production plus opening stock minus closing stock will be equal to cost of goods sold. Already what they have given in the question? Cost of goods sold they have given. Opening stock, closing stock also given. So cost of production is the balancing figure. How much is answer? 183. This is all for the first year or second year? Answer. So no problem in case of first year. Problem will come only in case of second year. That's all. Remaining all the concepts are same. Just apply the formula, apply the numbers and calculate the answers. Understood how to do this? You will get the timing. See the screen? You will get the timing. 75 days, 36 days, 54 days, 72 days, 60 days. Tell me. 75 raw material, 36 work in progress, 54 finished product, 72 debtors, and 60 days will be creditors payment. Creditors, why we reduced? Creditors is a benefit, creditors is a cost, benefit. Remaining all is a cost. So tell me, what is my net working capital cycle? Can you please tell me what is 177? Adi okay, what do you mean by that? Cash, to become cash, it takes how many days? 177. 365 by 177. 2 point? Almost how many? 2. And in your company, how many operating cycles are there? Worst company. Okay? And we have to wait for how many days? Answer. Almost half the year. And today if you put 1 rupee, that 1 rupee again come back to you after 6 months. We have to wait for that 1 rupee to come back. Lesser operating cycles are more operating cycles are? Lesser operating cycles are more operating cycles are? Lesser operating cycle. I told you, financing is required, more financing is required, less financing. More financing, because your cash is blocked for how many days? 177 days, almost 6 months your money is getting blocked. Clear or not, everyone? Second year, is it developed? Whoa! Our development. How much development? 6 days they developed. So how much it was reduced to 171. Again, almost the same situation happened even in the second year. So how much it is? 171 days. Do you know what is 171 and 177? Half a year almost, correct or not? And your cash will become cash after 6 months. And from this, what you have to understand, in your total year life, your cash will become cash only 2 times. That means 6 months bank has to finance your working capital. If you can increase that cycle, automatically reduction will be there. Sir, how to increase the cycle? They don't ask in question, but just example sake I will tell you. How to increase the, do you know what advice we can give? Number 1, reduce the raw material stock first. Means what? Go for just in time purchase. Go for Costing it will be there. Just in time. Just in time means what? When a person comes and give order, then you do that. Rather than putting the stock. That way you can reduce 75 days. You can reduce how many days? 75 days you can plan. Work in progress. Do you know how to increase the work in progress? Understanding the bottlenecks. Understanding the bottle. If I bottle neck ani ponda. Actually bottle neck, but intention let us see. What is this? Bottle. I will open the cap and I will turn to the downward side. Water will flow or not? Answer. If the pressure in the water is 2 units in the upper part, there will be only half the pressure in the lower part because the bottle neck is making it to come slower. If the nozzle is very big, the opening is very big, automatically what will happen? Entire water will flow with speed. In your production cycle also, some machines are bottlenecks. You have to increase the bottleneck size. Once upon a time when I used to tell the costing, mechanization process, beautifully we used to explain. Always bottlenecks area should be increased. Sir, every production process there is a bottleneck. There is a, do you know what will happen? Process 1, process 2, process 3. Process 1 machine, speed. Process 2 is a bottleneck machine. You have to replace process 2 machine with a better bottleneck now. Now what will happen? Your 36 day may become 10 days only. Listening or not? Done. After that, what is the next one? After that, what is the next one? Don't put more stock. If you maintain more raw material, more finished goods will be there. If you are not maintaining the raw material, finished goods stock will not be there. So 75 days become almost 5 days and this 54 will become 4 to 5 days. Listening? After that, what is the next one? 72 days. Which fool has given that 72 days? Creditor. Credit cards also not given that much days. 40 days. Credit cards 48 days is a collection period by RBI. How many days I have given? 72 days I have given. Reduce it to half. Are you understanding? Next one. What is the next one? Creditors payment. Try to increase this. Lift kara de. You push it back again. 60, make it 70. Ask your creditors. If possible, beg them. So make it 60 to 70, 70 to 80. That you increase. In the talent is not there. For our debtors we will give 72. For us that fellow is giving 60. So if you can reduce like that, this 177 will become 70, 60 like that it will become. Then how many cycles you can operate? 6, 7 cycles you can. More. Can't you tell the number? 60 days it will become how many cycles? More cycles. More cycle, okay, I understood. How many cycles you can operate? 6 cycles you can operate and your money will be circulating for how many times? So you will take loan for 6 months, you will take loan only for 2 months. 2 months, then interest cost will be 2 months cost. Like that you can reduce and maintain the company, you can develop the company. This is what the role of a finance manager in a company. With this we complete working capital estimates. Okay. Take break and come. We'll start with the remaining small parts and complete it, and lastly I will give some revision on leverages chapter. Okay, take a break and come. What is the next chapter? Cash management. $15 minutes we will spend on this cash management. 15-20 minutes. Next another 5-10 minutes we will discuss about EOQ. Okay. Once both are completed, we go to the debtors. Shall we start? Okay. Now, see here once. Listen. So, the next chapter we are going to begin. The name of the topic is cash management. Name lone very clear. It is about the management of the cash balances in the company. That's why the name of the chapter is cash management. Let me make it very fast and put it into easy way. There are 3 topics in this. Number 1, cash budget. Number 1, cash budget. Number 2 will be Baumol model. Number 3 will be Miller and Orr model. These are the 3. Okay. So when it comes to cash budget, I clearly written cash budget preparation is not covered here since there is a dedicated chapter in the costing paper, namely cash budgets in the budgets and budgetary control chapter. So I am not covering that. So remaining, let us fastly summarize this particular concept. Maybe you might have seen all these in our Telegram channel also. I kept the notes. Which one? Which concept? Cash management. I have already kept in the Telegram group. Whenever you want, you can get the access done. So now let us understand. See here. Concentrate properly. 15 to 20 minutes we will complete the cash management concept. Okay. Observe there. Suppose a company raised a capital of rupees 10 crore. Out of the 10 crore, 8 crore is invested in fixed assets. Okay. Tell me, how much a company has raised? In then how much is invested? How much is the balance? In that balance of 2 crore, 1.8 is blocked in the form of stock. Listening? 1.2 crore is blocked in the form of stock. Next, debtors, etc. The balance of 20 lakhs cash, 20 lakhs is held as a cash. Okay. Sir, I will ask you a question. First answer. If you have fixed assets like plant and machinery, how much is the amount available with us totally in this example? In this example, how much is the total available? 10 crores, how much is invested in the fixed assets? Means 8 crores invested in the plant and machinery. Plant and machinery, why we have to invest? Because plant and machinery generates the sales. Plant and machinery generates sales. Therefore, for the sales, we invested in the assets. So that's why we will have turnover to total assets ratios. Turnover to, also called as the activity ratio. Which ratio? Activity ratio. What is the formula for the activity ratio? Turnover by total assets. Loudly. Turnover by ratios analysis chapter if you want. 6 videos of ratios analysis I kept in the YouTube channel already. How many? 6 videos covering full ratios analysis. Okay. Whenever you want, you can listen to that. That's why I'm not covering that in the class and wasting your time. Listening? If it is there already, you can refer there. What is not there, let us cover here. Listening? Leverage is also same. Leverage is also kept in the same way. So therefore, let me first cover all the remaining concepts of 40 marks. Okay. So listen carefully. Point number 1, the cash management. With regard to the cash management, the first observation. Whenever company raises money, let us say 10 crore. 8 crore they invested in plant and machinery. Means money is blocked in the form of which one? Here also money is blocked in the form of plant and machinery. But the plant and machinery will generate production and sales. Production and that's why we are blocking the money in the form of plant and machinery. Number 1 over. Okay. Number 2, 1.8 crores. How much balance is there? In the 2 crore, 1.8 crores was invested in the raw material stock. Why you invested in raw material stock? Raw material stock, if you don't invest, how come the finished goods will come? Again, raw material will be converted into sales. That is the motive. So now tell me, why you invested in plant and machinery? Sales. Why you invested in raw material? Sales. Why you make work in progress? Sale. Why you prepare finished goods? Sale. Why you created debtors? Credit sale. At the end of the day, motive is what? Sales. Loudly. Sales. So sale is the final motive of everyone. Understood? Sale is the final motive. What is the primary motive? Asset. Assets, like if you invest properly, sale will get generated. Assets not used properly, sale will not get generated. From this the logic started. Please listen carefully. 10 crore I have. 8 crore I invested in plant and machinery. 1.8 crore I invested in stock. Meaning is there. Because everything is getting converted into cash. Or I mean into sale. Sale at the end will get converted back into cash. But the question is, why you are maintaining the cash balance? Why we are maintaining the popular theory question for 4 marks. Why companies maintain cash balances? Because cash is not a sale. Cash is not a sale. Stock, saleable, plant and machinery, generate sales. Now tell me, what is the purpose of cash? Why companies has to maintain the cash balances? They have to maintain cash balances with totally 4 motives will be there. How many motives will be there? 4 motives will be there to maintain the cash balances. One by one, let me explain. Please see here. What is the first one? Everyone, what is the first one? I will give you an example. Tell me. Collection of debtors is in the hand of company, is in the hands of the debtors. Collection of debtors is in the hands of the debtors, is in the hands of the company. Answer. Payment to creditors is in the hands of the company, is at the order of the creditor. Now you tell me, I gave you loan, you gave goods to him. Okay, I gave money to you. I'm a creditor. I gave goods to you. You manufactured and sold to someone for credit. Collection from him is your right, but collection from you is my right. Listening? I came to you. I said, give my money. You said, let my debtor give me, then I will give you back. I will wait. That means every company will have inflows as well as outflows. Every company will have inflows as well as outflows. Both will be there simultaneously. Your inflow you can postpone, but your outflow to whom you should pay, they will not wait till you collect. For them to pay, I need to maintain some cash balance. Read the first one. Popular theory question. Read. Daily, there will be inflows and outflows. Company has to settle its outflows, say creditors, on a timely basis. That means company can't wait for its inflows to settle its outflows because inflows and outflows rarely matches. Continue. Hence, every company has to maintain a cash balance to settle its payable. Suddenly, if a creditor come, due date came, debtors are not paying, you should not ask a creditor to wait till the debtors pay you. Listening or not? You have to pay your creditors. That's all. For that, we'll maintain a cash balance. That's the reason number one. What is the reason number two? Please read, sir. What is the motive two? What is the second motive? Everyone? I will give you an example. What is this compensatory motive? Compensatory motive means bank's life you maintain a balance of cash. Bank's life you maintain the do you know what advantage you will get? Whenever you get the huge bank balances, if you maintain with the bank, circulation of money will increase. Correct or not? To whom circulation will increase? Bank. Circulation of cash will increase for the bank. Bank will have two types of customers. See there, that's what I have written. What is the first one? General account customers, high valued customers. High valued customers means who maintain 10 lakh, 15 lakh, 20 lakh bank balances. They maintain, those people are called as high valued customers. Whenever you are a high valued customer, bank will provide lot of free services to you. What services? For the amount you are blocking, as a compensation, bank provides lot of free services to you. Example I will tell you. Your employee's TDS deductions and TDS details, banker will put one employee and he will get it done directly. Your pension and bonus disbursement every month, bank will take care. Means whenever you put lot of cash balances with the bank, you are blocking your money or not? Answer. As a compensation for blocking your cash, bank will give you lot of free services they will give. Actually, you should not call it free service because my money is getting blocked or not on the other hand. As a compensation for the blockage of fund, they provide lot of free services. For that compensatory services, they will maintain the money with the bank. Please read. There are various customers with the bank, namely general account customers, high valued customers. High valued customers are those who make huge transactions using the bank and who maintain huge account balances. For those high valued customers, bank offers free services like payroll payments, means salary payments. Next, payment of electricity bills on due dates without charging any extra fees. All those free services are provided since they maintain huge balances in the accounts, giving huge interest to the banks. Banks stop giving these free services once the account is closed or balance is withdrawn. Listening or not? And they are not doing any favor to you. For putting your money and blocking with them, as a compensation, they will give you these free services. For that free services, companies will maintain cash balances. So what we are dealing now? Cash management chapter. What we are reading now? Why company has to maintain cash balances if nothing is coming in the form of money? Sir, idle cash will also lose the interest or not? Then why we are maintaining? Because of these reasons we are maintaining. Listening everyone? You know third motive is easily understandable. What is the third motive? Obviously, suddenly if some contingency comes, who will give money? We will have in our life savings or not? Why we maintain savings? Why we will put some cash with us? Because suddenly if something comes, who will give money? For precautionary conditions, contingencies, they will maintain some balance. Understood the point or not? Last one is very, very important. What is the last one? I will give you an example here. Listen. Shall we? Generally, I used to buy from generally, example, a company generally buy from supplier X. Supplier, generally I maintain a balance with him. I maintain balance with him means I make a credit purchases from him. From whom? Also called as what? Creditor. From the creditor I generally make which purchases? Cash purchases, credit purchases. I make credit purchases from my supplier. Okay? Credit purchase 1 unit equal to 1000 rupees. Okay na? Now listen what happened. One day there is a sudden announcement by Amazon saying that Big Billion Sale started or Great Indian Festival started. Same raw material which I buy from him, 50% cost kit is available. Do you understand my point or not? How much cost kit is available? 50%. But they said that it is available only on cash on delivery. Available only on? Now tell me, I can use EMI, I can use Amazon Pay Later, I can use a credit. Mandatorily you should pay in cash. Then what I should do? I will buy from supplier X at double price. I will pay cash and buy at a half price. And for that payment in cash, I should first have the cash balance. For that, companies will maintain the cash balances. Do you understand the point or not? Read. Companies also maintain cash balance by taking advantage of certain speculative event like sudden discounts announced on raw materials, etc., where the advantage can be taken only if they have cash on the date. Everyone understood the point? Shall we go to the next one? See here. What is the first one? Baumol model. Okay. Sir, what is this Baumol model or Miller-Orr model? Let me first explain the point. See here. I will first explain you the logic. After that, we will do this particular calculation also. What is the formula? OTS means optimum transaction size. OTS means what? Optimum transaction size equal to root of 2CT by I. ICAI style illustration also I created one illustration to explain you. Once after that we will do one question also on this. Once it is done, there is a concept called as, what is the name of this concept? Miller-Orr model. Once that is also done, then this chapter will be over. Which concept? Cash management. Before that, first let us see this model. What is this first model? Baumol model. Okay. Let us read the concept first. Start. Sir, everyone, which chapter we are reading? Read it. Beginning of the year, company estimates a annual cash requirement of rupees 12 lakh. C equal to 12 lakh. Annual cash requirement is called as C. C represents monthly, daily, annual. How much? Why cash is required? To meet the expenses. Just now we told. For those 4 reasons we need cash. How much cash is required per annum? 12 lakh. Continue. However, maintaining physical cash balances is not recommended since they do not generate any interest or return. Now the point started. Tell me, in our previous example, how much cash I have? First example, how much cash I have? How much I raised? 10 crores. In that, how much I invested in fixed asset? 8 crores. How much? 8 crores. In that 8 crores, invested in fixed assets. Balance 2 crores, 1.8 crores I invested in the... How much is cash balance? Why I maintain the 20 lakh cash balance? 4 motives are there. Motive number 1, transaction motive. Motive number 2, compensatory motive. Motive number 3, precautionary motive. Motive number 4, speculative motive. Hey, remember, how much I maintain? How much? As what? Physical cash. There is a problem with the physical cash. 2 reasons, 2 problems. One, safety. One, safety. Second one, interest. If you put as a physical cash for 100 years, 100 rupee will be same 100. It will not even become 100.1. But if you put the same 100 in some bank balances, etc., you will generate at least some interest. Generate some? Now listen. Instead of putting your money in bank balances and getting 5%, 3%, 2% return, Baumol model says that do one thing. Do you have cash balance? Yes. You do one thing. Put some amount in physical cash. Put some amount in? Put some amount in the form of marketable securities. Loudly. Which security? Marketable securities means what? Invest in Government of India bonds, invest in Kisan Vikas Patra, invest in National Savings Certificate, invest in some highly liquid bonds such that whenever you want money, sell those securities, get the money back. Are you understanding or not? Sell the money and sell the securities and get the money. This is the best way. Means don't put always money in physical form. Put some amount in the pocket as a physical form. Put the remaining money in the form of marketable securities. Loudly. Which security? Marketable securities. Read there. However, maintaining the physical cash balances is not recommended since they do not generate any interest or return. Therefore, companies maintain their cash in marketable securities that till they are put in use, they generate return and then utilize accordingly. When company needs cash, they will sell marketable securities. Marketable securities are those securities which are convertible into cash and get the cash needed. 1 minute time, read this properly. Cash Baumol model, if given in examination, you will be clean bold. If you don't listen carefully, not asked in the last 5-6 attempts. So if he has to ask a question from cash management this time, either Baumol model will come or Miller-Orr will come. 99% cash budget they don't ask in FM, they will ask in costing. Read. Shall I go to the next one? First tell me what we are discussing now. Cash balance should be maintained in the form of physical cash, in the form of marketable securities. Everyone? I will ask one question. Putting every rupee in the form of physical cash is better. Putting every rupee in the form of marketable securities is better. Both are dangerous. Do you know why? Putting every amount in the form of cash is dangerous because interest loss and safety problem. No. Yes, putting every amount in the form of securities is also difficult. Do you know why? Heavy brokerage charges will be there. For example, I want 35 rupees. For that also you will sell a security. Did you understand or not? For example, I kept 5 lakh rupees in securities. How much? 5 lakh rupees in securities. I want 35 rupees. For 35 rupees, how many shares you will sell? You can't sell. Problem will come. Therefore, here the concept is not about, putting money in marketable securities, putting money in cash. How much amount you should put in marketable securities and how much amount we have to put in form of cash is a question. That's why what is the optimum transaction size is a question they will ask in exam. Did you understand the point or not? Read. Just you read yourself. If you understand, it's enough. See below I have given, if you sell more marketable securities, if you sell less market, every concept I have given there. Read first. Advantages, disadvantages, read properly. Exam questions, all are theoretical questions given in exam. Read everyone. Done? Shall I ask the question now? What is the advantage of asking even 1 rupee, 10 rupee, 15 rupee, 20 rupees also from marketable securities? What is the problem? Having huge cash balance, what is the problem? Having physical cash, what is the problem? First one interest lost, second one is a theft. I told na safety. Answer. Yes, what yes? Denik yes. Understood the concept or not? Theft, pilferage, all these problems will come when there is a physical cash. But if you put the same amount in the form of marketable securities, theft problem will not come. But there is another problem, transaction cost. Because I wanted to sell 150 rupees worth of securities. For that also brokerage will be same. Fixed brokerage, 10 rupee, 10 rupee, 10 rupee if they charge, now gone. 1000 transactions if I do, 1 lakh rupees will be gone in the form of brokerage charges. Clear? So, if you sell, see there, 2 branches I have given. If we sell, that I want you to expect you to read here. Read this. If you sell marketable securities in small lots. What do you mean small lots? 5 securities, 6 securities, 2 securities. If you sell like that, na, advantage is there, disadvantage also there. Read the advantage. But what is the disadvantage? High transaction costs due to more transactions. Next, if we sell in bigger lots, what will be the problem? Low transaction cost due to less transactions, but high opportunity cost of loss of interest. Okay, so this is a problem. 1 minute I am putting it before you. After this there is no chance. If you have any doubt also you can ask. Read advantage, disadvantage. Next, selling in a higher lots, selling in smaller lots. Read properly, we go directly to the formula and answer. If you are completed, we will go to the next one. Next, tell me. Maintaining the money in cash is correct, marketable securities is correct, combination is correct. But how much is correct? That's what we are going to see. How many lots you need to transact the marketable securities is the question now. See here. First, hence the model emphasizes optimum transaction size at which interest loss and transaction cost set at minimum, and it is represented by the formula OTS. What is OTS? Optimum means what? Not formula, means what? In what size of lots you need to sell the marketable securities, at which cost of brokerage and opportunity cost of loss of having cash balances both will be same. Both will be simply it is called as an optimum transaction size. Simply it gives optimum transaction cost. Means a cost where everything will be kept at a minimum level. Read. OTS equal to root of 2CT. What is C? Annual cash requirement. T? Transaction cost per transaction. Loudly. Transaction cost per. I equal to interest cost. Sometimes it will be given in rupee or sometimes it will be given in percentage. Okay. First, see this illustration. Tell me. Projected annual cash usage. How much cash I want? In a year, how much I want? Company periodically sells the marketable securities to meet its cash requirement. Marketable securities will give a interest of, return of how much percent? Cost of transaction cost. For each transaction, how much is a brokerage? 40 rupees per transaction. Okay, na? Sir. Use Baumol model to calculate 3 things. Read the first question, what he is asking. Optimal transaction size. Tell the formula. Root of 2CT by I. What is C? Annual cash requirement. How much? 37 lakh 50,000. T means what? Transaction cost per transaction. Okay. Next. I means what? Here interest is given as a rupee terms or percentage terms or percentage term. Okay. First tell me. He is asking how many questions for us? He is asking how many questions for us? 3 questions. See here. Annual cash requirement 37 lakh 50, I equal to 12%, T equal to 40 per transaction. Root of 2 into 37 lakh 50,000 into 40 divided by 0.12. Answer came to how much? 50,000. Please tell me what is this 50,000? Means what? Means what? Optimum transaction size. What do you mean by that? Every time whenever company want, it should sell marketable securities in the lots of 50,000. Lots of? 50,000. So for example, I want 89,000. I want how much? 89,000. Don't sell that much of lots which equals to 80,000. Even though you want 89,000, sell 2 lots completely, get 1 lakh rupee. Are you understanding the point or not? Okay, tell me. The company require how much cash? For 1 month or per annum? It mobilizes this cash by selling what? Marketable security. Every time it has to sell how much worth of marketable securities? 50,000 worth of marketable securities. I will ask you one question, answer. If I sell like this, what is the advantage? If I sell in 50,000 lots, what is the advantage? At this level, if you sell, transaction cost will be lower, interest loss of idle cash also will be lower. Am I clear or not? Sir, prove, sir. I will show you the proof also in the next question. Before going into that, first question answer everyone understood? Tell this question first. How much is the annual cash usage? What is the interest the marketable securities earn? What is the cost of transaction? Now tell me, what is the formula? OTS equal to root of 2CT by I. What is C? What is the T? Transaction cost per transaction divided by I. I means what? Interest. Interest is given in rupees or percentage? Therefore 0.12 we have written. Totally we got some answer. Root answer totally came to 50. Means what do you mean by that 50,000? How to present the answer in exam? What is the meaning of that 50? Company has to sell marketable securities of each lot at worth of 50,000. Done. Next. What is the next one he is asking? Average cash balance. Average cash balance means average of 50,000. How much average cash balance we need to maintain? 25,000. Number of transfers required. See here. What is the third one? Transfer required during the year. Number of transfers required. Tell me, totally how much money we require? Very bad. Everyone, 37 lakh. Each transaction, how much worth I am selling? And how many transactions I will do? 75 transactions we will do in a year. Everyone understood all the 3 answers? Okay. See these ones. Sir, beyond this in a revision class, don't expect exam question comes, we should be able to solve. First, that is the motive of the revision. Clear everyone? If you did not do cash management, how many of you saw this for the first time? See, if question comes, what is your situation? Ade problem, that's why. Now this is not the time to learn about each and every minute point. Regular class, the minute details also we can understand. But as of now, first try to understand one point. If question comes in exam, are you able to solve the answer now? Yes, sir. Tell me, what is the formula for the optimum transaction size? Root of TCT by, what is C? T means transaction cost per transaction divided by interest. Okay, 0.12 is the answer, 50,000. What is the meaning of 50,000? You have to sell marketable securities worth 50,000 in each transaction. Then only optimal cost you will reach. Over. After that we went into the average cash balance and number of transactions. Second question also you see. This question is also on the same. This is one of the old RTP question. Study material, none of the questions are there. So questions are not there. This is one question taken from one of the old RTP. Read the question, very good question. Read. Annual cash requirement, how much? 10 lakh. Types of marketable security company has. It has 5 types of marketable securities. One of the marketable security is 50,000 lot size. Ante each, whenever I sell, how much I have to sell in that? 50,000. Next lot size? 1 lakh. Next one 2 lakh. Next one 2 lakh 50. And next one is 5 lakh. Right side. Read the information. Cost of conversion per lot means a transaction cost. How much? 1,000. And next one. Interest is how much? To prepare a table, you are required to prepare a table indicating which lot size will have to be sold by the company. Next, required to calculate the economic lot size. Economic lot size means OTS. What is OTS? Optimum transaction size. First, I will ask you one question. Everyone, can you use your calculator in basic working and tell me OTS answer? Do the OTS answer, everyone. People in the Zoom live also, please answer what is the OTS answer for the given question. Let them also answer. Please send the PDF in the Telegram. I kept that 1 year back. Sir, 5% means how to take? 0.05. Low, have you done? Yes, see here. That's all. How much is answer? 2 lakh. Sir, this is the answer for question 2 or question 1? The question 1 when we did, yeah, this is answer for what? Question 2. First known question we have done. RTP question, not a tasked in exam. If tested in exam 5 marks, 2 marks they will give for this, 3 marks they will give the first bit. Okay, read the first bit, very important. Read. You are required to prepare what? Table indicating what? Which lot size will have to be sold by the company. I will ask a question, use this if any and answer. Okay, first tell me, what is the lot size? What is the lot size? What is my cash requirement? Ray, everyone be here, yeah? Why you are silent? How much is the cash requirement? What is the lot size in the first case? 50,000. I said use common sense, if any. 10 lakh divided by 50,000. And how many transactions I should do? 20 transactions I have to do. For 20 transactions, how much is the transaction cost per lot? Answer, sir. That means I need to spend how much amount in transaction conversion? That's what they are asking. See there. Lot size, if it is 50,000, you need to do how many conversions per annum? Answer, sir. How much? 20 conversion. What is the lot size? 50,000. What is the number of transactions? 20 transactions you have to do. Totally annually you need how much money? In one transaction you will make how much amount converted? To get 10 lakhs in a year, how many times you need to do this transaction? 20 times you have to do the transaction. Correct or not? Okay. Next, you will convert. One second. You will convert. You will convert what into what? Ayya, namaste. Cash into marketable securities, sir. First tell me, what is the lot size? 50,000. You are wasting your own time. Don't blame me. Tell me, what is the lot size? 50,000. Lot size of cash, huh? Lot size of cash, mental, lot size of cash will be there, huh? Lot size of what? Marketable security. I want how much per annum? 10 lakhs. 1 lot ki 50,000 you are selling means 10 lakhs ki how many lots of marketable securities you need to sell? 20. Each lot ki how much is the cost? 1,000. 20 lots ki? 20,000. Last but one column. Last but one column. How much? 20,000. That's how it got. Correct? Okay, done. Now tell me, how much is the cash I converted in one set? 50,000. One set, one transaction, how much cash I converted? 50,000. Average cash balance will be how much? 25,000 I will maintain. How much? 25,000. Loudly? 25,000. Sir, why sir? I should take 25, I will take 50. That kind of persons also will be there or not? I will tell you. See here. For one set, in one shot, how much money we will get? 50,000. Then why sir you are taking average cash balance 25,000, sir? Okay, question will arise or not? Same answer. ARR law I told you. Which ARR? ARR. What is ARR? AR Rahmana? What is ARR? Average rate of return or accounting rate of return. Do you remember ARR or not? Tell me. Monthly cash will be maintained by the company 50,000. How much? 50,000. Let us say 12 months. You take month or 12 months or something you take. Listening? Tell me now. 0 today. 1, 2, 3, 4, 5, 6. You take 50,000 rupees. I will use for 3 months, 15 days, 30 days, 45 days, 60 days, 75 days and 90 days. 3 months. I can use 50,000 for how many months? Example A. Okay? See there now. 0 date, my cash balance will be 50,000. Some days after it come to 40,000. After some days, 30. Why it is reducing? Why it is reducing? Company is using it. Now you tell me. By the end of 90 days, how much is my cash balance? 0. Beginning, what is my cash balance? 50,000. I have 50,000. I have 0. Na? Both I have. But 50,000 is correct or 0 is correct? Both are wrong. Because throughout 90 days, you don't have 50,000. Throughout 90 days, you don't even have 0. Average, what you have? That's how average cash balances will be taken always. Did you understand the point or not? Answer, sir. Yes, so, tell me now. Beyond this, I can't explain in these classes here. Please try to understand my problem also. You are listening like this for the first time. What is the lot size? What is the lot size? How much money I want per annum? How many transactions I should do? For that, how much is the transaction cost? Each transaction ki 1,000, 20 transactions ki 20,000. Now tell me, average how much cash? That means I converted what into what? I converted securities into cash. The moment you convert securities into cash, interest will stop coming. Means on the 25,000 you are losing what? Interest. That interest cost 12,250. Did you understand or not, everyone? So because of conversion, 1250 cost. For conversion, 20,000 cost. Total how much cost? 21,250. Next, tell me. I will ask you one question. Will you do? Do for 2 lakh rupee per transaction. Lot size is 2 lakh. Tell the total cost. Did you understand what is 2 lakh here? 2 lakh is what? Optimum transaction size 2 lakhs. Average will be 1 lakh. On that, how much loss of interest? 5,000. 5% coming to how much? 5,000. Along with that, 2 lakh if I convert, total 10 lakh require how many transactions? 5 transactions. So 5 into 1,000. How much? 5,000. 5,000 there, 5,000 here. Totally how much? The least cost. That's the optimum transaction size. Okay, na? Understood the point, everyone? If you calculate OTS, that 2 lakhs is exactly this one. Instead of searching like this, OTS directly gives you that result. Now did you understand? Oh, again started excitement, first time in life. So, that's the importance of this particular formula. Did you now understand or not? Now proof is given or not given? Given. So you can believe this formula. Doubt? You won't believe them? So therefore, point number 1, everyone understood the concept clearly or not? So tell me, what do you mean by optimum lot size? What nodding head? What do you mean by optimum lot size? It is a lot size in which interest cost and transaction cost will be minimum. Instead of randomly trial and error basis lo checking thousands of transactions, you can directly calculate OTS and tell the answer. Now understood the importance of OTS calculation? Next. What is the next concept we are going to see? Miller-Orr model. Okay. See here. First read the concept. Later we will see the diagram. Read the concept. A treasury manager should invest in marketable securities if he has surplus cash in hand. Already we have seen that or not? Yes. Continue. And should sell marketable securities if he has a shortfall in cash. So tell me. Excess cash? Buy. Shortage of cash? Sell. Next. Miller-Orr model helps the treasury manager to understand the timing of investment and sale and the quantum. Miller-Orr model helps the treasury manager to understand the timing of his investment, sale and the quantum. Means when to sell, when to buy. Not how much. How much already we calculated. How much? Perfect. Over. Answer over. How much? OTS. That calculated already. So doubt is not there. Doubt is on what now? When is the doubt? How we completed? When costing there is one chapter called as materials. Reorder level. A reorder level of cash we are going to see now. Are you understanding? Reorder level is not EOQ. Who said? Whatever comes, first we will throw the word EOQ. EOQ is not reorder level. EOQ is a level where is called as EOQ. What is EOQ? Is called as EOQ. So economic order quantity is different. Reorder level is a time at which order has to be given again. At that time, how much order I have to give? That is EOQ. Finally, what you did perfectly in all these classes, no? Yes, sir. Never you said no. Such a nice people you are. So always once completed, lastly. Yes, sir. In a rhythm. So, see there. So the point is, we have to now check at what time we need to reorder. Cash reorder will be there. Until you will buy cash and put it in a dustbin. Example, I told you materials reorder means you will use reorder directory. The time where marketable securities has to be bought or marketable security has to be sold. Fate. Read all the 3 points first. Miller-Orr model helps the treasury manager to understand the amount, understand the timing. When we reach how much amount of cash we need to sell marketable securities or buy marketable securities. Okay? Of his investment and sale and quantum. When cash balance touches upper boundary, UB means what? Upper boundary. Sir, cash balance reached upper boundary means cash balance is increasing or decreasing? Increasing. It is a time for investment. If the cash balance reaches the lower boundary, what do you mean by that? They have to sell and get the cash balance done again. Understood the point or not? Okay, read. Miller-Orr model helps the cash manager to understand the timing of his investment and sale and quantum. Next, when cash balance touches upper boundary, he should invest so much amount of cash in marketable securities that the balance falls to the RP. Balance falls to the rebound price or rebound level they call. We will see that there are different names for that. And when cash balance touches the LB, what is LB? Lower boundary, he should dispose of the securities. Again it reaches to the RP level. Understood everyone? For that, this is the formula. So somewhere you write the formula. At least you will remember if you write 2-3 times. Somewhere you write down. Okay? Rebound point, return point. RP represents a rebound point, return point. Anything you can call. See here once. Left side, what is there on y-axis? Left side, what is there on y-axis? Cash balance is there. X-axis? as the days are passing by, cash balances will increase and decrease. But when it reaches which boundary? Answer, yeah, upper boundary. What we have to do? Invest and bring it back again to the return point. If it goes down below a particular level, we have to sell and again bring it to the return point. So cash balance net of inflow and outflow. Oh, sorry. Write down. Upper boundary equal to lower boundary plus spread. Remember, I think this question will come in this attempt, not asked in the last 10 exams. In last 10 attempts, I didn't see a question on Miller-Orr, but it's there in the syllabus. Upper bound, lower boundary plus spread. Return point, lower boundary plus 1/3 of the spread. Logic is there. How many lines I draw there? 3 lines, means 1/3. Okay, 3 levels are there. 1/3. Upper boundary 1 level, lower boundary 1 level, middle is the 3rd level. So 1/3 is the middle one. Have you completed? Next. See here. So tell me, what is the formula for the upper boundary? Lower boundary plus spread. Next. Return point. Lower boundary plus 1/3 of the spread. Next one. Spread. This you have to remember, yeah. Okay. 3 is 1 point into cube root. Cube root means 3 lines are there, na? 3 situations. Cube root of 3/4 of transaction cost into CFE. What is CFE? Cash flow variance per day divided by interest per day. Okay, na? Just see the question. Telegram group already I kept the answer, so let's not write and waste your time. Exam la question comes na ditto question they will give in exam with change in numbers. Let's only do some calculations and stop. Minimum cash balance how much? Answer? CFE 62,50,000. Interest will be 0.025% per day. Sir, if they give you in exam 12% per annum, how to do? 12% per annum they give. How to do? 12 by 360. Right? 12 by 360. How much? 0.0333 came. That much you need to write here. Listening, directly don't take year. Year if you take, gone, answer, over. So always you should convert it into interest per day format. Okay. Transaction cost for each sale or buy, how much? 20. Optimal lower boundary, upper boundary and analyze. First tell me, what is the calculation of spread? 3 into cube root of 3/4 into transaction cost into 62,50,000 divided by 0.025. So all calculations I have done only. Just to see the answer. What is the answer? 21,646. What is the formula for the calculation of upper boundary? Lower boundary plus spread. What is the lower boundary given in the question? Minimum cash balance how much? 10,000 plus spread. Totally how much? 31,646. Calculation of return point. LB plus 1/3 of the spread. 17,215. This is the answer. Okay. So lower boundary is 10,000, return point is 17,215, upper boundary will be 31,646. I think I can make you understand the formula at least to some extent to do in the examinations. Now this is not the time to interpret the results. Understood What is the question we done now? Miller-Orr. Tell me what is Miller-Orr model says. No silence here. Answer. Timing amount. Timing. That means if it reaches 21,646 level, it is a spread level. If it reaches 31,646, that is a time when you have to start selling them. Okay, investing them. When the amount of cash comes to 17,215, it is a time to sell the marketable securities and get the money. Listening or not, everyone? This is the answer. Okay. With this, we completed an entire chapter called as a cash management as well. Okay, na? That's all. With this, cash management concept is also completed. Next one, there is another small area, 2 minutes area. What is the 2 minutes area called as a? Read here. What is it? Inventory or materials management. Okay. Only one question will be there in this. See here. Sir, EOQ concept everyone know na? Yes, materials like EOQ concept. Yes, root of what? Root of 2AO by C. Sir, names may be changing between person to person, but the concept cannot change. So see here. Economic order quantity. Please, let us do this and close. Inventory management also will be done. Please read. Let us understand EOQ concept by taking numerical illustration. Tell me, estimated annual raw material consumption, how much? Ordering cost per order? Order quantity or size? Holding cost per unit per annum? Sir, same cash budget type. What is optimum transaction size? Just now 15 minutes back we discussed. God's gift for you to forget. Root of 2CT by I. What is C? Like that here 1,20,000. Low. What is T? Like that here 100. Like that here 100. Ordering cost. Next. Divided by what? I. What is I? Interest. Here interest will not be there. That's why what will be there? Holding cost is per 1 unit they have given. Are you understanding? What is the next one? Transaction size. That means one time you will order how much? 10,000 units. So we are asked to calculate the EOQ. Okay. See here. That's all. Root of TCO by I. Sorry, in costing you might use AO or something. Notation say change. Concept is same. What is C? Annual consumption. What is ordering cost? O. What is I? Holding cost per unit per annum. Tell me. Root of 2 into 1,20,000 into 100 divided by 6. How many units? 2,000. What do you mean by this 2,000? Tell me. Explain what is 2,000. Explain what is 2,000, everyone. It is the ordering quantity at which ordering cost and holding cost will be maximum or minimum. That's the meaning. Everyone understood? That's all. We completed inventory management also. Inventory management, AFM never tested, but there in the syllabus I discussed one. If you open the study material on inventory management also, they will tell read costing chapter. I'm not joking, really it will tell that. But still why I am doing this is, if at all, those who are not writing costing by exemption, those who are writing only FM, those great persons in the class, for them costing is over exempted, but FM they have to write. For those people I am telling this. Okay? Tell me, what is the formula for EOQ? You open the notes, sir, I will tell. Tell. Root of 2CO by I. What is C? Annual consumption. I. Sorry. O. Ordering cost. Ordering cost per order. Next. I represents what? Per unit per annum. Understood the concept, everyone? Lot of theory I have written here for inventory management. EOQ, the formula, how the derivation came. What is the derivation of this concept? See. How this concept came as well. How this derivation came. Mm. SS Rajamouli mark. So, understood the concept? Doubt? Huh? On this doubt? Huh? Uh. Oh, you didn't remember the calculation? Yesterday I have done. First thing, when one second, at least let me explain. So, you will tell? Will you? Let me explain then. Listen. Ready to remember fifth root to third root? See here. Whenever a number is given with the cubed root, sixth root, eighth root, 25th root, whatever nonsense root they gave, there is only one model. Take calculator first. Square root. How many times? 15 times. Over. After that, minus 1 divided by desired root. That is 3 8 3, 5 8 5, 8 8 8, whatever number you want. Divided by that. Next, plus 1. After that, into is equal to, into is equal to, into is equal to, how many times? That's all answer. Come. Understood the point clearly? This is how we need to do. Everyone understood? Tell what I said. Square root for? Don't take, just press and leave. For how many times? Any number of times. How many times? Don't forget. Okay, na? Sorry, everyone. Inventory management concept only one area is there, that is EOQ. That also I covered. Everyone understood clearly? Yes, listen. Institute, hey, listen, yeah. AFM they did not tell that inventory management is not applicable for you. Inventory management chapter is applicable for you. They said in this only one concept is covered in FM. What is that one concept? EOQ. They said EOQ in FM. I will not give any notes here. Go and read costing, he is saying. He is not telling that it is not there in syllabus. If not there in syllabus, why it will be there in book? So first conclude, inventory management applicable for FM, not applicable. Concept explained or not explained? Not explained. Where they explain? Go there and read. They said I went there and I read this. This is the answer for this. Okay, na? Notes also shared in Telegram group. Full analysis along with the derivation of EOQ. Read there. Problem if it comes in exam, how to do? I shown you. Okay, na? That's it. With this, what we completed? With this, what we completed? That's all. Okay. So now we completed all those areas. Next. Please don't talk here 1 minute. We completed all these areas now. Next I will be going into the area called as a leverages. Okay. I remember data, sorry. Debtors. I will also make 2-3 videos on debtors management on YouTube. You see, lead and die also. Debtors. Same overaction you did for working capital also. Nothing is there, by the way. Same you will also make the chapter hero. Nothing will be there also in debtors management. At the end, the type of hysteria. When something is not done, first we will brand it as one of the most difficult area. So first listen. I will complete 15-20 minutes the concept of leverage. After that, I will take debtors management and I will explain 2 illustrations also on that. Any illustration you take on debtors management, it is same. Are you understanding or not? I will also make videos on debtors management. Go on seeing the debtors management. Every day before you sleep, first watch debtors management. See there. Okay. First one. Have everyone open the leverages? Okay. What is the next area? We are starting with the leverages. See here, there will be a 5 marks question from leverages in exam. 4 marks, 5 marks questions will come. Let us first understand what is most important in leverage. Leverages chapter, the most important one is understanding 6 formulae. This is not the time to learn about margin of safety and all other things. Directly I will go into the main concept of leverages chapter. So what is important for exam? Exam important is full marginal costing is important. You have done costing, marginal costing. Marginal costing you will have PV ratio, contribution sales. Also called as PV ratio is also called as a contribution sales ratio. PV ratio, break even point in rupees, break even point in volumes, means units. Okay. Next, margin of safety in rupees, margin of safety in units. These are all very, 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 very important for exam. Last but one attempt, leverages came for 10 marks in exam. At 10 marks question, half marginal costing formula are there. Okay. So leverages, don't underestimate them. Study material, very good questions are there. Do them. Illustrations plus practical problems and book end. Those also you should do in leverages chapter to get a good grip over the concepts. Shall we do? Yes, listen carefully. So, leverages. How many kinds of leverages are there totally? Please tell me. 3 types. 6 formulae are there. Okay. Sir, which formula we need to use in which situation? See the screen once. What is the formula for the operating leverage? Contribution by EBIT. Type 1 financial leverage? EBIT by EBT. EBT can also be written as what? EBIT minus interest. Next, combined leverage? Contribution by EBIT minus interest or EBT. This is a formula. So simply one thing you have to understand. Okay. One by one you tell me. Income statement like contribution will come first, EBIT will come first. EBIT will come first, EBT will come first. Answer? Contribution will come first, EBT will come first. Therefore, always in first type of formula, numerator is bigger than denominator. See there, no problem, I will wait. It takes time for you, kada? Lot of analysis. Which is bigger, which is smaller. Now that is the difficult task. Understood or not? Numerator is bigger or denominator bigger? In all cases. Numerator. Answer. Numerator. Therefore, answer can never be less than 1. Answer can never be less than 1. For example, contribution 1 rupee or 2 rupees. EBIT 1 rupee. How much is the answer? 2 times. That is all expressed in times. Expressed in means how many times is the contribution to the EBIT. EBIT 100, contribution 300 means your contribution is how many times covering the EBIT? 3 times it is covering the EBIT. Understood or not? Tell me, type 1 formula is expressed in percentage or ratio, that times are how many times is the answer. Okay. Next formula, type 2 formula you see now. Read. What is the type 2 formula? Percentage change in EBIT by percentage change in sales. Next one. Percentage change in EPS by percentage change in EBIT. Next. Percentage change in EPS by the percentage change in sales. First 2 if you understand, third one is easy. What is the idea of the second type of formula? It is used when there is a 2 years comparison. 2 years. Last year EBIT 10, this year EBIT 12. Change is how much? Percentage you should tell, because we are writing in percentage change in EBIT, not amount change in EBIT. 10 crore became 12 crore. Growth. Loudly. 20%. Sales. It went from, say example, 60 to 70. 60 to 70. 16 point? Now you tell me, how much is the growth in sales? 16.67. But how much is the growth in EBIT? Answer, sir. Now tell me. Tell the answer. Percentage change in EBIT by percentage change in sales. 20 divided by 16.67. Tell me. How much? 1.2. 1.25. Technically, do you know what is the meaning of that? 125%. How much percent? 125%. So the meaning is very clear. 125. Listen, yeah. Shall we? So anyway, did you understand the difference or not, everyone? Means there is a 125% growth in the next year. That's the meaning we are going to explain there. Simply type 1 formula is used when? Bad response. Type 1 formula will be used when? 1 year information is given. Which formula will be used? Type 1. 2 years information is given. Type 2 will be used. There we need to tell about the percentage of change. Okay, na? That's one reason. Second idea. How to understand the leverages of formula in a right way. Okay, see there. How to use a formula, understand the formula in a right way. Type 2 formula. Type 1 formula you understood already. Correct? Type 2 formula, let us see. Type 2 formula is all about influencers, influence on influenced. Sir, my mind don't catch normally. If you tell tongue twisters at the end of the classes, it will be very difficult, sir. What I said, repeat. Influencers. Instagram influencers. Influencer. Sir, I will only tell. Influencers. Influence on the influenced. Okay, na? I will ask a question, answer. EBIT changes because sales changes, sir. Sales changes because EBIT changes, sir. EBIT changes if sales changes, or sales changes because EBIT changes. Because of sales changes. Okay. Sir, here only one diagram is also there. Tell me. What is this? Don't tell L. I will really go out of the class now if you tell L. What is this? What is this? Graph. Boo. Lot of progress. You understood that it is not L. Tell me now. What is this? Graph. Zero na. Origin ray. So, what is X? What is Y? X axis, Y axis. Okay. Sir, whenever, sorry, okay, listen. Whenever I wanted to compare any two variables, I can put in the graph and I can tell. Correct or not? If it is like this, directly proportional or direct relation. If it is this way, inverse relation. Do you know how to understand? If this decreases, are you understanding? If this increases, this decreases. This is an inverse relation graph. It is a direct relation. One increase, another increase. One increase, another increase. X-axis increase, Y-axis also increase. Like this it will be. X-axis increase, Y-axis decrease. Then line will be like this. This is inverse relation between what and what? And Y-axis. What is this? Direct relation between X-axis and Y-axis. That's the meaning of the graph. Okay. Sir, I can put X-axis, Y-axis, any two variables. Correct or wrong? Yes, answer? Yes, wrong. Listen. Never you should use whatever you want on graph paper, Nanna. Bujkanna. Always influencer should come on X-axis. Influence. He is thinking, sir, why you are targeting on me? Is there any special reason? So, see there. X-axis should always contain Influencer. Y-axis will always contain influenced. Okay. Now you tell me. Sales influence EBIT. EBIT influence sales. Sales influence EBIT. So it should come on. EBIT should come on. So always see here. Okay. Like this it is. What this says is, this logic is, when you intervene like this, okay, when graph is intruded and twisted like this, technically what will happen is, x-axis lo whatever comes will become the denominator and the numerator will become the influenced. X-axis will be in denominator, y-axis will be in tell me now, what is this? What is this? What is this? Correct? Who changes whom? X changes y changes x. Sales changes EBIT, EBIT changes sales. Correct or not? So whose change leading to whose change? X change is leading to Y's change. That's why it's a dy by dx they call. Are you understanding the concept or not? X changes because of change in y. Y changes because change in x. Y changes because of change in x. That's why differentiate y with respect to the x. That's how the derivations came in the mathematical calculus. Okay. All this we have already done in the classes. The main thing is you forgot. For that I am not responsible. Okay. Whatever possible in regular classes I does by main effort possible without any compromise. So if you forget, that is not my mistake. So the point is, try to understand. Did you understand the meaning of the dy by dx or not? Why I explain this is, you should not forget in the examinations again. Now you tell me, I will give you two variables. You tell about the formula of the leverage. Okay na? EBIT and EPS. EBIT and EPS. Percentage change in. See how you answered now. I did a Koushik Mukhesh. So if you properly understand how the formula comes, no one need to teach you anything here. You can easily understand. That is common sense. A great rocket science is not involved. Who influences whom? If you understand easily, you can do that. Koushik Mukhesh is not required. Normal person also can do. So the point what I wanted to explain is, try to understand clearly who influences whom. We need to understand in the income statement. Listening? Sales EPS, tell me now. Don't see. Percentage change in. For the percentage change in. See there. What is the answer? Percentage change in EPS by percentage change in sale. Now I will ask you a question. Tell me all the three formula now. I will ask. Sir, formula understood, sir. But for what that formula I didn't know. Adi operating leverage or financial leverage, adille sir, mula ille. So then how to deal with those cases? When mula is missing, common sense has to start. Do you know what is common sense? Listen. Two elements la. Hey, listen here. Two variables in between operations are involved, or operating leverage. When financing is involved, financial leverage. I will explain how to understand. Percentage change in EBIT, percentage change in sales, if I say. Okay, now you will get doubt. This is anna leverage. How do you know? Because between sales and EBIT, financing is not coming. Sales and EBIT, financing is not coming. What is coming? Sales, variable cost, fixed cost, these will come. These are all which one? Operating. Now tell me, EBIT, EPS, interest, taxes, dividends, all these are coming. These are all related to what? Financing. Therefore, which leverage? That's all. Adhe chapter. So, therefore, the idea is very clear. Tell me, how many formula are there totally? 6. Tell the type 1 formula. Operating leverage. Tell the formula. Contribution by EBIT. Finance leverage. EBIT by EBT or EBIT minus interest. Combined I don't have, just replacement. Next, percentage change you tell. Percentage change in EBIT by percentage change in sales. Next. Percentage change in EBIT. Next. How questions will come also I will show you. See here. Before that, some extra formula you need to learn. I am telling you seriously, before you go to exam, do this document properly. And put all this formula in mind and then go to exam hall. Today FM exam is there. Afternoon you have to go. That day morning, do on all by that time. When you are going to examination hall, take a white paper, note slip. Don't write my name, suggested by R. Koushik Mukhesh, chartered accountant. No. I am not suggesting that. Take a white paper. Time 1.5 hour before your exam. And when you are leaving by 12:30, for example, 11:30 you do this work. What you have to do you know? Leverages chapter, extra formulas are there. That you need to mug up. Means literally keep in mind by that time. Do you know what are the extra formula? This extra formula. First one. What is the first one? PV ratio. What is the ratio? PV ratio. So you know what is the PV ratio? Yes, what is it? Contribution by sale. You can do it in two ways. Per unit you can do. Total also you can do. See the formula? CPU by SPU. What is CPU? By what? This will be said like this. See here. What is the sales? What is the sales? Sales. 60,000. Per unit? Per unit? 10. Variable cost per unit? Total? Contribution per unit? Total? Minus what cost? Fixed cost. Total profit 14,000. Like this they will give question in exam. You can see the textbook also. Practical problems, so many questions are there like this. Are you listening? Yes, they are asking all marginal costing questions in FM. So therefore don't neglect this. Very, very important. Leverages chapter, these formula questions are very important. What statement this is called as? What statement question this is called as? A income statement. First, PV ratio. Tell the formula. Contribution per unit divided by sales per unit. Or you can also tell as? Very good. Logic don't ask me now. I have given notes. Notes is also available in the Telegram channel. You can take there. Next. See there. Break-even point. Sir, break-even point can be calculated in two ways. Number one, amount. Number two, units. Logic I will tell you. Like in the previous one, you will not forget. See the screen. Please suspend all other nonsense and see the screen. Okay? See the screen once. My question is, how much is a contribution? Huh? How much is a fixed cost? 10,000. How much? 10,000. I will ask only one small question, answer. Per unit only you see. Forget about the overall. Sales per unit. Variable cost. Contribution. This 4 is what? Contribution per unit. Contribution per unit. How many units into 4 makes the 10,000? Ade break even answer. Are you understanding the? Oh, again started. Did you understand the meaning or not? And how many units into contribution makes the fixed cost? Is called as what? Variable cost. Is called as what? Break even point. So tell me, did you understand the formula now? Without formula also can we do or not? Yes. That's why see. Fixed cost, how much? 10,000. Divided by what? Contribution. That only gives you 2,500. Rather than remembering this nonsense, if you can remember that contribution 4, fixed cost 100. How many units of contribution makes the 10,000 to make break even? That's all. Are you understanding or not? Tell the formula. Fixed cost per unit divided by fixed cost per unit. Fixed cost divided by contribution per unit. What is it? Break even point. Very good. Next. Adi units are amount. Units are amount. Amount dead easy. Very easy than that. Value. Tell me. The 2500 into sales if you do, you will get the total value. Understanding? And even to get the value, first what we should calculate? Units you have to do. Or else, read. Divided by PV ratio. Fixed cost divided by PV ratio. How much is answer? 25,000. Everyone understood the concept clearly? Derivation to the formulas I have given. Not now. Read at home. Tell me, what are the three formulae for break even? Fixed cost divided by contribution per unit. That gives you break even in the. I want total. Break even units into sale price per unit will give you break even value. Next, or fixed cost divided by PV ratio also gives you what? Break even value. Next torture, margin of safety. If you understand all this formula, I promise you, any question given in the examination, you will get 8 marks. Provided you should know 6 formulae plus these all nonsense. If you have command over all these, leverages chapter is not at all a problem for you. Shall we see this? What is the formula? Concept? Margin of safety. Margin of safety. I will ask you one question. You tell me. Break even units ki what is the formula? Fixed cost divided by? Fixed cost divided by? Okay. Margin of safety means break even. Anything above break even. Anything above break even is called as what? Profit. That's why profit by cost contribution per unit. Are you understanding the point or not? That's why. What is the profit in the given case? In this case, what is the profit? 14,000. So 14,000 divided by 4 will be what? Or actual sales minus BEP sales. Actual sales minus BEP sales. No sir, I want in value. Actual sales value minus BEP sales value, or margin of safety units into sale price. Like BEP units into sale price type. Next one. There we are using contribution by, fixed cost by PV ratio. Here what you will use? Profit by PV ratio. I will give you exactly 2 minutes time. 6 plus 4 plus 5. All the formula you should tell, not just nodding the head. Later I will show you one exam question also. You will solve in the class. Later you practice on your own extra questions, whatever you want. If you don't know this formula, no doubt you will fail in doing that question in exam. Take my words properly, positively. I am not telling any negatively. If you don't know any of this formula, you are in a danger. Leverages chapter, that 6 marks or 5 marks gone. First, shall I ask you a question? Tell. Formula for financial leverage. 2 formulas you should tell. Type 1. EBIT by EBT over. The EBIT minus interest. What is the formula for operating leverage type 1? Operating leverage type 2. Percentage change in EBIT by financial leverage type 2. Percentage change in EPS by percentage change in formula for PV ratio. Tappu. Wrong. Contribution per unit by sales price per unit. That's the first formula. After that you can write directly as a contribution by sale. But actually you should always express in per unit terms only. CPU by SPU. Also can be written as contribution by sales. Understood? Tell the next concept. Break even. Tell me, break even units formula. Logic understood everyone? Tell me. Fixed cost divided by contribution per unit. You will get the answer in? I want value. Break even point units into sale price per unit. Okay na? Or fixed cost divided by PV ratio. This is the formula. Next one I want you to answer margin of safety. Tell the margin of safety formula. Same concept. Margin of safety means don't unnecessarily break your head. Simple concept. Total sale minus break even. Any sale happening beyond the break even point will become what? Margin of safety. Tell me, how many units is a break even in our example? I sold how many? 6,000. Anything over and above 2,500 will be the safety margin for you. So how much? 500. Or you can also write it as what? Instead of writing fixed cost by contribution per unit, you have to write the profit divided by contribution. So what is the profit? What is the profit? By what? 4. What is the 4? Contribution per unit. You will get the margin of safety in unit. That into sales units will give you, sale price will give you margin of safety as a volume. Fourth, last formula. How to margin of safety can be calculated? Fixed cost divided by a profit divided by a. Divided by what? Will give you what? Margin of safety in units or margin of safety in value? Now will you do the problems or not? I will randomly give you one small formula. I'm very sorry. Another formula is also there. Operating leverage can also be written like this. Which one? Operating leverage can also be written like this. Read. What is the formula for operating leverage? 1 by margin of safety. Sir, formula, derivation, logic, everything I said. But time is not there for me to explain all those now. Just a mug up and remember. Tell me. Operating leverage, sometimes margin of safety will be given and they will ask you to calculate operating leverage. How to do? 1 by margin of safety equal to what? Operating leverage. Again, one more time tell me. Operating leverage equal to? 1 by? Okay. Income statement you tell me. Sales, variable cost, contribution, fixed cost, profit. Correct? Profit can be calculated this way. See here. Profit can be calculated this way. Tell me, what is the way number 1? Sales minus cost. Way number 2. Contribution minus fixed. I think you know na, all these ways. Number 3. Margin of safety units into contribution per unit. We already know this formula. Next one. Margin of safety into PV ratio. All of these will give you one common answer. What is that common answer? Mug up this 4 formula also. Any formula they can ask in examination. There are around 15 formula are there in this chapter. If you have command over all 15, no question can corner you in exam. 5 out of 5 you will get in the leverages. Problem will come if you forget any of this. Shall we go into the last one? Tell me, what is operating leverage alternative formula? 1 by the margin of safety. Now if I show you 2 questions from the study material, will be able to solve? You should, you must open your notes. Don't open the study material. See, like this they will give. If you don't believe me, see there. From the following information, prepare the income statement. Margin of safety, interest to profit volume ratio, financial leverage, tax rate. Start. What they are asking you to prepare? In which statement? Sir, I randomly opened. The moment I opened, whatever we done is coming. Like this only questions will come. Will you prepare the income statement or not? Start. Exactly time given is 3 minutes for A, 3 minutes for B. Because that's a 6 marks question given in exam. Start doing it. Whenever they ask you to prepare income statement, always have a habit of first preparing the pro forma of income statement. Then you can fill the numbers whenever answer comes. Have you calculated? Or else I will first write down the income statement. You just tell me the answers A and B. What is the sales of A? How many of you got that 80,000 answer? Reminding what you are doing? You can fill all these numbers or not? Sir, first tell me, whenever the question is given, have a habit of first preparing the income statement and fill the info that is available. Then you will have a clarity on what you are doing. What is given? Interest. How much? 3,000 and 2,000. Okay. Financial leverage is given here. What is the formula for financial leverage? EBIT divided by EBIT minus interest equal to how much? 4. EBIT we don't know. Divided by EBIT minus 3,000 equal to 4. EBIT equal to 4 EBIT minus 12,000. 3 EBIT equal to 12,000. EBIT equal to 4,000. Okay. So now tell me, listen first. So obviously, how much will be this amount? 1,000. And how much will be the tax rate? 450. How much will be the answer? 550. Half the answer completed in 1 minute. That I know, sir. I am telling you, it takes half minute time to answer. Since 4 minutes you are doing that. Sorry, one thing I wanted. Sir, you don't have practice properly. You will practice from today. You will do that. But understood with the formulas what we can do in this chapter. This chapter requires only one thing. What is it? Formula. All the 10-15 formula, whatever you see now, if you apply them properly, you can do the answer properly like this. Sorry, one question we will all do together. Tell me, margin of safety can be written as what? One by operating leverage. He has given operating leverage. Answer. I will ask you one question. Tell me, when he don't give an operating leverage, 1 minute here, listen. Forget about this formula. From profit and other formulas, you tell me margin of safety. In what ways we can calculate? Just now we have done profit divided by PV ratio. PV ratio given or not given? Profit you got or not? Got. Profit means what? EBIT. So 4,000 divided by 25%. How much? 16,000 is the total sale, margin of safety sale. What do you mean by margin of safety sale? Actual sale minus break even sale equal to margin of safety sale. Correct? First point, how many of you have calculated EBIT 4,000, interest 3,000, EBT 1,000, tax 450, EAT 550. Up to there, how many of you calculated? Very good. Up to here, everyone understood? Margin of safety ki multiple formulas are there. Correct or not? Those formulas we have to use only one of the formula. First we have to calculate how much is the margin of safety. So tell me, in the first company, what is the margin of safety? 16,000. Have you got this answer or not, everyone? Answer, sir? Yes, sir. Tell me now. Margin of safety 16,000 means how to calculate the total sale? How to calculate the total sale? 16,000 by? What is 0.2? So margin of safety will be 0.2. So total we have to calculate the sale. Okay. Let's not waste our time. I will show you the answer. Just to see this, make your workings at home. Just I wanted to show you how to do this. Okay. First one. See the point? First company A, we calculated EBIT 4,000. Had we got the answer or not? Very good. Next, operating leverage equal to 1 by margin of safety. Okay, so 1 by 0.2, that will give you how much? 5. So contribution 20,000. Have you got the contribution 20,000 answer or not? Sales should be how much? 80,000. Everyone got this answer clearly? This income statement, everyone got the answer or not? So the only thing you require for this chapter is having the knowledge of all the formula that are applicable in this chapter. If you know the formula, you will do the answer. If you don't know the formula, you can't do the answer. As simple as that. But for my sake of understanding whether you have got the point or not, I will ask another question to do. This is easy question only. I will give you one question to solve. Try it. Do practical question 1. From the following information extracted from the books of accounts of IMAX Limited, calculate the percentage change in EPS if sales increase by 10% and fixed operating cost is 1,57,500. First I will ask you one question. He is asking percentage change in what? For a change in what? Percentage change in EPS by percentage change in sales is which leverage? Operating leverage, financial leverage, combined leverage? From that he asked this question first. That observation at least you understood or not? Try this question. Last question for you. Remaining you try at home. You just practice using the formula. Let me see. Have you at least tried for the answer? First one, tell me, percentage change in what he is asking you? For how much change in the sales? Tell me, can we calculate the, one second, listen. Can we calculate the operating leverage and financial leverage for this? Operating leverage, can we calculate for this? How to calculate operating leverage? Percentage change in EBIT or EBIT by contribution? Contribution by EBIT, can we calculate or not? Tell me, how much is the sales? Given or not given? And not required also. Variable cost given or not given? Because it is not required. Okay na? So tell me, how much is the fixed cost? 57,500. What is the EBIT? 31,50,000. Okay. Now tell me. Fixed cost is 157,500. EBIT is 31,50,000. Means can we calculate the missing figure as a contribution or not? Yes, tell the contribution. 37,000. 7,000? What is this? We have contribution, we have EBIT. Can we calculate the operating leverage or not? Yes, tell me, what is the OL? 1.05. I told you, always leverages in the first way will be more than 1. I told you or not? Yes, unless question they give something nonsense, always it is assumed as more than 1. 1 point over. Next one. What leverage we have to calculate? Financial leverage. Because operating leverage into financial leverage will be the combined leverage. Tell me. Financial leverage formula. EBIT by EBT. EBT given or not given? EBIT given or not given? Tell me. 31,50,000 divided by 14 lakh. 2.25. Okay. Sir, we have operating leverage, we have financial leverage. Can we calculate the combined leverage? Yes, tell me, 1.05 into 2.25. 2.3625. 3.26, Now you answer me. Operating leverage is there. Next one. Financial leverage is there. What also is there? Combined leverage. Tell me. Sales increase by 10% means we will increase EPS by 10%. 10% into 2.365. Just now we discussed, sir. How can you forget? What is the change in sales? For the change in sales by 1%. For the change in sales by 1%. EPS changes by how much percent? 2.3625%. But sales change by 1% at 10%. Therefore, EPS should change by 10 into 2.365%. How much it is? 23.65. How many of you got the answer? 23.65. Everyone? 23.65. Okay. 625 or 65. See the answer. How much is answer, sir? 23.625%. Okay, sir, first point, everyone tell me, randomly we have picked up 2 questions and we tried to solve. Even though if you could not solve, no problem. Peace of mind, sit at home and start doing the problems. Definitely all the questions you will get the answers for this chapter. The only thing required is formula. You should have basic conceptual clarity of the chapter. If you have the formula control properly, no problem in exam can control you on the leverages chapter. A very easy chapter, 5 to 6 marks will definitely come. Okay, na? Last and final touch, I will just discuss about the idea behind the debtors. Debtors management, I will come also for the YouTube live for solving the practical book bag problems. Since time is not enough here, so I will do one YouTube live also. Maximum in 1.5 day I will do. Because after that I'm starting with the CA final AFM revision will be there. Morning 6 to night 9. So CA final AFM will start. So at that time it's not possible. In the next coming days only, we will make the live on which one? Debtors management. Okay, I will first tell you the logic of the debtors management. Okay, problems etc, extra problems if you want we will solve there. Okay, one problem I will show you how to do. All the questions will be in the same format. Before that, see this. I think debtors management document is there in the Telegram channel, right? Cash management not there. It should be there. Sir, okay, I will nothing, no problem for me. I will upload now. Okay, check there. So see there. What is the next one? Debtors management. See here. Sir, leave it. Listen first. Debtors are always represented as credit seller, cash seller. Answer? Listen. Why company has to allow the debtors is a question. So debtors is a advantage to the company and disadvantage to the company. It is a disadvantage to the company in various ways. But they maintain them for one biggest advantage which will compensate all the disadvantages. Number 1. The biggest disadvantage of debtors, blockage of lot of cash. Because Just now in the working capital estimates chapter we saw, whenever I say debtors, lot of money is involved in the form of raw material, work in progress, finished goods. Debtors say we are calculating. Nah. After that, no. Sales and administration, okay, office expenses, profit, so many things are blocked in the form of what? Debtors. Debtors is a cost, means it's the biggest cost to the company because they come at the last stage of production process after putting all the costs including profit. Who? Debtors. So by the time we create debtors, we incur cost almost, everything is already incurred. Everything has already been incurred, including profit is also added to that. My MRP I sold, but I am not getting money, means in that MRP what is also there? Answer? Along with profit, my GST, my taxes, duties, whatever I paid, everything is blocked in the form of. That's the biggest disadvantage of having a credit sale and creation of the debtors in a company. That's the first one. Second one, whenever debtors are there, there is a lot of bad debts that will be involved. What will be involved? Bad debts. You know what is a bad debt? We will generate the credit sale. I'll credit sale loss for me. In that loss, some persons will run away. It is a much more damage to the company. We call them as what cost? Bad debts cost. Number 3, whenever debtors are created, a particular time limit we will keep. 30 days. After 30 days, blood pressure will automatically go up. Why? Debtor is not paying. Or you understand the point or not? Your follow-up will start. Your credit card bill has been due beyond 48 days. Please pay to avoid penalty. We will try that for 4 days, 5 days, 1 week. He will not pay. After that, batch will be going there. Are you understanding the point or not? Collection cost we call. What cost? Collection cost. Team of people will be there. Bouncers style. These people has to be appointed. Those people will go recollect money. Lot of nonsense is involved. This is all the cost involved in the collection of the debtors. So debtors, there are 3 biggest costs. Number 1, bad debts. Number 2, collection. Number 3, opportunity cost. What is opportunity cost? Interest loss. What is opportunity cost? 3 I have written here. What are the 3 costs of the debtors? Bad debts, collection cost, interest loss. Also called as what cost? But why company has to do these many things? Why we need to do for some other person? Only for one reason. That's all. Shall I tell you one research? Latest, under 2024, January, February time they released. Apple, Amazon and other online platforms, they have done one research in India. Do you know what is the result? It said that 82%, how much percent? Not 1, 10, 15, 20. 82% of the Apple gadgets in India are bought on EMI. Did you get my point or not? How much percent? 82%. Sir, how many of you have the Apple gadgets with your phone or something? Something. How many of you bought from EMI? And you means not you, your parents or something. Their credit card is also EMI, muttal. For you gift, So, credit card is also what? You are only telling credit card and you are not raising the hand. Sorry, credit card or something. So, the point is, gifting all this we can't do anything. But in all other remaining cases, 82% of the Apple gadgets are bought on EMI. EMI means a credit or something, some pay later concept, something they did. So, what is the point here? 100 sales are happening means 82 sales are happening on credit. 82 sales are happening on? Sir, Big Billion sale, Freedom sale, or Great Indian Festival. In that people are buying on credit cards, correct? Credit cards mean they will pay today and pay later. Pay later they will break that into EMI. Means If at all EMI is not there, if at all credit cards are not there, their sale will come to 10% to 5%. అంటే యాపిల్స్ 100% సేల్ విల్ సడన్లీ ఫాల్ టు 18% if you stop giving credit or EMI on Apple sales. Where is 100? Where is 18? That marginal 82% extra sale is happening because of what? That's why people go for that benefit. That benefit will always make them and lure them to go for these three costs. Okay, no problem. I will bear the bad debts, I will bear the collection, I will bear the interest loss, provided if you can give this. And they are successful also in doing that. The moment credit cards are allowed, the moment Amazon Pay Later, the moment EMIs are allowed, Bajaj Finance Server, like so many people are coming now. Because of that, people are ready to buy costly and expensive once upon a time, which became essentials today. Are you understanding or not? This all happens because of credit. So, credit sale is important for organization or not important? Very, 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 very important credit sale. Without credit sale, you can't do anything. Today's business is running only on credit sale. Do first, later you pay. Are you understanding the point or not? Adi sir, that's the point. Next, there is one formula. What is the formula? Please see there. Debtors equal to credit sales by debtors collection period divided by 360. Please read. Sir, what is the difference between debtors and credit sale? Both are same or not? The debtor is on balance sheet. Credit sale happen every day. How confidently you give wrong answers. Credit sale debtors same. Do you know what is a debtor? Debtor is a person who is there in the balance sheet. As on the balance sheet preparation date, from whom we should receive is called as a debtor. All credit sales will not be debtor. In that credit sale, so many will be recovered within the year. From whom we didn't still recover are called as what? First answer. Day end you are not giving right answer by chance. Credit sales debtors same or different? Answer. Tell me. First one. Debtors are created out of credit sale. That's the correct answer. Credit sale is not debtor. Credit sale is not? Debtors are created out of the credit sale. Who becomes payable at the end of balance sheet date? Listening or not everyone? Those are called as debtor. Okay. Sir, I will sell one day, not 2 days, not throughout the year. Everyone? So tell me, what is the throughout the year sale? See here, what is the throughout the year sale? 60,000. Debtors collection period? Do you know what is 3 days debtors collection period? Today if I sell 1, 2, third day I will get the money again. Second day I sold. 3, 4, 5 I will get. Listening, at any point of time, how much amount is blocked in the form of debtors? 3,000. Means at the end of the 31st March, in the balance sheet, out of this 3,60,000, how much will be in the form of debtors? 3,000. This is the blocked cash. Listening or not everyone in the class? On this we will lose our interest. Okay? In other words, read. In other words, always a 3 days sale is with the customers throughout the year. Day 1 I sold. When I will receive? Day 4. Day 1 I sold. 1, 2, 3. Third end I will receive. And how many days my money is blocked with customer? Okay. I receive in third day. Second day I sold. What will happen? 2, 3, fourth day I will get. Again how many days? 3. Like that if you see, on an average, my money is blocked in the hands of debtors for a period of 3 days. And every 3 days I am getting money. On the balance sheet date, how much money will be blocked always in the form of debtor? 3,000. On that 3,000 we will have interest loss, all these things. Listening? Yes, sir. What is the total sale? How much is the debtors in that? 3,000. Answer. 3,000. Why it is so less? My collection period is very less. Yes, simply to tell, I am giving only credit period of how many days, sir? Sir, I will ask you. 30 days you do the answer. That's all. How much? Now tell me. When I give more credit period, more amount is blocked. 60 days. 90 days. Like that it go on increasing. My debtor balances, my blocked amount will increase as you increase the credit period. What is the optimum credit period is what we are going to see in this chapter. Are you understanding the point or not? What we are going to do? Everyone in the class understood the logic clearly? Yes, sir. See here. Read. Receivables manager has to make following decisions. First one, how much credit period to give. Next, credit appraisal. Next one, discount policy. Next one, collection policy. On these 4A, questions will be tested in exam. Questions are there on credit period. Questions are there on credit appraisal. Questions are there on discount policy. Questions are there on collection policy. These are the 4 kinds of questions that will be tested in examination from this particular area. Okay, na? On this only I will make the video very clearly such that it explain you the idea behind all these points very clearly in detail. Am I clear? So just I told you the idea behind this particular chapter. More amount of problems. There are around 9 problems I have given on this. How many? 9. Properly if we can do all the 9 problems, there can be no question that can be newly coming in the examination to target us. Okay. So with this I will just give a full stop to this. Debtors management alone. Anyway, so many people are also asking who joined this session, not joined. Debtors management, at least if not all the 9 problems, at least in that I will solve majority 5 problems I will put. Listening or not? 5 problems I will do and I will put it on the YouTube. 1 hour, 15 minutes, like it will be completed. Solving a problem I will put there. Just in 1.5 day or 2 days I will put that answer, particular video. Listen to that. If possible, I am not making promise of this. If possible, I will make 1 hour theory. Debtors 100% I will do. Theory, if possible, I will do. Or else, theory, one document I kept in the Telegram group. 4 pages or 5 pages of theory will be there. Just you read that before you go for the exam. Are you listening to me? Yes, okay, na? First, before we close the session, I just wanted to tell you how about the preparation. What are all the chapters we need to take care. And first we need to start with which chapter, close with which chapter is a point. Okay, note down. Sequence of your study. From today, after the class, I mean, if you are attending for the law, evening onwards. Every day what you have to do, daily 1 chapter should complete. Big chapter na 2 days, small chapter na 1 day. I will tell you the time also. How much time you can spend maximum. Okay. FM strategy for preparation. First, start with the first chapter. You should start with which one? Dividends. Time you should allocate for this is 4 hours. What you have to do? Study material illustrations, study material book back problems, whatever available RTPs and MTPs. Inga classes listening, all these things don't keep. Over. Today no classes listening. Over. If you listen, iga harikade. Are you understanding or not? You got no time. Start your preparation. Irrespective of any subject. Time is over. Gone. So you have to start your preparation upfront. See there. What is the first one? How many hours? 4 hours. Okay. Number 2. Leverages. 4 hours. Book back problems main. 11 questions are there. How many questions? 11 questions are there. 11 questions pakka you have to do. From that 1 question will come in exam also. Number 3. Working capital estimates. First chapter we saw na working capital estimates. That one. 3 hours. Time limit 1 hour, 1.5 hour extra also no problem. Don't be very strict on timing. Be strict on completion. Bah. Our interpretation 4 hours over. Close the book. So Don't be very specific on timing. Let it take extra 1 hour. Extra 1 hour if you spend, you will be very happy. At least you are solving. 4 hours became 6 hours. Yeah, what will happen in your life? Nothing will happen. You will pass. Okay? And again 4 hours completed. He said 4 hours for dividends. 6 problems, 2 only done in 4 hours. Remaining, let's close. Open the GoTo trailer. Don't do. Are you understanding or not? So, dividends, leverages, working capital estimates. Okay? Working capital management illa. Working capital estimates. First chapter. After that, capital budgeting 1 plus capital budgeting 1. What is capital budgeting 1? One session of capital budgeting you put. Okay? Because capital budgeting don't do in one single day. You will get mental. Don't do in one single day. Book back problems will be there. Those. Sir, anyway, illustrations we have done in the class or not. Again, don't do them and waste your time. Already we have done. Capital budgeting when I say what we have to do. Book back problems, other extra RTP, MTP questions. No concept, no classes, nothing. Don't listen even to my videos. Start doing the problems. Notes is there in the Telegram group. If you have doubt, see the notes, start. If you put time on listening revision classes, gone. Only debtors management, 1 hour you spend on that, that's all. Listening, at night time when you are about to sleep, see the video. Once you visit to that, understand the debtors management, sleep, at least morning you can do the problems. Don't waste even a single minute time. Clear? If you wanted to pass. Subject to their condition. Everyone want to pass or not, that's why you are sitting from morning till evening. I know, or else you will not sit. So, capital budgeting. Along with that, do the chapter. Which one? Capital structure. In this also, slot 1 you keep. Book back problems. 4 hours. 2 hours for capital budgeting, 2 hours for capital structure. Again, capital budgeting 2, capital structure 2. Again, book back problems, again another 4 hours. Next, capital budgeting third slot also you keep. Book back problems plus cost of capital. Plus cost of capital. Book back problems. Put a 4 hour session also for this. Cost of capital, don't do all. Whatever you feel very big and important, do those and leave. Listening. 7 illustrations are there in cost of capital. How many? 7 illustrations. I will tell the problem numbers also which we need to do. 3 to 7 you do. Practical. Practical. Book back problems. Which chapter? Cost of capital. I know those problems also. 3 to 7 are important. 1 to are bacha questions here. Don't waste your time. 3 to 7 important. 3 to 7 you should take not more than 1.5 hours. Remaining again 2.5 hours spent on capital budgeting. Capital budgeting, how many days we are giving? 3 days. Sorry. Capital budgeting 3. Next. Cash management, inventory management. 1 hour. Cash management, inventory management. 1 hour. Next. Is there any chapter which was left out? Ratios. Ratios, 8 hours you have to spend. Which 8 hours is your choice after completion of all this? Daily you will do 2 hours. One day you will sit from morning till evening and you will complete. That is your wish entirely. Okay na? Ratios mandatorily you do because one question will come from ratios. Ratios chapter already there in the YouTube. I am not recommending even to listen. But I can recommend only one. Telegram group already document was kept. All the formulas are kept in one sheet. Are you listening? There you see that, do the problems and complete it. Sir, ratios chapter is nothing but application of all the formula. Nothing great, nothing new. Just you need to apply your mind and you should do. Ratios, put 8 hours and do. Okay? Last one. Debtors management. Debtors management. 4 hours you need to spend. 1 hour video you listen, 1.5 hour, do the problems after that. So count all the total hours. 30? 6 or? Sorry, let us take, if not 36, how many hours totally? From today, how many hours you need to spend on FM? Minimum 40 hours you have to allocate here for FM. Okay? Again, I will make this also as a video for you to understand, but still, just to remember, how many hours you have to complete? 40 hours you have to complete. Okay? But don't sit for 10 hours in a day for 4 days and do. You will only forget, that's the problem. Okay? So, systematically and consistently if you do, you will remember for a long period. So, this is a time that will be allocated for each and every respective chapter, starting from the dividends, ending with the debtors management. If you do this properly, damn sure you will be getting more than 45 marks in examination. All the questions you will be able to solve and answer. Okay? First one, listen carefully. Book back problems don't leave at any cost. Do you understand or not? Practical illustrations and book back. Simply to tell, my intention is very simple. Study material don't leave at any cost. Am I clear? Study material should be your main source of preparation. If you prepare from study material properly, all the questions, definitely you will get more than 40 in the examination out of 50. Clear everyone? So, this is how you need to prepare. Hopefully, I think that the revision classes are useful for all of you. Yes, so, I put my whole soul and heart in making the chapters, all the chapters to be covered in the class such that you will be feeling comfortable while your preparation time. Hopefully, the revision sessions that we conducted are useful for you, right? So, thank you very much. Those from the Google Drive, or sorry, from the Zoom live, hopefully this is useful for you. So, thank you very much all of you. Prepare well for the examinations. All the very best. Prepare well for the exam. Be serious. Okay. Don't leave any chapter. There are 7 chapters, practical chapters, all the 7 chapters, please do. Don't leave any chapter. We don't know what will come in examination. Even I don't know, you don't know. Okay, do all the chapters without fail. Properly you do. Listening everyone? And again I am telling, don't waste your time. From today onwards, what is the date today? 18. Exams on? Exams on? 12. You don't know exam date? September 12th. So technically 18 means 13 plus 12. You are having almost around 22 days you are having a net. So even if 1 or 2 days, if it gone technically, you are having how many days? 20 days. 20 into 10 hours if you spend every day. Don't laugh. 20 into 10 hours if you spend 200 hours. In the 200 hours, how much FM will be taking? 40 hours. That means all other subjects will have 160. If you are writing only one of the group, fantastic. You are having ample of time to do the FM. Okay, if you are writing both the, how many are going for the both the groups? 2 groups. Only for group 2? Only for group 2 means prepare. 1 second. Okay, you can. Only for group 2 if you are preparing, well and good, prepare for FM. That does not mean that you can waste your time. The point is you can do FM for more number of times. Those who are attempting for both the groups, don't put more than 40 hours for this subject. Clear? Plan accordingly, because there are 6 subjects for you. One subject, that too for the 50 marks, you need to spend only 40 hours time. But if you 40 hours, if you plan properly and prepare, you will definitely pass an exam, not a problem. Clear? So thank you very much. All the very best. Prepare well for the exams. Thank you. Bye. So law class will start at 2:30. Law class starts at 2:30.